So you are struggling with mapping out those charts with a market structure, then this video is for you. It's going to help you to read the market better. It's going to help you to find those trades better as well. So we're on the Euro CAD on a weekly time frame. We'll go through the weekly time frame and we'll drop down to daily as well. So the first thing you need to understand is that we have different types of structure in the market. We have the swing structure, which is the major swings, and we have internal structure within those swings. So we have trends forming within swings. So what do I mean? Okay, so we have here a bigger picture. We can see the market creating this push up. Okay, here it's broke this structure high. You can see on the way up, we have all this movement on the way up. So what we call this is internal structure, where we can see the market continue to break higher with a bullish trend within this one swing. Then we have the market pulling back and we break higher. Now what I want to show you is the importance of understanding the swing of the market. Swing structure is always going to take control even of the internal structure, but the internal structure will show you the reversal point, and it's going to show you the continuation in the trend as well. So from this point here, the market does pull back to this higher low. We expect it to take this high. Now it fails. Okay, we only wick above that high. We don't close it. So from this point, we have this internal structure, but that's all just noise. Unless we have a break above this high or break below this low here, we don't continue bullish or bearish. Eventually, we can see we have the break to downside. So let me just show you that once again. Okay, we have this low, higher low, we break structure here to the upside. We have a higher low, and we just have what we call a sweep of the highs. This very often can indicate a potential reversal. Now, it's not a valid reversal until we see an internal structure reversal. Now, I'll perhaps go into more detail on internal structure on another video, because this is really to help you to understand mapping your charts. So now at this point, would you say we're in a bullish market still, or are we in a bearish market? Drop a comment below and let me know what you believe the market conditions are right now. Are we bullish or are we bearish? So looking at the swing structure, we've broken through this structure low and we put in this low. The market now has made a pullback. So this drop down, this pullback here is within the trading range, okay, of what? Of this push up. Let me just remove all that and I'll show you what I mean. So from this push here to the upside that took this high, okay, was a previous trading range. The market has then eventually broken out of that range, and we're now within this swing here to the upside. And you can mark this whole area out, because the point is we're really looking for the market now to break structure to the downside. We've broken structure, okay, here to downside. We've broken structure here to downside, and we go closer in, we'll mark a level off. Let me just mark a single low here. Look to the left. Have we broken out? We've just made that single close. Now we did wick here quite a bit, so it's not a great close of structure there. But of this move up, okay, we definitely did break structure. So that's how you can see the structure, okay, on the chart. And we're looking at those breakouts. So now if you want to look at the area here, let me just show you. This is the last move down in the market, and that's a pullback. So we broke this internal structure, broke this low as well, and just about took this low. So this is now a single pullback. So we can now look at this as a single pullback in the market. Understand we broke to downside, so we kind of have a bearish bias. We mark it out. Okay, we've come above our 50% area. Perfect. So we're in a zone to look for a sell. How do we look for that sell? Okay, we're looking for the internal structure, which I'll quickly just go through here. We can see the market is dropping down here, and eventually we break out, pull back, continue down. Now this move down, which breaks this structure, is going to leave us an area of supply. So this is an area of supply, and I'm just remove that internal area again. So that's our highest point. Okay, so we can see the market comes back in. We actually fill this area of supply to the pip, very, very close to taking that high. And this is still our swing structure here. Then what we have to look for is that internal structure. Now we've either got this as a move and we drop out, okay, or you could even look at it as one push up if you wish, and the market's failed to take out this low and we're still within that trading range. And let me just show you, take this off again. So the trading range you're looking for, okay, is basically this move here. So what do you see at the moment? Take a hard look at this chart. We're seeing this move up. Market's come back down. The market's gone back up. It's a ranging market. So right here at the moment, the market is in a sideways range. What happens normally within a sideways range? We can see a reversal. So to see a reversal here, the true reversal we want to see is if we was looking at this, that's our drop down, okay, in the market, that's our push out, pull back, push up. We need to see a break of this low, okay? So we failed, we only wicked through that low. We haven't broken that high either here. So we need to see the market either from this here break out to the upside. What that's going to create is a pullback here, continuation. And then we can start looking at new areas of demand and you continue to look to buy that market. You have to remember as well the major swing, okay, which is this swing here. We're looking for the market to be bearish. Now we did create this break of internal structure here, which does leave another area of supply that you can draw here. Now we had an entry off that supply and you expected to target this low, and that happened. That would have been a trade, okay? Understanding that the market at this point, my pen, okay, we broke that structure there to downside, pull back to the area of supply, there's an entry, and that's your target. Now, on a lower time frame entry here, this is where you can really rack up those risk to rewards. Take that off. So now let's think about where we are at the minute. We're inside this range. Let's now go down to daily. On a daily time frame, we know we're looking bearish. Let's look at this swing structure quickly on this daily. So we're looking at swing structure. So the market drops down, okay, pulls back, drops lower. We take out that high just there, pulls back. Okay, this is probably one big move up. Okay, and there's another move here. That's my swing structure. Don't, when you're doing your swings, you mark them out. Don't sit there and stare at the charts for too long because it's going to make you think there's a move somewhere where it isn't. So here, what can we see? So on a daily, we do have a conflicting signal. We broke structure here to the upside. So down here is where we have our new area of potential demand. And we could see the market pull back in, continue back higher. Now that is a possibility, okay? We go with what we're seeing on those time frames. Now we've already seen that break potentially higher on the weekly as well. Now it's down here. Look, we're looking for that sell. And we can see the same thing here on a daily. Using the daily swing structure, okay, we broke out. Okay, what do we have here? Okay, so we have this is our last buy to sell move. Price comes into the area of supply. And this is your target. Okay, so down here you can look for a lower time frame entry, or you can also go down and you can look for that structure break. Okay, now same thing. We can see here there's a structure break here to downside. That then leaves me this area of supply. And let's mark it across. And there's your entry. Okay, and this is where potentially you would use the use of mapping your charts to enter the trade right here. Your stop's going to be above that high of the zone, and you're going to target to take out that low. And that's exactly how you just look at using the structure. Okay, using this mapping system, mapping out your charts. Yeah, I know many people could be watching this video, could be saying, oh, this is in hindsight, this is in hindsight. You cannot learn unless somebody shows you what you need to be doing. Okay, so this is mapping the charts. Yeah, we can go back and we can do this and map it out. So let's just remove everything quickly. Okay, and let's just go back and we'll do a replay. So go back somewhere, let's grab a replay mode, let's just mark it out anywhere. Okay, so I'll show you how you do this. So we'll go to here, we'll look for the swing structure. So a swing structure, okay, we had a last push down, we broke out, pulled back, pushed up, and then we broke straight back out. So we have a bearish bias. So the market comes back up, we sweep the high. Okay, so right now we're inside that trading range. So we just remove that. So we have the market stuck within this trading range. So what do you do? Okay, for me, I wait for that range to be broken. Let's just play it forward. Let me just up the speed. Let's go with 10. So we wait for this range to be broken. So there we have it. The range has been broken to the downside. So now we can continue on with what we're seeing. We expected it to break because we swept this high, like okay, what we've seen on that weekly time frame. Now we've broken straight out. So now in a swing structure, I have a bearish bias. Now if we go in closer and we look at the internal structure, what do we see? So our internal structure is we pull back, okay, broke this low. Here we're looking for pullback to sell, continue the market. Off where? We're going to look for our last buy to sell area. We're looking for entry out of this area of supply. So let's just take this off and see if the market comes back to the area of supply. Okay, so that's just pushed into the area of supply. And now what you would be looking for, if this is continued to go, we want to see the market take this low. Okay, so we want to see the market continue back down to take that low. And if the market now closes through above this supply, and let me just map this out. So we have that drop down. Okay, so our internal structure, okay, this is a swing structure, this pullback of this area. Our internal structure, do we break that? We did. This is now mapping out your internal structure. So we broke out, pulled back, we broke out, we pulled back, and we've gone higher. So at the moment, we have a bullish bias. So unless the market can come back down here, break this low, okay, so we see this, and then we pull back into new area of supply, we're potentially looking for bullish moves. Let's see if we do actually close this area. So we've actually just wicked it. Okay, so we've done a sweep of that high, and potentially if we now run this low, we can see continuation for this low. But we'll hold, and let's see, we have now officially broken out. So now we have that bullish bias. And what actually happened is that the market's held at this area of demand, and we haven't actually quite broken out yet. We need to see a breakout above. Right, so now we've broken out. We have a breakout area here, breaking this structure high. This is a new area of demand. Now that's our internal structure. So we've got a swing structure at this point. We knew that we had this big push down. Let's mark that out again. So we went up this high, okay, the big push down. We're having a pullback. So what are you looking for? We're looking for that internal structure. Okay, so let me just make sure this is on. So we can take it from this high, and we'll take it from this low. Okay, so on a pullback, we want to be above this 50% area. So let me just take that structure. Let's go see if we can pull back above that area first. Now, obviously, we can look for pullback into the area of demand on a counter buy back up with this internal structure. So we come off the demand zone, looking for the market to go back up and take that high. Right, now we've gone above that high into our potential sell zone. So this is our pullback area, okay, on a swing structure. But we are internally bullish. So you can see the market come back into this area of demand. And what we've done, we broke structure again. Okay, we've left the area of demand here. We also had a breakout area. We can mark out another area of demand here. Now it actually got triggered on this candle, so that may not hold again. Now until we can actually reverse structure, so let me just show you the structure at this point. So this is our structure. We're either going to come back here and we're going to see a continuation, okay, or go deeper and then continue back up, or we're going to see the market break down, okay, breaking through the demand zone. The demand zone is going to show you that structural point now. So we're going to pull back into demand. So we've gone through that zone, as I did say. We may go through that zone because it already got tagged here. So that left an area of liquidity, okay, for the market to take. Let me just show you what I mean. We had an area of liquidity below that low, which would basically take that area of demand here and take that liquidity into this demand zone. Now, if we are to see a reversal from here, you're going to have to see the market want to take out this low. If we can hold, okay, then we can look for the market to go back up to this swing high. And if we look at a swing structure now, okay, our swing structure is still going to be from this swing high to this low, but now we're above that 50% area. So potentially we could see that drop down, okay, targeting this low. So let's have a look, and we need to see if we get the reversal out here. All this low is broken. Right, okay, so went a bit too quick there, but we got what we call that sweep, okay, nice bullish candle going to the upside. Markets closes here from balance. We should take this high and continue up. Okay, so we took this high. Markets now continue higher. So as a internal look, again, let's just grab my tools. So we had this swing pullback, okay, internal structure. We're expecting price to take this high, continue up. Now, does it have to do that? No, but looking at an internal of this structure as well, we can witness that we had this push down, okay, and now we have to push up. So potentially we could have pullback continuation. So what does that mean? We've left behind. Well, I like this as an area of potential demand. Let's just see how the market runs. Pull that across. And again, we've still got to take out this low, okay, to see a potential reversal. But the market came back to this area of demand and continued up. We expected to want to take this high. Okay, so we took that high. We're still looking for the overall swing to take this high. Doesn't have to. We've just swept these highs here. And we've run this high. So you can see how the continuation of that move has happened. Now, as we already come back to that area of demand, we'll be looking at a new area of demand here. Now we're still within that swing pullback, okay? So if we're looking for that reversal now, that was our previous move up. We still got to see the market take out this low, this area of demand. Okay, so this area of demand here has got to be removed. And let's go a little bit further because this video is going to go on for a long time, if not. So let me just pause it because I'm missing what's happening here. Sorry about that. So we had a break here, pull back, okay, another continuation. So we've had another breakout here in the market. And what it's going to do is leave me a new area of demand. So okay, this is my main zone. This is what I class as an origin zone. Okay, if you're not sure about your supply and demand zones, there are some great videos in this channel to teach you. So this is our major zone. But we also have this breakout here. So let me just show you. So the market has come up, okay, broke out. Wrong tool. We grab the other arrow tool. So we broke up, pulled back. Okay, we did break out here and broke out again. So you see how this structure moves. So I like to look at this as a full zone. See if the market pulls back in. So we wicked through this low. Okay, so this could be manipulation of this low. Now, on the way down here, this area of demand, there is no liquidity. Okay, so what we can expect is this low to potentially be taken to drop into this major area. To see if this happens, or we hold. It looks like we're going to hold, and we've broken through. So now we've broken up. So we continue to be bullish, okay, with this move. So the last area of demand is created here. We also have a nice looking area here broken to the upside. Now again, if we look at our swing structure, this is now not looking good because we should mark out the high is here. We've just now closed through. So now our structure no longer. Now I'm not saying you're going to be looking for a sell here all the time because you're not looking for that sell until we have a reversal. So what you're actually looking at now is your structure has done this and we're breaking back out. So potential full pullback continuation could be that larger swing structure. So I hope you can see how you can map out your charts very, very easily using this type of technique. So again, you can see how the market's come back. There's no liquidity really. There's a small liquidity area there. We wicked through. Now you're looking for the market to continue up to take this high. Now this isn't a trade that I personally would have taken to buy here. Definitely not. I prefer to see the market want to come back down to this zone. Reason being is because we have this strong bearish drop in the market, removing all this imbalance here. Okay, and I expected it once it done that. Okay, so we have a reversal to downside. We take all this imbalance. and then expect to take this low. Now, this is something that I do teach was inside that NFXT Pro mentorship, where you go through the community and that program. All of that is taught how to use the imbalances and the imbalance levels, and this will teach you a accuracy you would not believe. But from here, we could see continuation and just see if the market can get through this imbalance. Now we've just closed this one, so we expect the market to want to go up to take and fill this imbalance. If we continue higher, we could hold inside that zone. So we've actually come back down first after breaking this minor structure here. To show you, we have this level here broken. This is actually an area of demand, what was created, and we've pushed back up. And as the market continues to break up, we continue to have our areas to draw. So again, new area of demand is to be marked here. And you'll be looking for that pullback once again. Now, before we got that, we had another breakout, the one here. So we leave a new area of demand. Now you could use it from this zone here if you wish, this last bullish candle, or we can mark it from up here. Okay, the actual zone here is this is our major zone. This is a refined zone using areas of supply and demand. So even here we had another minor break here of structure. Okay, we leave this zone here. Market's now come back into. So you'll be looking for the market to head back up to take this swing higher. Let's see if we do break up. We've swept the high. We do continue to break up. So you can see how strong this is in the market right now. So again, we broke up. Okay, we left this area of demand. We also had an origin area here I can draw. But as we can see, the market really came into that demand. You can see how we stack above demand zones. We continue up. So now we've wicked through this low, solid push down. If we continue down, potential reversal here. So we can see what's happened now. We've just took this area of demand. We've failed, okay, to hold, and we've dropped down. So now we have, okay, this area of supply. Now, why do we have this area of supply? Let me just show you. This is our breakout, okay, continuation, breakout here, drop down. Actually, let me just reverse that off. There's actually another zone, so we just show you. So there's this pullback, okay, the pullback here, broke this high here, a small pullback, continuation, breakout. That's what I'm looking for, that pullback. Sorry, I didn't quite mark it off correctly. So we'll be looking for the market to come back into this area to sell down to see if there's a reversal. Now, unfortunately, the market doesn't quite come back to this zone we've got marked, and we have the continuation to downside. Now you're starting to see the process, how simple this is to find those areas of supply and demand when you start mapping out your charts. Now all you have to do is continue to mapping those charts. You can see how we were mapping them out as we go along. Okay, there's a small pullback there, very small pullback there. We broke out, pullback, continuation, small pullback, continuation. So if you're looking at the charts like this, this is going to help you to mark them out. Again, area of supply, we have already come back and tagged that supply. So when we come back, we're going lower. We've gone lower, we didn't quite come back into it. What actually happened here, again, we tagged this supply, this area here of supply was when it was used at this zone. We broke out of this area here. Okay, I'm not here to show you how to take trades, I'm just here to show you how to map your structure. Once we break out again this low, we create this area here of supply. It's a better looking zone for pullback into. So see if we come back up. And the market's very, very choppy there. So we have some lows all being wicked here. Okay, so potentially we can see a pullback yet. May drop out first. We've dropped out first. So what we can see here is that the market's held. Okay, now we've dropped out. So we've created a nice looking origin move here. Okay, you mark it off for that bullish candle. We have a small gap. I'd like to see the market fill that gap and drop away. So what's actually happened is actually removed it. So potential losing trade here with understanding the supply and demand. So we come down here. Okay, it'll be this low here from this move up. Okay, push down. So the market here all this wick. Okay, what I've looked at is this as being our breakup. Now we've actually broken structure to the upside, removing this area, tagging to this area. So price has to go into something, okay, to supply to see that pullback. So again, what we saw above, we had that reversal. So potentially we've got this zone. We have this zone refined. So will we hold this area of demand? That's the crucial key. We've just wicked through this low. This area of demand, if it holds, we expect price to go up for this high. Now what this could be is just a manipulation of this high, okay, this last move down where we had all price being held. Now we need to look further back in time. Do we have a previous demand? There is a demand zone here, okay, which has held price up. Why are we seeing that removal? Now what we're looking for, remember, our swing structure. What is our swing structure telling us? Okay, it's telling us that we're looking for that pullback to be below this 50%. Now we've only bounced off that 50%. So we do really expect market one to go lower based on that area. So let's see if we get a drop. Okay, so we continue to go lower. So you can see how you can use that to understand when you're looking for those reversals. So this reversal is just a manipulation to push price deeper. Now you continue with mapping your charts, waiting for that pullback. Okay, so we got a pullback again into the area of supply. Let's mark it off. Okay, into the area of supply here. This one got removed. Okay, now we drop down. What we've now done, okay, is broke structure to the downside once again. Okay, and we leave. This is probably the best zone of supply. And we're looking for market to pull back again for continuation. So we actually broke structure again here. So if you're mapping your charts, you'll be doing this is your breakout, pullback, breakout. Okay, that's all you got to do is map those charts. Okay, look for that area. So area of potential supply. We have an area here of consolidation, great area of supply. But remember, on that pullback now, where are we? Okay, so if we're to see a continuation of swing structure, we need to see a reversal. The next area of demand is this zone. That's where we need to see the market bounce from. What are we seeing? Let me remove this structure now. We see the bounce out of this area. So we're likely to see the pullback. And there's your pullback. We manipulate through the high. Do we actually close it? No, we just had a wick through that high. So we have an internal structure here. We break this low, we'll continue to fall. But now, this is what we've been waiting for. Okay, so we have that pullback. This is mapping the structure here. And we don't map it up to here, and this pullback, we go straight up. Now we're looking for pullback for continuation to go with that swing structure. So down here, we have an area of consolidation, good looking area of demand. Now, that is my preferred area because we also have here some equal lows, liquidity. So that'd be a good pullback here. We can see this. Now, at the moment, the market's not giving us that pullback. We have another breaker structure. Now, that's going to leave this here demand. Big drop down. Okay, so that's our origin area. So it could come back down to here. And we continue up. So you see how the market is now about to take this high. So once we see the pullback here, this is our swing structure. Okay, so there's my move up. There's our move down. There's our continuation. Looking for the market to take this high. That is the simple way of looking at your structures in the market. And all we're doing now is mapping out back to the upside. Okay, so there's our push down. There's our break up. Continuation. Okay, and look, pull back and looking for the continuation of break. That's all we are doing. Let's see if the market can take out that high on a pullback. So where were we pulling back to? Well, this is not the greatest area of demand. Okay, it may hold. We have just now swept this low. So potential push up now. We could see a move higher, but it hasn't. And now we're going lower. So this still becomes my next area. Okay, where I want to see the market really come to. And again, this is now shown as that swing pullback. So internally, we didn't quite break that high. So It's not really a pullback there. But what we want to see is that continuation higher. And there we have it. So now we've actually pulled back, okay. Didn't quite get to that demand zone, unfortunately, but now we've broken that high. That's what we were looking for. So hopefully this gives you the context of how to apply market structure mapping. Now you may not be aware, but there's also that internal structure within those swings. And that's exactly what we will go through today, how you can mark up those internal swings. So understanding the two differences between the internal swing and the swing structure is important, especially when you're understanding where the market's likely to head next. So here, let's just forward this price chart. We're on the pound US dollar. Let's just go forward with this price chart. So currently we can see the market has created this move up. So we have a swing low here in the market. We want to see a breakout. So we've got a breakout. Okay, so let's just go from this area. Understanding the market swings. So we look at the current swing here to the downside. Let's grab a tool. We've just broken here to the downside and we're making a swing pullback. Now within those areas, we're going to find that we have the market here. You can identify we broke this high here. We went higher, pulled back. We went higher again. We pulled back. We wicked through this high and eventually we broke this low here to the downside. We pulled back, broke lower, pulled back, and we broke out. And now we're having that pullback. So what we can identify within this move here, just this move we're looking at here, is internal structure. We have a previous high here in the market. We have another high. We have a low, a lower low. So what do we have here? We have a swing move in the market. Now within those swings, okay, we're going to have these internal swings. Now that is what we class as our internal structure. And it's key to be able to read the difference between these swings and the internal swings as well. That's going to help you to identify when the market is creating those pullbacks. Just like we're seeing now, a pullback is occurring on this move. We're looking for the market to continue lower. So what's going to push the market lower? Potentially areas of supply demand, swing points in the market. When I talk about swing points, I mean swing highs of liquidity we look at. So we have a swing high here. Potentially we could see this high run and then we could see a run back to the downside. Let's just let this play out. See what happens. So currently we broke this high, we pulled back into this low we've currently held. So we want to see a sweep of some kind of high, and let me just pause it there. So we can see the market internally. Okay, we came down, we pulled back, and now the market is making a higher low, but we failed to take out this high, which does suggest we will continue to go lower. Let's see what happens. So, okay, so we do actually continue lower. So we continue lower. So with a internal structure, remember the swings we were looking at the time. Now we have these internal moves inside these moves as well. So we can now look at this as a push down, okay, pull back here, continuation as a full swing. And we can also look at these movements inside where we see price here pushing up, okay, and dropping down as a fractal internal swing. Let me just continue forward. Once you understand how these markets are going to move with the swings, we can then identify we have an area here of supply. So this is what actually pushed the market lower. Now, as we just broke out of this low here to downside, we create a new area here of supply. So we can mark out a nice looking zone here of supply. We also have a drop-based drop zone here as well. So let's just forward this. So we have a structure, okay, internal structure now. We can identify as we break out of the swing move, we have this pullback here. So as a swing structure now, we can see we have a breakdown, a pullback, and a continuation out. So all you're looking for when you're looking for that internal structure is with it going with that trend. So for this move down, okay, we can identify this push down. We had this push up. Okay, we went higher, we wicked above this high, and then we reversed. So that internal structure went from a bullish to a bearish structure, which indicated once we broke this low, that the market would continue to break out this low. So let's just remove those off. So we're looking for a continuation lower out of this area of supply. So the market has removed that supply. Now, this had no liquidity to the upside. So very often you're going to see these highs run. This high has been run deeper into this main origin zone. Now, these zones are going to work better because we've got an overlap as well here than these first zones, mainly because we've got a nice swing pullback. Let's see, we get a run down. So we run to take out this low. So we run down, we took out this low. So again, look, this swing is basically doing this. Our swing structure, continuation. Now internally, if we now go closer into price, we can also pick up on these moves where the market is creating these swing moves. We broke out this low, okay, pull back, continuation. And you can see we have an internal structure. So how would we look for the reversal out here? We can do what we class as a fractal structure. Now, this will help you to find potential reversals out of these areas. The fractal structure is what I class as the new change of character. And if you haven't seen that video, I really suggest going and watching it. It'll be coming up at the end of this video. So we can look for those fractal reversals out of these areas here to identify the market wants to go down to take this low. So we now have a continuation once again. That's we broke structure here to downside once again. So let's look at those structures. So what do we have? We have a breakdown, pullback, breakdown, pullback, another breakdown, and we're looking for a pullback. Now, obviously, we could continue lower here first. There's your swing moves. Internally, we do have this push up, pull back, okay, push up. We broke this structure here, and then we broke out. Okay, that's the current internal structure we're looking at. See if the market continues to pull back. Okay, so you can see from this point, the market, in fact, did push down, okay, pull back, and we continued lower. Let's continue forward. So we continue to go lower, lower, lower. So that swing continues on its way. Now we have a pullback. So again, it's just, so we have this push through this swing, a very small pullback and a continuation, and now we're pulling back. So what we're looking for is here, this is more of a swing, a full swing down like this. But we can also identify is that the market here, okay, on a fractal nature, we're going bullish. Okay, so we're looking for that continuation higher. Market continues to go higher. And would we come back up to draw that zone out, but we do have an area here of supply. You can see how these zones are starting to stack. And you saw that on the mapping video, went through how we look at those swings. So your internal structure, okay, at this point, we went in, we don't have much of an internal structure there. It's more of a fractal structure. But we can see we broke out of this high here. We continued up, they pulled back, continued up, pulled back, continued up. So you want to see a break of this low to then show a pullback continuation. That's the sort of thing we'll be looking for. So there's the break of that low. Now all you need to see is some kind of pullback for the continuation to target this low here. Now we're not always going to get a pullback, but we've got a pullback right there. So you can see there's that pullback. The market went quite deep first. And now we'll be looking for the continuation. How do we look for that continuation? Well, inside here we have a fractal reversal, which indicates the market is going to go for this low. This becomes our lower high for an entry to go for this low. And let me just grab that tool to put this line back to where I said. So we're looking for a continuation lower now. Take out this low. We wick up once more. Okay, take out that high. And we continue down. So you can see how the swing structure continues to be bearish. Okay, there's your swing structure. And then we have this internal structure within. Okay, so the internal structure broke through. Now from here we broke out. Now let's grab an arrow again. Let's pull back and we continue down, pull back, continue down. So you can see how the market continues to be bearish with a swing structure and an internal structure. So that gives you the indication how the market will continue to move lower. So once again, look, we're now looking for our next zones. You can see how these zones are stacking on each other like this. Okay, so we pull back into that zone. Again, here we have another zone I'd like to see market come back to. So let's have a look at this one. We're looking for the move to come back. We have a fractal reversal, and we have to show you here, we have that push down, okay, pull back, push down, pull back. What do we have? We have a reversal of this high pullbacks. We look for continuation pullback. That's what I see. Now, it doesn't have to happen. We could see a run straight through the lows, but let's see if we get a pullback. So we actually got a run off the low first. You see we broke this low. And we got a continuation. So at that point where we were looking for a pullback, we didn't get it. And that's keeping you out of losing trades because you're not going to jump into any trade. And it looks like potentially this area here, the drop base drop, is what held price and dropped down. Now, it's not a zone that I like to trade. This was a better zone. So for me, I would not look at taking that type of trade. So understanding those swings once more, look, we can see we have a swing pullback, a breakout, small pullback, continuation. Now on an internal structure here, we saw the internal structure here breaking down. Okay, we pulled back here. We may even had one there. Don't think we did. So then we broke out of this low, pulled back, continued down. Potential pullback. So that's how we're looking at those structures. Okay, so we didn't really have anything to go off internal structure reversal even, but we did obviously come off this area here of supply. So let's have a quick look and see if we get another pullback. And once again, you can see the breakout. We just drag another line. Put that one back. So we can see we have a breakout here. What does that now leave us? That leaves us another area of supply here. Now the market has come back to this zone. You can see how we would drop, pull back, drop. If we break out of this high, that's a reversal with the internal structure. So I believe we just about took that high. Yes, we did. So we have a breakout looking for pullback continuation. But we have another continuation lower. So what we have here on this scenario was a sweep of the market here, and we come into an area of imbalance. Now again, it's not the best location for a trade because even off this area of supply would have been better as well. So we have supply zones sitting below as an area of imbalance to be filled. We could still see a pullback to this area, and we actually break structure here again. This move here is looking more like a full swing move down, pull back like this, but we have to go with those swings. Again, let's just see if we get that pullback or continuation. So this is looking very, very much like an internal structure. So we got another breakout here. So this looks more internal. Let's just mark this one out. So we have push down, push up, failed to close this high, broke through, pull back, continued. The market's continued lower. Right, so now we got a small pullback, push lower again, and we get this break to upside. So potentially now seeing a reversal area. So what we got above, let's have a look quickly. Above, we've got this area here of supply left over. We do have an area of supply here, don't really like it. It's a large area of mark off like this. Could push price back down, but it's very close now. Want to see that breakout higher. See the internal structure looks like it's reversed. What I mean is we got that push up there. So from here, look, we got a push up, drop down, a lower high, and a breakout to downside. Okay, so there's a lower high reversal, and that's a fractal reversal. And price came back out of this zone. Now, this zone is the last buy to sell move. It broke out. That's why I've got it marked. And again, look, we do the same thing. We mark off this low, and you continue to follow price like this. So we look at the market here. where we've gone through, we can identify the swinging pattern. Now within those swings, we went through those areas as well, where we had the internal structure. Okay, so this one broke out, pulls back. Okay, so there's your swinging pattern to downside. You can see it's a nice bearish market. We can see how the areas of supply are holding the price. And then we just look for those internal structures where you can see the reversals within. Let's have a quick look to see if we come back to this area of supply or we continue to fall. So again, we have that internal structure on the way down here. So this move, we just pull this down. This is a full swing down, right? Still, that's our swing down. But our internal structure, we've continued to create these internal movements. You can see how the market continues to be bearish. Quite a deep drop there as well. So there is your full swing down. And that's actually still a full swing down on that internal move. And we just go forward quickly. So let me just remove this now. We have a breakout here as well, a small breakout. But if we look at this move, does this look more like a full swing push down? We have a small area here. That's an internal area. This is a full, okay, so even this move here, we didn't have this pullback. We've got this pullback. That's your swinging pattern. This is a very small movement where I would class that more of a internal structure. Even this move here could be classed as one swing, okay, one swing, like that. That's what we can see. So we can say it's a breakout. There is a potential area of supply here. Price may drop out of. But I'd like to see it run through and higher. So we are running higher. And you can see now by following that internal structure, we're going to drop down, pull back. We've now broken that high. You could get a pullback continuation, and we may even remove these areas of supply, and we see a full swing reversal. So inside here's that internal structure. This is our swing movement now. So we can see the swings in the market. Okay, let me just draw this out for you. We've removed this area of supply, and we also removed this zone as well. We wicked through it. So they've both been taken out. That swing structure, okay, we've gone down. And like I said, you could even use this as a swing if you want, but it's more of an internal structure. And we've pushed out. So now we've broken the high. We're looking for pullback continuation. Now, if we look at the internal structure here, that's our push down, pull back, big push down. We broke that high here, went up, pull back. Okay, that's our internal structure. Now here we've actually wicked through, so you can see we went higher. We made a reversal below this low, and then had a pullback. So we could see a continuation lower for this full swing pullback. And let's see if we get a pullback. So the market did push up, and we're having that pullback. Look, see if we get a further pullback, just so we can see how this works. So it looks like we've got a pullback there. So we've got this swing pullback occurring, okay, on this move. And this is internal structure. And we've also got this movement inside, which is our fractal structure as well. And that's just gone bullish, the fractal structure. So this could now push us back higher. I'm just looking to see. We should take out the high. Yes, we will. Yep. So there is the previous high of the swing. And we just rerun it. So it was a short pullback. We didn't get a very good swing pullback here. Just remove that. We can then identify that we pushed up higher and we're broken out. Now inside here, you can see all these smaller moves, which is our fractal structure. And right here, I'd said just before we went higher, we had a reversal of fractal structure, pull back, and then we've gone to take this high. So that's how we look at mapping those charts when we look at the swing structure, but more that internal structure. This video is more to tell you about the internal structure and how we look at use it on those charts. Remember, we look at those supply and demand zones as well. And again, once we remove those zones, we look at this area here, and we just quickly go to this area. Once we remove those areas of supply, our area of demand. This was an area of demand because it's our last sell to buy move. We broke out, we pulled back, continued up. Okay, and we have this run down here where the markets then broke out again, pulled back, broke out again. This is then another run down where we're expecting prices to come to. Then on the way up here, you can see we have these smaller moves where price pulls back into. Okay, I didn't go through all these zones, but you will have gone through the previous video. You'll see how I was marking those zones out. And eventually we broke through here, okay, which leaves me this area here of supply, where the market's gone down, back into the supply, gone back to take out this low. So you could add a sell here to target this low. Understanding now we've broken out, and then we've got a new area of demand. So we didn't quite come back into this demand zone. This level here of demand is the main one that's held price up. And you can see how you can easily follow price once you start to see how those swings, the internal swings, all work together with those areas of supply and demand when you're mapping those charts. This will replace the change of character. Now, if you're not sure what the change of character is, I'll briefly just go through that, and then we'll go through what the fractal structure and the fractal reversal is all about. So when we're looking at a change of character, typically we'll be looking at let's say a bullish trend here, and eventually the market will make a reversal like this. And the change of character section is going to be where we see the breaker structure to the upside, where we're taking out those weak highs. We're supposed to have these strong lows here in the market, and eventually we reverse the market, making a new strong high and a new weak low. That is the change of character in a nutshell. So the change of character is going to show you that structure reversal. Remember the difference here. It's a swing or internal structure reversal. We're talking about a fractal structure. Now what this means is we're fine tuning where we can look to take a trade, understanding we can actually improve our risk to reward, but also remembering at the same time this can also be a much higher risk trade to take. But if you take it at the right time in the market, the right placement, it can give you some great risk to rewards. So let's just back that off quickly. And let's start off with a bearish fractal structure. Okay, so the idea of understanding the fractal structure is what we're going to do now, the theory behind it, and reading the candle by candle structure. This will help you to understand what fractal structure is. Later, we'll briefly talk about the use of the fractal reversal and how you use that to look for those trade entries. Now, of course, if you want to learn more, okay, which we've been through this video, you want to learn more on the fractal structure and the fractal reversal, then don't forget, drop me a comment below this video and let me know you want to see more videos understanding how to use the fractal structure. So let's look at understanding how we read fractal structure. So what we're looking for is for the continuation of the previous candle's high or low to be taken. Okay, so in a bearish fractal structure, we'll be looking for the low to be taken. So it's not until we break through this low here in the market, we make a lower low. Okay, it doesn't have to be a close, it can just be a wick to the downside, as long as we see a lower low. We originally broke up here, leaving this low in the market. We then failed to break this high, which put us into a trading range from this high to this low. You can see how tight of a range this is with just 3 candlesticks. And then eventually we break to the downside here. We then failed to break this low once again, and we break to the upside. So we have a bullish pullback on a fractal structure, and we still then have a new, okay, this area here, this low becomes our new, okay, range high, and this becomes a range low. And we're either looking for the break to the upside or the break through back to the downside. Everything in the middle we're not concerned about. We just want to see the fractal break to the upside or to the downside. We failed to break the high. We actually closed through the low and took out the fractal low. This then gives us a new fractal high here for trading range. Now we can't mark out this trading range until we see the fractal reversal area. And what this means is, let me just back off some of these lines. We see a continuation to downside, and again another continuation to the downside. Until we don't close through the low or wick through the low of this candlestick, then we can look to mark this off as a potential range. So as soon as we see this candlestick close, that we failed to break this low, we have a new trading range from this high to this low. And again, we're not worried about all this price action in the middle. We're looking for continuation to the upside or to the downside. You can see we failed to break this high once again. We closed to downside, or we wick through to downside, whichever it is. We close down again and we go to the downside once again. You see we continue to be bearish here until we get that next candlestick which fails to close or wick through the low, which we do right here on this candle. We can then draw this previous fractal high to this low, okay, as our trading range. Once you understand that, anything inside here we don't care about until we see the move to the upside or the downside. So price basically closes on the very next candle to the downside, breaking the structure low and continue with the bearish move. So let's back some of this off. And then what we have then, the next candle closes or wicks through to downside, but then the next candle fails to do that. So once we see this candlestick close, again, we can mark this off as our range high, and this will be our range low. The next candle goes high once again, and then eventually here we break to the upside. This is what we class as our fractal, okay, reversal in the market. This area here. Now we don't have to wait for this close or wick through. In fact, we don't even have to wait for the close of that candle. You can watch this in live market conditions. What I mean by this, well, this candle's still open. As soon as you wick through this previous high, okay, that indicates a potential reversal. And we can then start looking for an early entry with that market. Now, when we use this type of fractal structure with a fractal reversal, we're mainly going to be looking at it on a pullback against the trend or with entry with the trend. It's best used with entry with the trend, okay, understanding the use of multiple time frame analysis, swing internal structure, and combining it all together. So back to this fractal structure, okay, so that's how we understand the use of a bearish fractal structure. We just want to see the continuation of price taking out the previous candle's low, okay, until we don't take out that low, then potentially we can create a fractal reversal point in the market. So let's now take a look. We've gone through the bearish fractal structure. Let's now take a look at the bullish fractal structure. So on a bullish fractal structure, we're just looking for the opposite. Where we're looking for the continuation to the downside for that bearish structure, we're looking for the continuation to the upside. So here we can see that we have this previous candle's high. Okay, we failed to close through this high with this candlestick. And the very next candle, though, we do close up. This creates, okay, a potential reversal point, okay, or a previous range or an area for a range as soon as we see a fail again for continuation. So we can see we close up once again, we close up, or we wick through, should I say, above that previous candle's high, but this candle here fails to take out this candle's high. So once we see that, we can mark this off as a previous low, a high, we have our trading range. Again, we're not really bothered about what's happening inside here. We just want to see if we either go to downside or back to the upside. So as you can see, the market does close back above, okay, and again, we break this high and we close back to the upside. And eventually here, we failed to take out this candle's high. That gives us a new range from this low to this high. Now, hopefully you've also seen previously, we don't have to create a pivot point, okay? This is not a pivot point for a fractal low. So understanding that will help you to understand how we're reading this candle by candle structure. We don't have to see like a pivot like this to create that reversal point, okay? That's our fractal reversal level. So we can see we continue up. We fail to close up. This becomes our trading range. We then close down, so we have a bearish bias at that point, but it's a pullback within this range. Now, as soon as we fail to close down and you see the market closes back up, okay, we then continue up, we take out this high, and this becomes your new fractal low. Now, again, you see we break up, we failed to break through this high on this bearish candle. As soon as we see this, we have a new range right here. Now, straight away on this point, we can see the market just goes straight back to the upside. We break the candle's high and we take out that range. So now we have a new range, okay, as soon as we have that fail of breakout, so this candle's high was failed to break out in the next candle, this becomes our range low to high. Now you can see how a tight of a range this is and how you can actually find some high probability trades once you see this. So again, look, the market fails here to take up that high, and eventually we do actually close higher here, but then the next candle we break through. Remember, everything in between the range we don't care about. All we want to see is a break to the upside or the downside. This break to the downside confirms a potential reversal in the market, and that's where our fractal, okay, reversal comes from. So once you understand that, it's going to help you to read those entries. And like I said, the fractal reversal is only really going to be used out of a multiple time frame area of supply and demand with the use of the different structures in the market. Now, coming in the future will be different videos to understand the use of market structure in more detail, but this is the starting point for you to understand. This is what's going to change that change of character. Forget the change of character. Fractal structure is the way forward. It's going to allow you to find and pinpoint those reversals in the market. And like I said at the beginning of this video, if you want to see more videos on the use of fractal structure, and I go through in more detail how we're going to apply this when we're looking for a trade, then drop me a comment below and let me know you want to see more videos on fractal structure. Market mapping out session for you today, going through the daily time frame, showing you exactly the best and easiest way to mark out and map those charts. So one of the easiest formats to do when you're looking to do this is to zoom right out. Look at that bigger picture. So we can identify on a bigger picture then where our major swings are in the market. So we can actually see by doing this is that we can see we have a major swing down, pullback, continuation, pullback, and continuation lower, and a pullback. Look how quickly and easy this is to do. That is all you really need to do when you're looking to map your charts, that we have a pullback here, continuation within that zone. Now you could even look at this as one full swing if you wish, and a pullback. But we have inside these areas what we call internal structure. Okay, so we have an internal structure within these bigger swings. That is the most simplest way for you to start looking at mapping out your charts. Now we've got straight into the core of this video, because you need to understand, without understanding true market structure, you are never going to succeed as a trader, because you're going to find that you're going to mess up mapping your charts. So we just went through quickly how you mark out those major swings in the market, and they are crucial to understand as well where the market's going. Then we're going to have in here, okay, these swings I'm now marking. What these are going to be is your internal swings in the market. You can see we all the way down, and then we come all the way back up to take out this high, and I'll be looking at this as a potential move. In fact, we may even come straight down and bullish move up. You can see how quickly I'm marking this up. Now look, imagine you are looking for your structure points. You are looking for your supply and demand zones. It all works. You're looking for where the market's going to want to run the next liquidity area. Everything will come together once you mark out and understand the correct way of market structure mapping. And this is the way you need to be doing it. So look, I've just quickly gone through. Now, once we've done this, we can start to identify those breaks of structure. So we have a valid break of structure here. So let's just mark this off. We then have another valid break of structure here, and another one here, and another one here. And eventually we have another one here. So let me just tidy some of this up. So you can see how quickly you can identify those breaks of structures just by doing what I'm now showing you. So we have a break of structure there. Let's just continue marking these off. Yeah, so we most probably would have had a single pullback here using this as our swing high, and that'll be your break of structure. So there's been one single pullback, and then we'd have another break out here. Let's bring that back. We have another breakout there. And currently the market's come down and we're seeing a pullback. Now, even within these swings here, we just shrink this back up. We can identify the bearish bias. We reverse, okay, bullish. continue bullish, and then we reverse bearish. Why do we reverse bearish? Because look, we create a break of structure here. We break down and we're seeing that pullback. So this is our current pullback in the market against this move down. But again, this even has structure within it. And if you don't recognize these structures quickly and start understanding why the markets are moving on those locations, then you're never going to understand the true formation. So look, when we see these breakout points, here we have a nice push down and a reversal. What that down does, it puts us into a bullish bias. But a bullish bias on what? Let's zoom out. A bullish bias on this larger swing, okay, when we break this structure on a pullback. There's your swing pullback. So what do we now expect this pair to do? To continue down to take out our low. So there's how you map out, okay, your larger swings with your internal structure within it. So that is a simple technique, okay? Very quickly, you can achieve this. Just follow along on this video, go back and go through it a few times. I'm sure it's going to sink in. Now, even this move down, okay, we then have a single pullback. Look at the price action here. We even have structure within the pullback. And you can go through your time frames all the way. So look, there's our structure, and now we've broken out. So there is a break. So I'd have a breakout here that I can mark. So we can mark another breakout. I'll tell you what, I'll mark this off as a high boss. So we have the reversal from this bullish move, okay, to the upside, to the downside. So what does that now tell us? That tells us we're looking for a pullback to continue short until we remove this low, because this is our last low, okay, where we see the pullback. So we then have this swing pullback continuation. Notice how we have inside these moves our structure. Notice how we also have structure, okay, inside these swings. So we have our larger swings with structure within. We then have our swings within this structure with swings within. So you have trends within trends. Look at it that way if you're not quite sure. And when you combine all this together, this is just one time frame. Get your head around this for a moment. Imagine having multiple time frames using this type of method. Once you understand the way to apply structure in the market, the way to map it out correctly, once you can do this, go away, do an exercise, come back, leave a comment on this video and tell me how this has massively improved your trading by creating these structure points on your charts. Like I said, once you have these structures, let's just remove this. Once you have these structures on your chart, what does it then show you? It shows you where your areas of demand are going to sit, okay? Understanding the last sell to buy a move here. Look, last sell to buy a move. We come back into demand, come back into demand. Again here, our last sell to buy a move. We break up, we come back into demand, we continue up. Our last sell to buy a move. We come back into demand, we continue up. Look, we can keep doing this. Our last sell to buy a move. And that is the last demand. We're currently now coming back into, continued up to break structure. This was actually about there, our zone. So we came into the demand, pushed up, and then we broke out of this current zone just now. We're deeper into this demand, but we expect this demand to be removed next. But look at how mapping your charts not only shows you the direction with a market structure mapping, but also shows you how to draw the zones. And on top of that, it's also going to give you those swing points, these areas where I'm going to create a liquidity grab. All of this I'm going to need future videos to go through for liquidity and then supply and demand zones. But there is already some great videos in the channel. I check them out right now. As soon as you've gone through this video, they're going to help you to understand. I realize that many traders out there do not understand how to find that directional bias. So I'm going to show you on the pound US dollar on the daily time frame, 23rd of the 1st, 2024. We're going to go through how we look for that directional bias. It's all about understanding your market structure. But the key concept is we're going to look at some areas of structure in this video again, but with the use of imbalances as well. Understanding the imbalance in the market is going to show you where those hidden orders remain. There's hidden blocks of orders which need to be filled or run through as liquidity. So if we look at the last move here to the downside, this move here, this shows me a break of structure. So as a swing structure, we've broken out to the downside and we're looking for that pullback. So understanding a larger swing, we're looking for a pullback for potential sell back lower. And we just mark off this as a strong swing high, and this would be our weak swing low. So potentially we're looking for reversals now to target this low. Now the way we do this, we understand the use of supply and demand. We're looking for that last buy to sell mode, which is this big buy up here to the downside. So for me, anything that comes within this zone, as a larger zone, is where we can look for those reversals. Now we can refine those zones as well, but understanding the last buy to sell move is important. So when we see the market down here, as we see the reversal comes as we see this minor break here to the upside of this internal structure. Now at the same time, how can we know that the directional bias is changing? If I zoom in, if you've not ever gone through the use of imbalances before, then this should help you to understand how you can apply it for that directional bias. Now the imbalance is created when we see a momentum move. So you can see this big bearish candle drop away from this pin bar. When this happens, from the low of this candle here to the high of this next candle, when it's closed, this candle, it creates this area left over. This is an area of imbalance where we see the blocks of orders remaining, where either they're going to be run, okay, or they're going to push the market back lower. Now on this occasion, the market is run through. Once we see this candlestick closing through, this is taking and clearing out those orders, and it gives us a directional bias as bullish. At that point, we know the market will want to run this swing high. When the market closes through that swing high, it changes our directional bias. Now we have a bullish bias, and we also expect that the market is going to do a swing pullback. So once we've seen this reversal, we know that the market will want to do a pullback against this swing to then head back lower to take out the weak low. And that's exactly what happened. From this point, we can see the market has made that pullback. So let's go closer again into that and see how we can read that directional bias with those imbalances. So now we know that this is the imbalance with reverse price. We also close this swing high. What we then need to do is look for our next imbalances, and we'll mark those out on the chart. So we have an imbalance level here. The next imbalance level is above. And do we have any more? So we don't have any more imbalances until up here. So that's my next imbalance level. And that looks like that's it for now. So they are the only imbalances that we currently have. So pull that across. So once we see, you can see the market, once we broke out of this swing high, we knew the swing pullback was going to occur on that time frame. We come into this area of imbalance, reject it, we fill it to the pip. So we expect the next time the price comes to that area, we will close through. This pushes the market back down. So what this imbalance has done is basically it pushed the market back to find an area here of demand. So in theory, we have this area as a demand zone, and we can refine that zone down to here, where the market pulls back in. So this is where you can potentially look for an entry, a counter trend entry, sweep below here, nice looking pin bar, and we target to take out this imbalance. So if you was using this as a directional bias, we would look to go long here to fill this imbalance and remove it. As we already filled it once, we expect it to be removed, but that will be my target, just over a 3-to-1 risk reward. Now, once we close that imbalance, we expect the market to go to the next level. This is the next level, and we can close that at the same time. So our directional bias is still bullish at that point. Now we can look for the next area. So we do have this as our last buy to sell move. So you can see that the market pushes down here and we buy away. Now we can refine that to this area here, which again is a new sell to buy move, which broke this area. And you can see the market comes back into this area. Nice looking rejection candle out of there. A doji as such with a nice bullish move away. So at that point, that signals to me that we could look to go long once again. So from here, we would look to go long and we can target the next imbalance, which is this one here. And see that gives us over 3-to-1, nearly 4-to-1 risk to reward. And that's how we look at that directional bias. We keep going with the market. At this point, the market's gone up, we closed through, okay, that area. So that means we're going to go higher. So now what you can do is look for your next imbalance level. And we also need to incorporate swing highs and lows for the next area of imbalance. If we look at this market, we have a very, very small area here. Very small area of imbalance there. We have another area of imbalance here. And a very small one above, but we won't mark that one. We'll just mark these two out for now. So as we've now closed through this imbalance, we expect the market to want to go for this imbalance next. And where does the market head towards? It goes for that imbalance. So once we see this pullback, we'll understand we're looking for our areas. There's our area, which is the last sell to buy move. And we can map this out by understanding structure. And it's important that you understand your structures in the market. We do have a very small structural pullback there. And that's what causes that market to continue higher until we get to this imbalance. Now notice when we got to this imbalance this time, we did not close through. We rejected it, and the market, in fact, has pulled back to this low. And I do believe we just closed through by a pip or so. So at this point, potentially the market could well be coming back to an area where we could see this swing to reverse back to tag out this weak low. And that's essentially how you look for those imbalance zones for that market direction. Once you understand the market structure swing you're within, this is our current daily swing. And we also need to understand this is our internal structure that reverses that high, which gives us this reversal. And now we know the market has been bullish. Now you could use this as one full swing to here and a pullback, and the market continues bullish. So once you understand the directional bias with the use of your market structure, and again, watch that video coming up, which goes through the mapping of market structure and the use of supply and demand zones, and you incorporate the use of these imbalances for market direction for the bias, it's going to help you to start finding that true daily directional bias. So again, until we actually close through this area of imbalance, we will not go to the next one, which is above. We don't have to go to fill that imbalance, but the orders here could be the orders inside this area of supply, okay, which pushed the market down, or we could just push down from here. So how do we know where the market's going to go next? Quite simply, all we need to see is the reversal. So again, here we had this push up. We just broke that high with that bullish move, and now we've pushed down. Now we'll check in a minute, see if we actually closed that low. If we did, then we're looking for continuation to downside from here. Let me just double check this for you. So we have a low of 1.26124, 26105. So that did indeed close below the low of this candlestick. So at this point, we have a bearish bias with market structure. Now, looking down here, where's our next area of imbalance? Well, the only imbalance we have left over, the first one is this move here. Now, that could be where we see the market want to head towards. Now, if we look at current price, once we get to this point, the market pulls down, we break, we do leave this area of imbalance. Now, that was removed through with this candlestick. So I would expect to perhaps see the market want to run this high first to take the liquidity, perhaps to fully fill this imbalance, as we didn't fully fill it, and then look for another drop. Now, of course, if we do go up there and we close through, that means we're going to go up to the next area potentially. And that's how you look for directional bias. And this is not something that anybody really teaches. You can look around on YouTube. You're not going to find somebody who shows you how to use these imbalance zones in this type of way. So we have the structure of the market where we look at its swing structure. We're going to look at internal structure here and within that swing structure. So when we're talking about swing structure, we can look at the bigger swings in the market. So when I mean large swing structure here, zoom this chart out on this 4-hour time frame, and you can identify these larger swings in the market where we can see price has broken the downside, this last low, pulled back, and potentially we're seeing the market continue another move lower. So understanding market structure in this way and how to map your charts, there is a great video I'll leave at the end of this video for you to go through and watch exactly how you can map your charts. But this is to teach you how to read structure just with that line chart. Now, looking at these swing points, if I mark this out, okay, on a, let's show this on a weekly, if we go to a weekly time frame here, and let's back out, look at the line chart where we've mapped this chart, okay, we can see that we have the same pattern, okay, with the line chart. So using multiple time frames with the line chart will help you to see these swings. So we're looking at the 4-hour time frame, but we can identify where we have that swinging pattern on the weekly time frame. So it's going with the actual 4-hour. We can see we've had a break of structure here. We're probably going to have an area of supply here where price is pulling back into now, and we're looking for a continuation to take out this week low. So that's how we look at market structure or break of structure with the line chart. Now, if I go back to the 4-hour time frame, when we look at these swings here, we can also identify, okay, within these swings here, okay, these moves down, this is the largest swing we're looking at. So we had this is a larger swing, and there's a breakout, okay, broke this low, lower high, and now we're looking for a continuation to take out that week low. We just saw that on the weekly time frame. Now we can also identify the swing on the move here. We can see a break of structure here to downside. We have another break here. In fact, let me zoom in, make this a lot clearer when we're going through this. So reading these swings, okay, we have all this in here as well. This is still looking a bit messy on the chart, okay? So how can we clean this up? How would you clean this up? Let's go to a daily time frame. And let's have a look at these swings now on a daily. So let's go back to where we were. Okay, so now we can identify that we can see these moves within this area using the line chart. Okay, let's forget about this move up. Let's just look at this move to downside. Okay, now we can identify quite quickly where we have these moves where we can see price goes up, we break structure. Okay, we do manipulate by this high, break structure. Okay, we have a small pullback there, continuation. Okay, so you can see how we can easily see this on the daily. That's why it's important to understand multiple time frames. So let's say we look at this low here to start with. We have a break of structure here to downside. We have another break of structure here. Then we have a break of structure here as well. Then we can move down and we have eventually another break of structure here. Now, the reason we have this break of structure because we really see this as a swing move down pullback. We have a minor break there, but we look at that of a full swing is this one here. You need to read those bigger swings. We have another break of structure here. And eventually we have a break of structure here to the upside. Oops, let's put that back. So look, that's how we can read very quickly with this line chart. So we can see we have a breakout here to downside, another break here, another break here, and we see the continuation of that structure. That's our break of structure, okay, line chart trading strategy. So if we now go to the 4-hour, let's just see if we've marked those lines out correctly. Okay, so we haven't actually marked them out. Let's go back, let's just remove these ones. And let me just go back. What I meant to do here was actually mark these out so they were on the 4 hour as well. Obviously they're not on the 4 hour. No, for some reason they're not. So let's just change these quickly. We've already gone through the weekly, and we can see how the weekly helped us see the larger swings in the market. Then we've gone down to the daily, and now we can see that this weekly time frame was this swing here to downside. Okay, then we can see these swings here is that internal swing structure, okay, on the daily within that weekly swing. On a 4 hour time frame, we can see this when we come out of the chart. And we can see this movement here on the 4 hour. We now go inside here. We're also going to see on these moves, we can now just fine tune where these are. So we have a breaker structure there. We had a breaker structure there we marked out. We have another one there. Now we can identify that we obviously had this manipulation here. Okay, let's push up and then a fall down. We then have, let's mark these out. We had another breaker structure there we had on a daily. We had this breaker structure. This one's in the same place. And then we have this as our reversal. Okay, so even on these moves here, we can identify more swings. Now we class these as the fractal swing here, but we can also look at this as our major swing down, pull back, okay, breakout, pull back, breakout, pull back, okay, breakout, pull back, breakout. All right, we can see how the market's doing this move here, breaking that structure with a line chart. Now on the way back, we have these smaller swings in here. So zoom into the first bit. So here we have that breakout. We then create this small swing here where we see the market reverses. Okay, right here, we pull back up, we come back, and then we have the swing of the high, breaker structure again, right there, and then we break back down lower. So here we know the market wants to then charge for this low. We then eventually break that low, we pull back, and again we can see that we break this structure here, come back to retest it, we then another break to the upside, and then eventually the market then comes back, we break out. So this is a quick breakout. We then had a breakout here lower, then we push back up one more time, okay, to take this high before we break this low. Let's have a look at what price looks like on the chart. So when we have price on the chart, reading the market like this, we can see the big break here to downside, where we create that swing low, we pull back for that lower high. We can see the price action here. We have a nice bearish engulfing pin engulfing candle where we could take an entry, understanding this area, targeting this low, market hits that profit target. Okay, we then have this reversal down here. We can see again a nice pin engulfing candlestick to show us the bullish move. We push back up this high, pull back, make a higher low, and eventually we break this high. We wick through this high, okay, here, and then we drop through and break structure again. So it's reading the candlesticks with those line charts. We use the line chart first to quickly identify those areas. We're looking for those break structures. Again, here we can see the market breaks through. We create that pullback. A quicker look at price. We can identify here. We sweep this high on this candlestick. We then have an engulfing candlestick here. Okay, pin engulfing candle. Now you'll hear me say that pin engulfing very, very often. That you can sell on this candlestick. Bring that down. We can sell on this candlestick, targeting this weak low down here, or even this area marked on the actual line chart. Nearly 6-to-1 risk to reward. So a pretty good trade once you start to reprice. We break out again. Okay, you can see the internal structure here on the way down. Okay, we have a break, pullback. Okay, continuation of internal structure. Then the market comes back higher and we break out again. So it's understanding reading these structures within these structure breaks. So again, every time price pulls back, we're going to do one of two things, okay, or one of three things. Price is either going to pull back to a swing high, okay, to look for that liquidity, or we're going to pull back to an area leftover imbalance to look for that liquidity. Within these imbalance zones, there are leftover orders, or we're going to pull back to an area of supply, which on this occasion, we have the last buy to sell move here. Okay, the market didn't quite get to the actual area of supply. So you need to understand these three things as what gives you a potential trade. Up here, we see price decided to take out a swing high. And that's why we see the market creating that reversal that we've seen. Up here, we have the same thing. Price runs these actual swing highs and it actually runs this area of imbalance as well. So the market here, again, we can identify that we break this structure we've identified from that line chart. Okay, and the market actually continues down. We do leave here, okay, this last sort of buy to sell move before we break out. This is our true zone up here. And you can see the market does tag that zone and we drop off before we break to the upside. And eventually we see here where the market does make that breakout. Now this is where we saw the line chart breakout here. We've pushed up, the market's come back, made this higher low, and then we break out to the upside once again. That's where we see that full trend reversal shift there. So let's now just look at the line chart once again. To quickly identify these zones is just looking at the major swing. So there's a major swing, okay, pullback. Major swing, okay, there's a pullback, breakout. Okay, so all you're looking for in marking these out, again, from this high, there's a pullback, there's a continuation, that's your break of structure. You're just looking for those pullbacks. Even this area here, that's a pullback continuation, it's a strong continuation. That's valid. Here we have a pullback continuation, and then eventually we see the break to the downside. So we see the full reversal. Now looking at this, I would actually look at this as more of a full swing down and then a swing up. So that's one big move with a new breakout to the upside. Now we're looking at daily, this will probably look a lot more clear. So we'll just go to daily structure quickly. And there it is. We can see these structures a lot easier than we would on the 4 hour, but you can so easy, you can still see these on the 4 hour. There's that breakout, 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 breakout. You can see all these structures are easy to see and mark on this time frame. And even here, you can see we do have a small breakout there, which we're not really going to consider that as a area. We did have one here, but this one looks more of a push down, push up. Again, price would show you that on the chart. But that's how you can quickly and easily identify those areas, by just going to a different time frame. But on the 4 hour time frame, which is one of my time frames of choice, this is where you can start to look for the entries, understanding those areas we want to take a buy off. On this occasion will be off areas of demand, areas of imbalances, all those swing lows in the market. So we just put price back on the chart. Let's go back to this area. We see the reversal. Yes, this is in hindsight. Many people will be saying, this is in hindsight. This is in hindsight. Yes, but this is the best way to show you quickly how to do it. So we're looking first for the areas of demand. So we have an area of demand here. We see price pull back into it and broke away. We then have a breakout. This is another origin area of demand here. Okay, price comes back into quite a few occasions. We have another breakout. We have another origin area of demand here. We don't come back. We have this, another breakout. So we have a new origin area of demand here. Okay, let's just mark out all those demand zones. Again, this is I'd say this was my area. I think there was a bullish candle in there. Then we have another breakout here. Okay, so the last sell to buy move would be here. And then eventually that gets removed. So now if we look at how price reacts here. So we already have this push into this area of demand. And then we break up. Now it looks like what happens here is price finds some area here. We didn't actually go deeper into that demand. Okay, but perhaps it came back and found something there. For me, there wouldn't be an entry based this time frame. Now on an internal structure, we can see that we shift structure here, breaking out this high, which does leave an area of demand that we could draw within this zone here. We expect market to come back too. Now, it does come back and we continue to go higher. Now, we also come back into this zone once again, and we can use this last test as an area we can look for the market to want to go deeper into. Okay, so that's taking out a swing low. Okay, so remember, we're looking for entries off demand zones, off the swing lows, okay, or off the areas of imbalance. And again, the market does go higher, fails to break out. What do? We come back again and we take the swing low. And that's how we end up getting this pin engulfing setup candle. And again, like I said, these candles, you'll hear me say them over and over because they are the best setups. And we can look to target this high and continue further with the trade. So once again, price here does not come back to this area, okay, on the swing low or this area of demand. What we do come back into this time is this area of imbalance. This is what we class the leftover imbalance. The true imbalance is from this close of this candle to the open of this candle. But on this occasion, we can see this is the current imbalance, which is left over. Now we look for the imbalances to hold at the high, the 50% or the low of the zone on this bullish move. You can see price holds at the 50%, lovely on this area of imbalance. And we also take out a swing low where we have this sweep. And then we're looking for the pin engulfing. Well, let's go closer in. What do we see here? We have a perfect pin engulfing candlestick. See, these candlesticks will work time and time again. Now, if we're looking for that swing high first for your target, 3 to 1, then you let the trade run. So again, we have a next zone. We have an area of demand. Price didn't come back to this demand. What we actually did, we actually came back to the area of imbalance left over here. We then also swept this low and we created this pin engulfing stick. So many people may call this a hammer, whatever it is you call it, but we can see we have this candle. I don't personally like the look of it because it hasn't got any body, but again, you can see it works and price does go up. So you'll be looking to take out the high first, just over 1 to 1 and let the trade run. Then we create an area of demand. Now this is the first time I think we've actually seen price come back to a demand zone here. We come into this demand zone, okay, react off it, and we go for the high. And eventually we break out and we see that reversal. Now we got all this information to start with though by going to the line chart to see where we can mark off these break points. All about that breaker structure area that we're looking to trade from. So finally, let's just look where the market does come up here, and we're going to create this major swing. This is going to be our breakout point. We've just broken through. We can also identify within here, we have the other swinging pattern where we can see where a break to downside, okay, market pulls down, breakout, we made a new high there, and then we create this new breakout here because we've got the move down, pull back, continuation. Again, if we went to a daily time frame, I'm pretty sure you'd see this better. Yep, so on a daily, we can identify there's that breakout, push down, okay. There's some more of internal area here. This is more of the pullback and then the continuation. So we do have that within this major swing, okay. So this is what we call the internal fractal swing within that internal structure. So here on the 4-hour time frame, let's now go back to price. Remember, we're looking to see if we have price coming off a swing high, area of imbalance, or a supply. So when you go to look for your areas to take a trade, those are the 3 points you need to be looking to mark up. So first, let's look at this first push down. We go from this high, that's our last buy to sell move. Okay, so that's going to be from this low. Price just about test it to the pip there. Now we also have within that area, we can mark up an area of imbalance, leftover imbalance sitting right there where price does go into it, and we can mark off this swing high. That's more of a push through, pull back. There's no pin engulfing candlestick there. We do get an engulfing candle there now. You can see that engulfs that candle on the pullback, and that could have been an entry that you could have taken. So lower high engulfing candle. The wick to downside is a little bit long, but we can see the market does run for those weak lows and just over 2 to 1 risk to reward. So there's that first area. We then break out again. When we break out, now we do have this as a full area. This would be a valid buy to sell move here. But what we can do, we can refine that area, okay, to the last bullish candle. This last bullish candle here from the swing high, which breaks this structure here to downside. We do pull back. What we create here is then some equal highs of liquidity where we expect market want to run. So the market pushes through that liquidity into our area of supply. Now we have no area here of a swing high because that's above price. We do have these swing highs run here, and we don't have an imbalance either. But you can see this time it reacts off this double swing high and this area of supply. So again, we have another breakout here. What do? This is current price. We mark up the last buy to sell move here. That's our area of potential supply. We then mark off our area of imbalance. This would be an area of imbalance we can mark off. We do also have another imbalance here where prices just reacted off. So the market has pulled back to an area of imbalance. We then have our swing highs. Okay, so we have a swing high here, which has already been run through. Then we have a smaller swing high we can mark off here. And what do we now have created right there? We have created a bearish pin engulfing. So understanding this structure now in the market, what do we expect? Well, we do expect the market want to run this low. You could potentially look for an entry off this candlestick, but let's just use the sell one, sorry, not the buy one. So you could look for a sell of this candlestick, but look at the risk to reward. Just over 1-to-1. The risk to reward is not great enough. So I would not look to take this trade. If this entry had happened up here and we was looking to take a trade off this area, let's say up here somewhere, and we have nearly 2-3-to-1 risk to reward. And again, I've done it. I've got the buy instead of the sell. Got the sell. Let's say we have a sell up here, same sort of signal. We have a 4-to-1, 3-to-1 risk to reward or something like that. That's a better setup to take. So always remember, you look at your risk to reward. Do not take anything under a 2-to-1 risk to reward. So that is how we can use the line chart. Okay, break structure, line chart trading strategy. Then you look for your break structures quickly, then go to your charts. You can then confirm it with price on the chart. You're then looking for those areas of supply, those areas of demand, there's imbalances and those swing highs and lows. Once you've done that, a simple way to look for an entry is just looking for that pin engulfing candlestick. This is a valid pin engulfing, and you could potentially see this run this week low. There's no reason why this couldn't do this. We swept this high, we feel this imbalance, and we could see a drop to the downside. But like I said, it's not in the best location. Back here, we saw some other trades we could have had like this on the way up. Let's have a look, see where we saw a nice looking candle here. We have at least a 2-to-1 risk toward the high, I believe there. And we had a lovely looking candle on the way down here somewhere. Well, one, we had one here. Okay, nice one. And we did see one we were looking at. Where do we see that one? This one here, I believe it was. This is a nice pin engulfing. The pin engulfing is one of the best candlesticks that you can use when looking for these trades. We had another one here out of this area of imbalance, that pin engulfing. This was a pin engulfing. This was off an area of demand. And that's how you look at using the price action, these candlesticks with this type of strategy. How do we improve that market structure trading strategy? Quite simply, we just add in multiple timeframes. So right now we're on the monthly time frame of that USD pair. And what we're going to do, we're going to look at the use of the monthly time frame with the daily time frame here. So we're going to look at applying the daily as your entry chart and using the monthly as that setup time frame. Understanding market structure on both will help you to identify an entry. So we can identify here that the market has been bearish as we break these lows, we pull back, we continue to break lows again, we pull back and we break these lows. So on a swing structure, you can see that we've been bearish. So let's look at this last area on the chart where we break through this low. Let's make this a solid line and a thicker line. So we can identify that we have a nice solid breakout here, leaving this as our swing high. And we have this lower high formed as well. We then continue to make this pullback and we make this low here. So what we're going to do, so what I'll do here is we'll go quickly to replay mode and we'll mark it in from here. So this will be easy for you to understand when we're using that multiple timeframes. So what we're looking at again is this swing structure is this. This is our potential pullback. We're looking for a continuation to take out this weak low. Now we also have within this is internal structure. So you can see the market's making this internal structure. Now, what do we need to see for a reversal is this low removed, then a pullback continuation. So this is how we can look for that early reversal, understanding that reversal of internal structure. So if I just go forward and we'll replay this, let's pick it on a play mode. In fact, let me just speed this up and see if we can break out. Okay, so we look like we may break out here. And as the market does continue down, we look for that pullback. Now, as we break out here to downside, we create this area here, which is our last area. We'll place that as a monthly zone. And let me just pause this a minute. So just to show you what's happening, as we break this structure here to the downside, now we're breaking it. This leaves this area of supply. This is the last buy to sell move. So that's where we're looking for understanding structure. We're looking for that continuation down, a pull back into this area to look for sell to remove this weak low. So how do we look for this? Well, we're looking for the market to pull back first. So let's look for the market to pull back in. And then we'll go down to the daily time frame where we'll apply the same technique of market structure to look for an entry out. And this is how you can look for a much higher risk to reward. Because if you think about it at the moment, let me just grab this. At the moment, we have this area of supply. If we're selling off this supply, we'll stop above the high. To take this low, all we've got there is just over 1-to-1 risk to reward, which isn't really good enough. We need to be seeing at least a 4-5-to-1 risk to reward. So how we do this, we wait for price to come back into our zone. Okay, so now we can see prices pulling back inside the area of supply. Now what we need to do is we need to go down to a daily time frame. This is where we start using the multiple time frame analysis. And we start looking for that area of market structure. Again, we look at the structure, we can see we pushed down, we broke this swing low. We then took out this high where the market is now pushing up to. Remember that. If we now continue up, we get rid of this line. We're waiting for that pullback. And you can see that the market here is pushed up, made this internal pullback. But we're looking for a major swing pullback here at the moment. So this sideways price action and we've broken out. So now we can identify that from here, the market broke this high. We pushed up to this high. We've pulled back to this low and we currently continue up. So that's our swing structure on the pullback. Now within this swing structure, we also have the internal structure. So you have the smaller swings we can see forming here at the moment. And that's key to understanding when you're applying a market structure trading strategy. So let's just go forward with this again. And I want to slow this down a bit because we don't want to miss what we're looking at. So as we continue up, what we can start to witness now is the market has had this swing push up, okay, one swing. And we've also had this bullish movement like this in the market continue up, and we just had a drop out. So if I just go closer into that price, remember we're inside that higher time frame zone on the monthly right now. We're expecting a sell to target that monthly low. Now what we can do now is we can look at this low here and sorry, wrong low, this low here. This is our last swing low, and this is our last buy to sell move. This creates for me an area here of supply. And this is where I'll be looking to sell the market based on this. And we've already been in that trade on this pullback. But you can also look for a swing pullback, because what you really want to be looking for is the market to push away and come back. But what we can now look to do with this is understanding that the market wants to go for the monthly low. Let me just see if we've got that marked. We haven't actually got that marked on this chart. So this is going to be the low. Okay, so that's your low we're looking at on that monthly time frame. There is your end target. Now you can see how this greatly increases your risk to reward. Okay, from 1-to-1 using this zone to 11-to-1. Now on a swing structure, you need to understand that you are still bullish. Okay, so understanding swing structure here, we are still bullish, but understanding this internal structure, we have now reversed into a bearish bias. That's why we can look to sell this market. So let's just play this forward. In fact, let me just go 10 times and let's see what happens. So we pushed away. Now we've pushed back into that market, and that's where you'll be looking ready for that entry. And that push away, that pull back, that would be your best entry. And they would be looking to target this low. Now, obviously, you can look to take partials on the way, but using the multiple time frame analysis, this was your monthly area of supply. We then have the market pushing up into this area of supply and then we're looking for continuation to downside. Now, until we really break this low, we're not going to continue for this low, but we can capture an early entry, understanding the structure, reversing within this swing. Now you can look to take some profits, okay, as the market continues down here somewhere. You can look to take some profits to take the risk off this trade. That means you're then risk free and you can let it run for this final target. It's a great way to protect your capital when you're in trades. So we just let the market run. Okay, so we are coming back up. We've just swept that high, and basically what's happened, we've just taken that high, gone deeper into that area of supply, and we're looking for the market now to take this low. So we just see what happens. We pause that there. So this is our low, what we're looking for the market to take. We've just taken that low. After we see this, we can start to add positions now, because now we've got an area where we've broken this structure, okay, to downside on a swing structure. We now expect the market to continue, okay, to be bearish. So we see this move up, we've broken out, we look for pullbacks, continue until we get down to take out this weak low. So that's how we apply the multiple time frames, and that's how we can increase that risk to reward. So let me just now go forward again. So we're looking for a break, so we get a nice breakout again. So now we understand the market's bearish. What we can start looking for here is those pullbacks. So we have the internal structure. So we have another break of structure here. We have a couple of ways we can look for a trade. We can look for a trade. Okay, there was a trade already here as we broke out internally. Okay, so we have an internal inside this on a lower time frame. There was an entry here. We're now broken out. We also have within here a nice area of potential imbalance, which very often when we see an imbalance candle breaking through a structure level, and there is a video within the channel that goes through that, we can then see a pullback into that imbalance continuation lower. Now what you can actually do here is you can look to place a sell, okay, at the open middle of that zone, place your stop above this swing high or above that high, but I'm going to place it above this swing high because I don't expect price to want to come above there. And we were looking to target again, okay, a couple of targets. This would be my final target. And then this would be potentially looking to take risk off if we enter this trade. So let's just see if we do get entered. Doesn't look like we're going to get the pullback. And did we get entered in there or not? Let's have a look. So the market just failed to pip into that zone. So that's unfortunate. And we've dropped away. Oh, in fact, we've come back up by the looks of it. And we just swept that high. So you can see what happened here. This was a typical manipulation. And the market has gone down. We've actually broke structure. We have a market structure. Okay, we've gone down, swing through. Now that's suggesting that this is creating a new area of supply, but we've come back, okay, we're above that supply into the area of imbalance above, which very often you will see this happen, and we've been triggered. So what we actually have here is another potential setup that we can take. So let me just go. So this trade, okay, has been triggered here in that move. So we just mark that off. You can see where we come in. We've been triggered there. And then we're looking for another push lower. So the market has now continued lower. Okay, so we've made this drop down and broke structure here and broke structure here. See, a nice push down. Now that does leave a nice breakout area here of supply. Now that's an area of supply that I would definitely look to trade off. So I could place my entry here. The reason for this is because we've already come in. Let me just show you. We've pushed up, okay? We've broken through this area of imbalance. We've made this pullback and then we've dropped out nicely. We've wicked through, we've pulled back again once more and dropped nicely down. So this area here of supply is a good zone to trade from. Let me just make this zone darker. So let's just change the field, make it darker so you can see where that zone is. So there is that zone. Once again, look, I would be targeting, and this is how we start to stack those orders. Okay, taking out the weak low. We continue to be bearish here. You can see how the market continues to be bearish. I know this is in hindsight, okay, because we already know the price action, but you can see how this works. Okay, so when we break down, you need to understand how these imbalances will impact where areas of supply are. Now, this basically is an area of liquidity above this high, and we went into the area of imbalance. We didn't come back to test it until there. Now, this is a nice breakout. We've just created this swing high, okay, which creates an area of liquidity where we can see the market go up to push through. So we've just wicked through, and then we've pushed up once again, and now we've entered into this area here of supply. So let me just move this across. Now we've got it in the right place. So there we have 3 trades now currently on. Now let's just see if this is going to continue down from here, and it does. So you can see how quickly we reversed from that level. Let's just get this. Okay, so let me just bring this one back so it's in the right place. So you can see we have a couple of trades. What is this one? Must have been used along. Let me just put another short one on here. That's the one we used. And then bring that down. Okay, so you can now see there is our entry, okay, off this level here. So we've got a over 7 to 1 risk to reward. We're looking for a 5 to 1 risk to reward here and an 11 to 1 risk to reward. Okay, so understanding the market structure technique, we're going from multiple time frames. We started with that monthly time frame, okay, with this area of supply. We knew we was in a bearish trend. We've pulled back into that area. We've watched the internal swing change, okay, with market structure, and then we've looked at the major swing change. So yes, this one is a early entry and it's more risk because it's not actually broken a swing structure. Once we broke through, any trades now we can start looking to take are going to be good trading opportunities. Let's just see if we can run this low. Okay, so the market's just come short of this low. Something I'd like to just show you here as well. When we see these markets run these lows like this, what this is doing is bringing in those traders. So just bring us across. So this is just front running this low, meaning it's going to bring in those traders to want to buy this market, thinking it's going to reverse and go up as we didn't take out this low. And what's going to happen, it's going to push up into an area of supply. And what do you think we have sitting right there? Another entry you could take here, understanding this, okay, off this area of supply, again, targeting that low because we know the market wants to go there. And this would be just around a 2 to 1 risk to reward on that trade as well. So this is where your entry would be. Now, it takes time to understand what's happening here when we see all this and understand why this area of supply works. But basically, we broke this structure, okay, broke through, came back, swept this high, okay, took out any liquidity there and dropped down on a nice drop. This is the nice drop to downside, which makes you understand that this is where the money came in. This is where it pulls back. And what we have is this smaller high, which is engineered to create that area of liquidity to take this high to push into this area of supply. Now, I'll do more videos on liquidity later on, but understanding this, you'll hopefully understand what's happening. And this front run of this level means it's just bringing in those buyers to push up this liquidity into this area of supply. So now we should expect this low to be run. And there you have it. We've run that low. So look, you've gone from being able to understand the monthly time frame here to make 11 to 1 risk to reward, a 7 to 1 risk to reward, a 5 to 1 risk to reward, and a 2 to 1. Now, as price goes lower, these risk to rewards will get lower as well. But you can start with getting these first trades, okay, from the high. And again, like I said, this can be applied to a 15-minute and a 1-minute chart. It depends on your risk appetite, depends on the time you have to trade. But most people who want to trade part-time using this type of strategy, understanding you can use multiple time frames for market structure trading strategy, you can apply this to a monthly with a daily entry and still make these types of gains. And that's how you can trade like this with a market structure. Perhaps you struggle with that top-down analysis with a market structure. Well, that's exactly what we're going to go through right now, how I do my top-down analysis with the use of market structure. So keep watching if this is going to help you going forward in your trading in 2024. So first, we're on a monthly time frame here of the EURUSD. We will drop all the way down to a 1-minute time frame here, show you how easily this can be done. It is a fractal nature when you're using market structure with a top-down analysis. Now, I'm not going to take too much time in this video today. A quick to the point video for you to understand how you can use market structure. So on the way up here, we can see this market pushes up, pulls back, continues up. Now, many people are looking at all these structures here. Yes, these are structures in the market, but they are not your actual break of structure. The break of structure comes at the break of this low, which means we go all the way down to this low here, where we break out of this low. These lows here in the market, these pushes down are all internal structure. They do not break out of this low. Then we have this pullback. And once again, we have this drop down, this pullback. This again is not the break of structure. This is your break of structure here to downside, and this is our current pullback. So this is how you look at marking out your structures in the market. So we have this higher low in the market, this higher high, a new higher high, and until we break out of this low, which comes right here, we then create a new lower low. Now that lower low is only confirmed once we see the reversal back to the upside. We create this lower high, which is confirmed once we have another break of structure to downside, creating a new lower low. That is all we are doing here when we're looking at market structure. So on a monthly time frame, we can quickly look at this chart, identify that we are in a bearish bias. Now all this structure within here, yes, we can use, but we can use on a lower time frame as well. So we now drop down to a weekly time frame. So weekly time frame, we can zoom out and we can see all this structure within. Okay, so we just look at this current era on a weekly. We don't need to go that far back in time. We know this is a push down here. Okay, we have a pullback, we have a continuation, and we have a pullback. So on a weekly time frame, we can identify from this move down, we have a break of structure, okay, a pullback, and a break of structure, okay, and a pullback. Now within these swings, and yes, I know on a monthly, we were not including this swing, but this on a weekly, we would include. Now, if we look at these moves down, okay, we're in that bearish bias. So we look at these last moves down here, we go closer in, we can also identify we have this structure within. So let me just mark this out. We have this push down, a break of structure, a push back up, pull back, another break of structure. Now we do pull back, but we don't break structure to the upside. So this becomes our last line of defense as such. We break out of this low and then we pull back and then we see these structures within this trend to the downside. And this goes all the way down. Okay, we don't break this low, so we go all the way down here. And then we have a break of this high to the upside. And eventually, well, we don't break there, so we go all the way up to here, and then we break this low. Now, we don't actually break this low either. We've only swept that low. So if we look closely here, we just take that off again, and we mark out this swing low here. Okay, well, we did actually. We just broke through that candlestick. Let's go closer in. Okay, this is a valid break of structure because the candle closed through. Now, to start with, it was a sweep of this low. So this is a valid break of structure and a valid pullback. So when we see the market pulling back from here, okay, we're going to have trends within these areas. We have structure within this pullback. We can start looking for potential shorts back down to take out this low. Now, currently, we can also identify how the market is creating a trend within here somewhere. And currently that trend is holding. So we've only swept that low here on the weekly, and we could see a push back up to remove this high. So it's understanding these structures is key. Okay, so on your top-down analysis, we are bearish on the monthly. If we look at the monthly time frame using what we saw on the the weekly time frame, we saw on the monthly time frame, you can see where we have this push up. Okay, the break of this structure here to downside was here. Let's draw that again. We'll actually draw a line now just to show you this. There's our break of structure. We then have a new pullback, and this becomes our new break of structure. So there is our monthly, okay, continuation of the trend. Now, when we go closer in, we can start looking at the weekly trend here. It was bearish, we went bullish, and then we turned bearish when we had this breakup. So currently, we would say we are bearish on a weekly. We could then mark off this as our potential strong high. This would be our week low. Now, of course, if you want to learn more on how we do all these markups in the upcoming NFXT Pro community coming up very soon, you can actually follow along with the daily markups. So if we now go down to the next time frame, which is daily, we know we're bearish on those time frames. We look at the larger swings again, we can see those on the daily chart. It's always important to actually zoom out to see what's going on. If we go closer into price, we can start to see a different picture. So these were the swings we saw on the weekly time frame. Now these, and this would be the actual push down on the weekly where we broke structure, okay, to this area here. So we mark that out quickly. This is the low that we've seen the weekly breaking out. This would be our weekly, okay, strong high and our week low. Okay, so we expect the market to want to run that low. Now, if we look at structure now on a daily, we can identify our swings were bearish here on this move down, as expected. Then we broke to the upside, breaking structure. We broke out again. We broke structure again. Okay, we broke up. Then we had some smaller structure in here. To be honest, I'm not going to look at that as a swing. This is more of a swing pullback. Then we break out this high, and we've just broken out that low with that bearish candle. So you can see we broke this low here. So again, we have a bearish bias now on a daily, but we're having what we call a swing pullback. So what I mean is we have this full swing to downside is now potentially making a pullback because we broke structure. Now, if we look closely here, we can also identify within that area, we have this structure here where we see the market breaking to the downside. So you have structure within that swing to downside. This is where many traders do not understand reading market structure. You're going to always have that internal structure. There's some awesome videos already done on the channel, goes through reading these structures, the different structures with swing structure, internal structure. Now, when we look at this move down, we now go to the 4 hour in a moment. We'll say on a daily, we broke this structure here. So that now means we have a potential strong high and a weak low is sitting here. So that now tells me is that the weekly is bearish, the monthly is bearish, the daily is potentially bearish. So we go to a 4 hour. We do the same thing. Okay, we can zoom out. We can see where that daily move was. So we can see the swings here within that move. So if we look at this, we can see we have a push down, pull back, we have a push down. Now we do have a smaller breakout, break higher here. Okay, but it's just a push down here eventually, and we break out lower, pull back, we break out lower, and now we've broken to the upside and we're starting to put in a bullish reversal. So let's go closer into that price. So currently on the 4 hour time frame, we've just broken this structure. And again, look, we broke this low here to downside, pull back. We've then broken structure to downside, and now we've broken the upside. That is a reversal in the market. Now, it's not a reversal to actually buy. It's a counter trend reversal. The reason for that is because on a daily, we saw a break of structure, and this could be what we class as swing pullback. And this is our internal structure on this move down showing us that reversal. But on a 4 hour, okay, those are 4 hour swings. And then we're going to have the internal swings within here. We can see these moves up, okay, pull back, breakout, pull back, breakout, pull back, and we're looking for continuation. Now, we'll be looking for the market to want to run this high next, because that's our area of potential supply where we broke structure here to the downside. Now, we're not going to talk about supply and everything at the moment. We're just going through the multiple time frame analysis with the market structure technique. So right now we have a bullish bias, okay, on the 4 hour. We've broken to the upside and potentially we could have a swing pullback and a continuation here at some point. Internally, we're still bullish. So the internal structure, if it remains bullish here and continues to be bullish, we will see the market continue to push higher. Until we see that market reversing, we will remain bullish. So we're currently bullish on the 4 hour time frame breaking up. Now we can drop down to the 1 hour, but to be honest, on the 1 hour time frame, you're going to see a very similar situation, because on the 1 hour, you're going to have the break of structure here to downside, the pullback, the break of structure, the break to the upside, pullback, continuation. So we're not going to see anything really different on the 1 hour, and including the 30-minute as well. So I tend to drop straight down to a 15-minute time frame. This is my time frame of choice I like to move to now. And we can still identify those swings. Okay, we have this high to this low, the pullback, the continuation, the breakout. Okay, so we can still see that reversal we're seeing on those internal swings there on a 4 hour. We can do this on a 15 quite quickly as well. Now, again, when we're doing our top-down analysis, it's important for us to look at our swings in the market. So we look closely at price here. And if we look at the market, we can see we've got this internal structure breaking out, okay? Pulls back, continues up, pulls back here. So we have to break out this high, which we may have just broken it there. We pull back, we've broken out. Okay, we do have some smaller swings, but we do go all the way up here. Okay, you can see we have a continuation. So the market we're expecting to continue up. So even though we have those swings there, if we go closer in again to price, we can also identify our internal swings. We have this structure within. We can see here moving to the upside. So you can identify how the market creates those structures within. Oh, just grab the wrong tool. Let's just back that off. So looking at this chart at the moment, we are bullish. Okay, so the 15-minute is bullish based on our low. We've broken this structure, higher low, higher high, higher low, higher high, looking for new higher low if we continue to break out this high. Now, as well as this, we have the internal swings within here and this section within here. But for the swings, we can see that as being a bullish bias. So currently bullish on a 4 hour, bullish on a 15. Now, if we go down into this section of price, let's mark this out. And I'm going to have this so we can see it on a 1 minute, that is. So mark it out. We'll go down to a 1 minute time frame. We don't need to go down to the 5 minute, mainly because it's going to be similar to that 15 again. So let's look at price here. What do we see? So we go closer into our price. And again, we can do the same thing here. We can zoom out and we can see the movements where we have price breaking structure, pulls back, breaks out, okay, pulls back, breaks out, pulls back. So now we do actually break out. We do break out lower here, then straight away we go back bullish. Now the market does pull back all the way to here. We only sweep this low and we break up higher. So what you could actually use here is a full swing from here to here. When you're looking at this type of market, let's move this across. So your actual move could be from this high to there, and then we'd have to break this low, which we may have done here. We have to check, but then we go all the way down to here. Okay, and then we have, oops, let's do that again, and we have to pull back, okay, to this high. So looking at these swings, what I mean is we've got this low here, we've just swept it. Okay, we didn't close it. So because it's a sweep, we remain bullish. This breaks out this high. Okay, now we do pull back. Again here, we only sweep the high, we don't break out. So it's not a valid breakout. This is our valid breakout point. Let's remove that off. Okay, so when we move back here, this is a valid breakout point to the upside, which creates this low. But I'll pull back, okay, from here. Does not create a high because we don't break out. Okay, we do break out here to the upside. We pull back, make this sweep, and then continue higher. This is where it's very confusing with market structure. But this is all internal structure within here. Our main swing structure is going to be from this low all the way up. So at one point we saw this breakout, we saw this pullback, okay, and we swept, we didn't break out. So this remains bullish, and you could take a trade from here to go back up to take out this high. It's very, very confusing. If I go through it once more for you, this is our main swing low. We did break structure here, and this became our high, was broken up here to the upside. Valid breakout creates a new swing low. Now we have a pullback continuation. So you could draw this out, okay, as a pullback, a continuation. But either way, we'd have to see this low broken and closed through for a reversal. So whether you draw your swing from this low or from this low, it makes no difference, because at the end of the day, Okay, the market, and again, you could just use this as your swing high. The market has to break out of this low. Okay, so understanding this technique is going to be key. Now from here, okay, the market never goes lower. It's just gone up and we've just broken out to this high. So you can see then how the market is making these swings and then we've broken the structure. But within this breakout here, okay, and this low, we have all this structure within. Now, the best thing to do here is you're either looking for a pullback to go short, okay, or you're waiting for the breakout again for a pullback to go long. Now, going back what we went through on the 15 and the 4 hour, we knew we were already bullish. So if we know we're bullish on those time frames, wouldn't it make sense to only look for buys again? So if we've broken structure here to the downside, we just want to wait for the structure to be broken back to the upside. That has now happened, which means we wait for the pullback continuation. Now, the best thing for that is to watch the 15-minute with the 4 hour and then look for those 1 minute to shift in the same direction. That's what we've just done. So that's how I look at my top-down analysis from that monthly time frame all the way down to the 1 minute. Now, I'm not saying I actually trade the 1 minute because I don't really trade the 1 minute. 5 minute, 15-minute is my entry time frame. Now, in fact, I will share in a moment a current trade that I'm in on this pair, so you can see how I've done that top-down analysis. Let me just zoom in closer here. Okay, so we have this area here on the 15 where we broke structure here to the upside. We never broke out again. Okay, so this becomes our high, this becomes our pullback, and that's our continuation. Now, when we go for our internal structure here, what I looked at was the fact that we made this sweep. Now, what did I say a minute ago on the 1 minute? If we have the market making a sweep, we can look at that as a continuation because we never closed structure here. So our internal structure is still bullish. We then break out of this structure here to the upside, leaving an area of demand. We have caught my entry and the market's gone to the upside. That was one trade that I've actually taken. My second trade I took here was after we had this sweep through this low here in the market, reversal, and I've taken an entry. Now I did also take a losing trade here. We just moved this across. I tried to take another trade off this candlestick and I actually got swept out on that move right there. Now you can see the actual trade idea that I was looking for at that point was a great idea. I was looking for the continuation here to take out this high. So the actual trade idea was a very good idea. Since then, the market has held and we're now continuing back up. So understanding, reading the candlesticks, reading your sweeps, everything else is what matters. Let's have a look at this actual trade I was just talking about that I took down here and the trades I took here. So you can see the trades I've actually taken as well. So I'm on my MT4 platform at the moment. And I'm just wanting to go through really and show you those trades I've taken. You can see this is the first trade that I took. This is that area here. I took the entries off, okay? This is my first profit target. I took a profit target here. Take off profit at this area. This is what means a totally risk-free trade. Now you can see that the market has continued up. I've got my final target sitting up here above price and I've locked in some profit, which I'm going to be moving this stop higher up soon as well. This is current price level, you can see. So I have this second trade here, you can see as well, where I've taken my first profit target at this high. That's putting me into a risk-free trade as well. Okay, and then I've taken my second profit at this swing high as well. This is where I'm looking for price to run those highs. Now, I've also tried to take an entry off this candlestick. You can see that's why I was saying I got swept out. There was my losing trade. Okay, that's why I took a losing trade. I had a profit target set at this high, okay, and I had a further high for the next profit target, which would have been hit on this move up. So unfortunately, this trade didn't work out, but I've also already risk-free in this trade, profit already taken, also have some locked in, which I'll bring it up higher soon as well, as we see a continuation with price. And also took some profits on this trade here. So to take a losing trade here with these profits already taken is very good risk management because I knew that I was already in profit to take this trade, even if it was a losing trade, which it was. Now, I personally would have taken another trade if I'd have seen this sweep. I wasn't at my platform at the time, but that's how you start reading markets with the candlesticks, the structure, and supply and demand zones. So these are areas of demand that are taking price off. using the years of experience that I've got. So this is how I look at doing my top-down analysis. I've shown you as well a trade here. So how do we draw those supply and demand zones? Well, today I'm going to share with you the exact process to make it much more simplified for you to draw those zones. And this is designed for beginners, but also people who have already been trading supply and demand for a while. So I've got on this chart, you see I've got some candles I've just drawn for you just to demonstrate to you this simple way to mark out and find your zones. Now this will show you an area of demand. Now the opposite would be the same for an area of supply. Now, as you can see, I've actually made these candles all the same color. The reason being is because we don't really want to be looking at our supply and demand zones at the moment with those colors. I will show you exactly how you use the colors of the candles to find those zones, understand them as we go on to the actual price chart. But right now, let's just look at how we find those zones. Now, the easiest way for you to find the zones is to understand market structure. Now, if you're not sure about the use of market structure, I do suggest going through and watching this playlist, okay, on market structure within the channel. Go through all those videos. It's going to help you to understand everything to do with market structure. Then watch this full playlist as well on supply and demand, all going to help you. So for an area of structure, we need to see a previous swing high. So we can see we have a swing high here. This high was higher than this previous high and just above this previous high. So we can mark out here a area we can have as a break of structure. Just make sure that it's lower. And this would be our breakout point. Let me just make this a dashed line. So this is where we'd be looking for the market to want to break to the upside. Now this candlestick here shows us the break of structure of this previous swing high. We have this current swing low, we pushed up, we pull back, we make a new higher low when we break to the upside. Now, once we see this breakout, this creates our area, okay, of demand. And then we look for the continuation to break again. Once we break out of this level, we create a new area of demand. So as we continue to break those structure points, we look for new demand to be created. So we have a swing low down here. We have a new high created, a higher low. We then break this structure to make a new higher high, and we pull back, we make this new higher low, and then we break out and we currently have a new higher high forming. So we're going with the trend here. If I mark it out with an arrow, you'll see that we have a break to the upside, pull back, break higher, a pull back, and a break to the upside again. So we have a bullish bias, a bullish trend. And this is how we'd start to look to mark out our areas, okay, of demand. And the same when we're looking for areas of supply. Let's remove all those off. So when marking on areas of supply and demand, well, we're going to mark them off and we just make this a daily zone. Okay. So when we mark out an area of demand, we're looking for the last bearish candle when we're drawing an area of demand, or the last sell to buy move for area of demand. And we're looking for the last bullish candle or the last buy to sell move for an area of supply. On this example, we're just looking at area of demand, but don't worry, because I'll go through plenty of examples in the moment on the actual charts. So let's look at the last sell to buy move. Well, we can identify here, this is a bullish move up, okay, but this is a pullback. And this is our last bearish candle, okay, in the sequence. We just do that again. So this is our last sell candle, okay, to the downside. We then push up here, okay. This is then a bullish move up, right? So we can see that we go from a bearish, okay, push down, and a bullish move up, which breaks structure. This means this is our last sell candle in this sequence, because this is a bullish move, bearish candle. Okay, so we mark off our area of demand from this bearish candle, where we look for price once we break out to pull back in, okay, looking for an entry to go long to take out this high again. Now, this is just showing you really a quick demonstration of what you'll be looking for. Looking for that last sell to buy move to create the area of demand. And the opposite when we're looking to create an area of supply. This is the most simplest way for you to mark your zones on the chart. Okay, use this process and it's going to help you. So leave them on. Now again, when we break this structure, we have the same thing again. We have this as our bearish candle to downside. Let's just move that over. Okay, we then have this as another bearish candle. And then eventually we have this bullish candle to the upside. And let me just move that over. So you can see that the market pushes up, pushes down. I can do the same thing. I can show you this. The candle goes up. Mark that off. Just so it makes it easy for you to see. So we have a drop down, push up. So last sell to buy move. Hey traders, we'll go back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. Then we have the last sell to buy move. So understanding the last sell to buy move, we would have this as an area of demand again, the full demand. Now you can also refine these zones to the last actual bearish candle being this one. And very often you will see the market want to pull back into that last bearish candle and push away. Now this all depends if we have an area of imbalance sitting there. And if you're not sure about imbalances, don't worry, there is that full playlist. What's the market structure, the imbalance playlist, okay, they're all going to help. So right here, this is where we have a new demand. Again, this is our last sell to buy mode. So you could expect the market want to come into here, but we can also refine that zone. Right, so that's how we simply look at drawing out our zones. Now, again, the opposite would be the same, looking for the area of supply. Just you'd be looking for, instead of the last sell to buy move, we're looking for the last buy to sell move. Now, that will make much more sense when I do this on the chart. So what we're going to do now, we're going to go away from this, and we're then going to go to actual price chart, and I'll show you how we do this on a price chart. So now we're on the actual price chart of the US dollar CAD. It is not one of the best pairs to do this on because it's a very ranging pair. If I actually went to the monthly time frame and see how bad this is. So you can see that current price has been in a big sideways range for some time. Again, if we go down to weekly, even if we look at a weekly, and I just get my drawing tool, even the weekly has been in a very sideways market on its own. So finding good supply and demand zones is not always the best when we see in price like this, but if we was to quickly look at what happened here, the market did break this structure here to downside. Okay, what do you see? We see this is our last buy to sell move, okay, of supply, but we could refine that to the last bullish candle, okay, in sequence, and even to the last, okay, open place of that bullish candle. So you can see where price has just come in, tapped in and gone sideways. So there's an area of imbalance here needs to be filled. That's why I've marked it there. So we have an imbalance here that the market would want to fill. Now that does mean when the market comes into here, to see a reversal, really we want to see a reversal of this low here in the market to show me a continuation. But there is ways we can look for these reversals out of these areas. Okay, we can go down then to a lower time frame. But on the way down here, we're going to have this breaker structure. We do have very, very small actual breaker structure there as well, which creates this area of supply. And then we do have this breaker structure that we could draw. Okay, but this looks more like a swing, okay, than this little one here. And then we continue down. You can see we have more minor breaks of structure in here. And then we break structure here. And then you can see that we break out here. So when we see this break to the upside, we can look at the last sell to buy move. Now on this occasion is this move here to downside, and we drag it across. And if I zoom in, so you can actually see, because that was a bit small even for my eyes. So we can identify here, this is our last breakout area. We break out with that candle. Our last sell to buy move is this sequence here to downside. And then the market pushes out to the upside. That does mean that you need to be aware that this full zone could be an area where price can reverse out of. Now, if we actually refine that zone, we need to look for a reason to refine the zone. Now, we do have a leftover imbalance here. which means that I would be happy to look to refine it to this candle. Thinking the market may push into this zone and perhaps fill this imbalance, because we also have a rally base, rally zone here that I could draw at the same time. This zone here. Now, a rally base rally zone is going to come up later in this playlist, so keep watching through these videos. They come up. You're going to have the rally base rally, drop base drop that you can learn within another video. So we can see that that is a zone what holds price. And then what we do is we continue to look for the market structure to break. So we break out here again. And the last sell to buy move at the current breakout is this move here. And our last bearish candle would be this candle right here. We have a leftover imbalance. That's why the market pushes down and then pushes away. Now, if we was looking at the actual origin move, this is my last sell to buy move. And you can see again that the market does break out and pulls back into this zone. And we've done the same thing. We've used a rally-based rally zone within this zone, again within this zone. Now, if we did refine it down, we will be refining it to this candle. And as you can see, the market's come back twice already to test that. So we're not expecting it to want to come back to that area once again. And even here, we do have a small breakout of internal structure, and that's what holds price up here. Now, I know this is becoming quite complex. We've got a lot of zones on the chart, but what you need to understand here, we have internal structure here, where we have a breakout here to the upside just, which leaves this area of demand, this last sell to buy move, where price comes back into and pushes away. Now, a lower time frame, that would be much more clear. So we'll remove those zones for now. So again, look, you're just following that structure, another structure break. Okay, and again, this will be our last sell to buy move. Okay, on that move, and then we have this last sell to buy move, and I would call that rally base rally. And again, we could draw this out, and you can see this where the market comes back into, we bounce back away. In fact, we do that on a couple of occasions here. But we have internal structure here again, we break out, leaving this area of demand, which we could draw out for the market to come back into. And you can see how the market will stack those areas of demand on top of each other. It shows you the bullish intent there. So current price is bouncing off these demand zones, showing us it will continue to go higher. So for any reason to go lower, we really want to see the market run through this level to show us that reversal. Now that's on the actual structures we're seeing. So that's how quickly and easy you can identify, draw those zones. Now, if we go down to, let's say, a 4-hour time frame, and we look at the current price here on a 4-hour, forget what we just went through. If we're looking at current price on a 4-hour, we can see the larger swings here. So we can identify a breaker structure. Okay, a breaker structure here. We can quickly identify a bullish trend. Our last sell to buy move. Okay, in fact, we do have a break of structure here as well, or is it just swept? It's just like I just may have broken out of that candle, and that would have left me a area I would draw of demand here. Okay, so this is more of an area of demand where we can see price pulling back in to fill this imbalance. We go deep in, we push back out and break structure again. Now this is in fact the last sell to buy move, is that small candle. Looks like it went smaller, went lower, sorry, on this. Yeah, so went low on this candle, makes that smaller zone. Price hasn't come back to that. So there's a fresh zone. There's a possibility we could come back into that. We also have an imbalance. So this imbalance here is what held price. We broke structure. My last sell to buy move is this area here. Okay, we can see that price is holding at that area of demand. So we're always going to find an area of demand price wants to come into. Okay, we break structure. This is my low of the move. This is my area of demand. We actually remove that demand. So we also have on the way up here internal structure, more areas of demand. So we have the last area here, demand. We have rally base rally demand there as well. But at this point, we now know that on a structure base, we broke structure to the upside, we broke it back to downside. That means from this high, okay, this last buy to sell move here in the market, I think we are just high. Yeah, we're just higher there. And we could refine that to the last bullish candle. The reason being, we have this big area of imbalance to be filled. So what we can look for here now is the market wants to come up into this area of supply for another sell. Now, the reason for this is because this is the origin of the high what broke this structure low. We have a leftover imbalance within this candle. And again, like I said, go through that playlist on imbalances. You'll understand what imbalances are. We could see the market want to pull in and drop back away. That is understanding structures here, going with the structure. Okay, we broke structure here just with that candle. We swept through the low as well, overhead to left, and we're slowly pulling back against this move to downside. This could be, okay, the start of the reversal, and that's coming out of an area here of supply. Perhaps potentially, let's get my crosshairs. So yeah, we could have an area of supply here on a 4-hour. Our last buy to sell move is here, where price is reversing out of. Now I go closer in, you can refine that to the last bullish candle if we have an area of imbalance to look for. But my area of imbalance is in fact down here. So on this occasion, I probably would leave it off this zone because this is the area of imbalance. Now you could refine it off this candle like this. Okay, there's the whole zone, whichever you wish. There's the area of imbalance left over, and that's where you look for price to come back into. Eventually we push in. That's where we see the market push in deeper once again to area of supply. Now we could go higher yet and push through this full zone to the left, but we're currently looking at the zone which is created here on the push down, breaking this structure. Now how do we look for the reversal out? That's where we go down. We understand the confirmation entry, and there will be a video within this playlist as well going through how you look at that. But that's how you would simplify looking for your zones. Okay, we're just looking for that breaker structure to use that origin zone. And if you wasn't sure how to mark them up, go back to the beginning of this video once again and just look at how I use those candlesticks to mark out that area of demand. And again, we'll just flip that over to do your area of supply. Very, very simple. Do your supply. If I go over here, we look for the area to be broken of structure. Let's say we're using this as an area to be broken. Okay, there's a move down. Area of supply would be this last buy to sell move, basically meaning these last bullish candles to the move to downside. Okay, that's my area of supply. Now the market never came back, and we continue to break structure. We then broke structure here again. Now this time we have the last buy to sell move here as an area of supply, and that's the area of supply at held price. And again, that we could look at refining the zone. Now, if I was to refine this area of supply, I'd be looking for, we have an area of imbalance left over here. Okay, so I'd probably be looking to refine it to this move on these wicks. The market comes down, we just push in, okay, and we push lower. That's how I look at refining that zone. And again, we then have another breaker structure to the downside, leaving a new area of supply. This will be our last buy to sell move. We can drag that across. Let's bring this one back. Okay, so you can see the market pushes down. Do we have an area of imbalance? We have a very small area of imbalance there. So again, I would bring it up to this candle as my area to refine the area. You can see the market comes in, we push in, we sweep above this high, and we push down. That's the quickest way for you to mark out your areas of supply and demand. So you trade supply and demand, but you struggle to find those best zones. You tend to find the zones you mark, you end up having losing trades. So let's go through that today and let me help you to find those best supply and demand zones to trade from. So on the Euro USD pair on a daily time frame, first let's go through the structure of understanding how to find those best zones to look to trade from. So let's say we're in a bullish market. We're seeing the market coming down. Okay, we create a reversal and we're making a bullish market to the upside. When we're looking for those best zones to be trading from, we're looking for the origin. Okay, so the origin move where we see the low point where the market continues higher. They are always going to be the best zones to trade from. They are the zones you want to be marking on your charts. Now, I will show you what I mean when we go to the live price chart, but we're looking for the last sell to buy move for the area of demand, or the last buy to sell move for the area of supply. It's as simple as that. And once you find these zones, they're going to be the most highest probability areas to trade from. They're going to be the highest area within that swing pullback where you want to be taking a trade. So understanding this information, this would be your swing pullback. Okay, let's bring this one down. New area of demand. Again here, this would have been your swing pullback. Let's mark it out as well. And okay, so let's say it's here at demand. So this is how the demand sequence would work. And you would see the market creating higher lows in areas of demand, breaking structure each time. Now you're going to see this much easier on a price chart, but that is the basic form when looking for the best zones to trade from. Just remove all that. So let's go to a price chart, and we'll start from here going to current price so you can see exactly how we look at marking the zones. Now there's two ways we can look at marking zones. One is that swing structure, another one is our internal structure of that swing. Let's first look at the swing structure, how we look at marking the zones. So let's say we have the market creating this last push here to the upside. Okay, now you can see where we have this break of structure here. Okay, I'm going to leave this here for now. Where is the best place to mark the area of demand? Now we just went through that structure, okay, to show you the best place to mark out these areas of demand. This would be your last sell to buy move. So this would be an area of demand that I would draw out. Okay, that's the zone that you want to have on your chart. The last sell to buy. Okay. Now, if this was a bearish candle here as well, this would be the full zone. Now, I'm not saying you're going to mark that on your chart, but you're going to have it at the back of your mind that if price comes here, okay, we could see a reversal out, understanding the internal structure of that swing. But this is in fact our last area of a sell to buy move. So that is our origin area of demand. So let's now just go back. Okay. Now you can see price does come into that zone. Now I know this is in hindsight, but this is the best way for you to understand how to apply this. So let's now go back and look at this full swing. We have the market pulling back. We push back up again, break structure, pull back, and we break structure again, and eventually we actually reverse. So once again, let's go closer into the market. When we see this breakout here to the upside, where is your last sell to buy? Well, here's your last sell to buy move. That became your area of demand. You can see price comes in, okay, and reverses out. Once again, we see this push up from this origin move, okay, where's your last sell to buy? Well, this is our last low in the market, okay, like we have this low here. This is my last sell to buy move. Now we in fact have a reversal here that you're most probably going to find a good entry in a lower time frame, and you could have caught all that move up. But understanding this is the origin zone, we see the market comes down, we have a bounce, and then we have a straight close through. Now you're going to find that you will lose every time the market makes a full reversal. There's just no way of knowing for sure that this area is going to hold. We expect it to hold, and there's no reason you can't be trading this on the way down the lower time frames for profit within that swing. But when we come here, the likelihood the market's going to reverse and go back up is much more higher probability off this higher time frame than would be if we was trading, let's say, a 1 hour time frame trend here to downside. The 1 hour is not going to remove the daily area. Just remember that. So that's how you'll be looking at those areas here at the upside. Now let's look at these last two swings, okay? We have an area here of demand. This price held and we push back up. We have another area here of demand as well, okay? And the market pushed straight through. Again, it's a reversal and we have an internal structure here. But my point is, if you was looking at trading this, you would not want to be trading off these zones, because these are not the best zones to be trading from. The origin is the best zone. Always have in the back of your mind that where's the swing formed? Okay, this is where the swing formed. This is where the move went up. Again, here, this is where swing formed. If you're looking to mark off all of these moves here as areas to look to trade here from, that is not going to work, and you're going to have losing trades after losing trade. Stick with the one zone on that time frame. Forget all these, okay, to trade from when you see the pullback, especially once we've broken through those highs. On the way up, okay, yeah, on the way up, we can look to trade these zones. Continuation until we remove that high. That's fine. But when you see this pullback here, we're not trading off this zone here. Okay, we're trading off this one only. Just keep that in mind. So that's how we look at this swing structure, okay? So let's now actually take a look at this area of price. But before we do that, for the internal structure side, let me just do a sketch for you first. So let's say we have the market now in a bullish trend, and we come back down into this area of demand, and we see the market doing this. This is then where we can see the internal structure, okay, heading back up to eventually remove this high. That's what we're potentially looking for. So we have a higher time frame area of demand here. And then we break structure back to the upside. You're looking for your origin zones. Again, just like we saw in the swing pullback, you're looking for those internal swing pullbacks. Continue with the areas of demand. And again, you're looking for the last sell to buy move on each of those areas. That is all we're seeing here at the moment. Now, the only difference is this isn't coming off a bullish area of demand. It's just a retracement. You can still trade these the same way, but it's going to be much, much more risky unless you understand what the market is actually doing. So right here, let's look at this. Let's remove this. And I'm just going to draw in the actual areas of demand so you can see this with demand and supply. So last area of supply is here. Our supply gets removed. We have, okay, this is actually our last sell, okay, there. Our last sell to buy move, but we refine that to that last area down here. And we can see the market, once we broke this supply, we came back to demand. Now, whenever we see these sort of reversals, we want to be looking for the next structure ready. So where we see again, the sell, okay, to buy move, we come back in this demand zone. We're going to refine that once again now to here. But what you need to remember is that the market could reverse off this area. And what is that actually going to be? That would be our area of a previous area of resistance structure in the market coming back to act as an area of support. When we pull back into this area of demand again, okay, we have another break of structure. Our last sell to buy move is in fact this full move here. And that's why we see the market coming back and will react and continue high. Now, if we refine that, it would be here. But you have to have in the back of your mind a previous area of resistance could become support, which is a structure shift reversal. That's why we look at the last sell to buy move of an area of supply and demand. Again, our last area here is this move here, our last sell to buy move. And again, we can do the same thing, our last area of here. Again, I'm going to mark it off from the low. I'm not actually going to mark it like this, I'm going to mark it off from the low. And again, this would be your full area, last down move. So again, you could look at this as a previous structure break, retest, continuation. Now, again, we'd always look to refine it, because really we want to be looking for a trade to come off this zone here. So the deeper the pullback, the better, all depending on the size of the swing as well. But just bear in mind that these levels can have price react at them. So that is how you look at that reversal. That's just what we went through on that diagram. So if we were looking at like as a structure point of view, this is your structure. And this is how quickly that you can identify structure in the market. You don't need to make this complicated, okay? Use this simple structure technique I'm showing you in this video with those best supply and demand zones to trade from, and you will do absolutely fine. Now, if you're struggling with your supply and demand trading, you're taking loss after loss, you're finding that every time you enter an area of supply, the price just smashes through and you have another losing trade. And don't worry, because I'm going to go through the 3 types of institutional supply and demand zones that you need to know and add these into your trading. Now, the 3 types we're going to look at is the range zone area of supply and demand, the pivot zone of supply and demand, and the fractal zone of supply and demand. Now, what I recommend straight away is that you stick with the pivot zone. We'll go over that in a moment. Let's start off with the range zone. Now, a range zone of supply or demand will be created by a cluster of candlesticks. That's where we call this the range zone. And we're going to see price dropping out of that zone, leaving us an area of supply, or we're going to see that rally out, leaving us that area, okay, of demand. Now, we want to see a strong close out of that range. That's going to identify to us it's a good area of supply or demand to trade from. Now these ranges are going to most likely show on a higher time frame the pivot zone, and that's where the pivot zone comes from. Now the pivot zone is where we're going to see those last buy to sell candles. Okay, when we're looking for an area of supply, it's going to be a buy to sell move, and we're looking at an area of demand, it's going to be a sell to buy move. So what that means is when we're drawing out our areas of supply, we look to draw off the last bullish candle, which creates that buy to sell move, and we're looking to draw that area of demand, look at that last sell candle, which creates that sell to buy move. Now this isn't something that I use specifically, because what I'm really looking for is that pivot reversal where we see the close to the upside for an area of demand, closing through that high of that last either two candles or the single candle that creates that pivot move. We want to see a close of the previous high of the bearish candle to be confirmed as a good pivot zone to trade from. Again, we want to see a close below the low of the bullish candle to confirm our area of supply. So that's how we look at the pivot zone. Like I said, it's the recommended zone that I suggest that you apply when looking at trade off an area of supply and demand. And the last type that we look at is what we call the fractal zone. Now the fractal zone will be coming off the wick in the market. Now very often this will show us the smaller time frame of a range or a pivot zone. Now when you're trading a fractal zone, very likely you're not always going to get entered into that trade. And what I suggest is that you stick with one of these three types of zones and you trade them and nothing else. Don't jump between the range, the pivot and the fractal. Stick with one, and that's going to help you with consistency. So the fractal zone, what we can expect from this is that we're seeing that range or that pivot zone forming, okay, on the lower time frame, and that's going to show us the wick, okay, on the higher time frame. As we can see here, we see the wick is formed, and we see the markets pull back up into that wick, and we see the drop away. Now when we look down to the lower time frame here, we can see this created an area of a range zone with a drop out, and that's how we can look at using the fractal zone when we're looking to take those trades. So what do I suggest doing? I suggest using just the range and the pivot zones. They're going to be the best types of zones for you to use and trade in the markets with supply and demand. Now if you want to increase your learning, then I suggest checking out the absolutely free Telegram channel right now, which goes through daily updates on exactly how I'm marking out those charts on the EURUSD pair, and it's going to help you to identify the exact way I'm looking to mark out my supply and demand zones when you're using these three types of institutional supply and demand zones. Now, many of you do not trade with an institutional supply and demand trading concept, but I want to share with you today how this can create potential profitable trades for you in your trading. I'm also going to go through and show you how I shared this trade setup ahead of time within my trading community. So the trade was on the pound US dollar pair on a 15-minute time frame. I've actually marked it. Okay, so the trade was right here in the market. This is where I looked at taking that trade. Now you can see that the market has completely just exploded up since taking this trade. Now I only took about just under 9-to-1 risk to reward on this trade. Yes, I could have got a lot more at that trade, but it's not about looking for those high risk reward trades. It's about getting good quality trades with good quality profits. So let's go through and dive deeper in this video how we can use an institutional supply and demand trading concept to take good quality trades like this. And we're going to start by going through the top-down analysis. I'm going to do the replay mode from this era, and then we can go through price. So let's go to the daily time frame, and let's just mark this up. So first off, we can identify that the market at this point on the daily, we were going up. Let's just remove this line now. Excuse me, let's move that line. So we were heading up. Okay, this is current daily time frame. Okay, this is the current daily candle, should I say, with that 15-minute reversals coming in. So at this point, what I'm doing is I'm looking for the market to want to run this high. Now, this wouldn't have actually happened yet. And the reason for this is because of the fact, just mark this off and everything, we still be down here somewhere on this 15-minute setup. It's just because this replay mode shows you it's slightly different. I'm then looking for a final target of this high up here. So I have a couple targets in mind, okay? Just this is my top-down analysis. Now what I'm seeing is the market here. And again, if you want to learn more on market structure, okay, this is about supply and demand in these videos. There is a whole playlist on market structure. Starts off going through the mapping of market structure, which is great for you to understand what we're sharing. So we can see the market break structure here to the upside. We pull back and we break up once again here. We then break structure head to the downside. And then what we expect after we break the structure is a pullback, okay? Coming back into this origin area here of supply. And that's what the market is currently doing. It's pulling back. If you look closely at what's happening here in an internal structure, lower time frames, we can see the market's making this break structure to the upside. Okay, so we have to wait for that to reverse before we can look for any sells. And it can also mean we could see this high run through as we go deeper into areas here of supply. So there'll be an area of supply we're looking at here in the market. So we go with the order flow of price in those lower time frames until we see that reversal. At this point, I'm looking for potential buys with the lower time frames, thinking ahead that we could see a reversal with this daily time frame. Now the reason is, if we look at the bigger picture here, understanding the larger view, we actually broke structure here to downside. Okay, and we also broke this structure here. So we had this break to downside, and what we've got this full push down and a swing pullback, and we're seeing this reversal out, okay, of this swing pullback, and we're looking for a pullback continuation down to take out this weak low. Again, all of this you'll find and understand more inside market structure. So I am looking for a sell potentially on this pair still to the downside at this point, but I'm going with the lower time frames to look for those buys. So we go down to a 4-hour time frame here. In fact, let me just mark out a potential area we could see. This is my last sell to buy move that I can mark off here. Daily zone. So we can see the market's breaking to the upside. Just go to the 4-hour time frame. And the 4-hour time frame will confirm this, where we can see the market. Let's just get my drawing brush. So we can see the market here broke structure. Okay. We then create this as our low in the market, where we just swept it with this big bullish candlestick. As soon as I've seen this, understanding the liquidity in the market has been run through this low, okay, into this area of demand below here on this move up, this candlestick shows me instantly that we will run this high right here, because we closed through what I class as an area of imbalance. So I had an area of imbalance left over here, which was removed. Let's mark that to the back. So this was closed through on this candlestick after we, in fact, swept the low here, and we swept this low here to the left. This puts me onto bullish bias, and I know the market will run this high. So we continue up, we push through that high, and we failed to take out this swing high. This is the swing high where I want to see the continuation. So we have the market creating this move. And I expect the market to run this high with a good 80% accuracy that I expect to run this high. As it didn't happen, we create this swing pullback. Let's go closer into price now. I'm looking at the market as we continue up. Okay, we have a very balanced market here. What I mean by balanced market, we don't have any leftover imbalances. Okay, they have all been absorbed. Okay, this had an area of imbalance. Originally, we pushed in on this candle, we pushed away. We had a pre-imbalance. Okay, not sure on imbalances. Again, there is a full playlist in this channel. Okay, go through to that playlist on the homepage on imbalances. Watch every video in that playlist is going to help you understand the imbalances. We had a pre-imbalance here, okay, and this one held price. Let's mark this out. Understanding pre-imbalance is really crucial to understand what's going on. So we had this pre-imbalance, and the market pushed through this low of this imbalance right here, which is again a pre-imbalance originally. The market then left over the small imbalance here was left over. Now that imbalance held price. Let me just make sure that is to the back out the way. So that imbalance held price there as we pushed through into the lower imbalance. So we've just come back to the 50% of this pre-imbalance once again and held at this imbalance. that indicated straight away that we could head higher to take out this high and run this high that we haven't yet taken. Okay, like I said, understanding everything in the market with the imbalances, your swing highs and lows, where the liquidity sits. There is going to be a new playlist coming on liquidity as well. Everything with market structure, imbalances, and supply and demand. This is how you become a profitable trader. This is what I'm sharing in this channel, and how you can do all this. So at this point, I'm now very bullish. I'm thinking, okay, we'll need to be looking for potential buys here. That's why I go down to my 15-minute time frame. I'm now looking at a potential reversal. Why? Because if we now start looking at the structures on this time frame, we can identify this move down. Okay, so when we start seeing this big push to downside, this reversal back out, look at the V-shaped pattern there. That is showing me a sweep in the market. That shows me bullish momentum. Not many people look at the candles in this way. Now, once we start moving higher here, I can start marking out my areas of 15-minute demand as we continue higher. Okay, so I'll show you how we do this. So we have a 15-minute zone here. As I continue to break structures, okay, so I break structure here, we broke structure here. Again, you can learn more on the structures inside that other playlist. And again, we break structure, we continue up. Okay, so we have another zone here and a final zone. Okay, so we had this zone breaking up, and this one broke out as well. So I could mark this out as a full zone. And then a final zone we broke out here. This would be my zone. So we have a zone very well nested inside this zone. So we continue to break up and we hold demand. So now we've come back into this demand zone. The same area I'm looking at, the area of imbalance, okay, on the 4-hour time frame. And I still want to see this high get run. We front run this level. We never front run these levels. You're always going to find them get run on these swing highs. So now what I can see is the market is showing me a break to the upside. I'll start marking out my structure here. We broke here to the upside, but the main structure break here would have been this high. The reason for it is because we broke out of this low, head to downside, and we reversed it there. So this is the move down, the move up. We never broke lower again from this swing high, so we don't use that swing high. As soon as I see this, I can mark this out. Okay, this is my low here. So I can mark this out as an area of demand. Now, this is I think this is the spread betting pepperstone, where I think I normally do my analysis on the standard one, but we'll see if price comes back to this zone. It may have been off this candle. I had it marked, I believe, because actually I think this is the low. So yes, it would have been from this area here. That would have been my zone I marked at the time, because this is my last sell to buy move. This did not go lower, I don't believe, on the other platform, but that was the zone I had. So my targets, okay, my target is going to be, first off, shrink chart out to take out this high. That's my first potential area I expect price to go. After that, I'm expecting price to go for this high, which is that daily swing high we saw to the left. We went through the daily. So let's go forward with price here. In fact, let me just let's just stop that a minute. I think it has stopped. So what we need to do first is just place that trade to show you. So this would have been the entry, this would have been stop loss. This is my first target. That's what we're looking for to start with. Okay, that's my first target. So let's just forward this again. Okay, so see we get triggered in. Okay, so we're quite deep here, and then the market takes off. This was that trade, and you can see we pushed through quite strongly with this candlestick. What does that show me? That shows me a large momentum push through here. It shows me that we're going to continue higher. So that's my first profit target taken, just under 3 to 1 risk to reward. And again, the second was up here, which was, I believe it was a bit more than this. It was just over 8 to 1, nearly 9 to 1 risk to reward. We'll see this in a moment. So as we can see, the market here left this big candlestick. Okay, this leaves an area here of demand again. Also a nice big area of imbalance where we can see the market continue off this level and this area of imbalance to the upside. See if we get this. So the market pushes down into demand. And we're looking for that reversal out. And we've just taken out this demand, I believe now. We've just swept the low, okay? So we should see a bullish move up from here. At this point, I'm already in the trade. I'm not looking to add to my position at the moment to see if we can break this high. This is going to be a break of structure. So we're looking to break this high here to the upside. This swing high is now being broken. So now I'm expecting continuation for this level. Now at this point, I believe, we just pause this. I decided to exit some of this position. I believe this was in the morning. I came to the charts. We just failed to hit this level and we started pulling back and I took some off the trade. Okay, so I've taken some more profits, basically partially taking the profits. This is my first profit target here. I've then taken some more at this level. And I'm still holding for this as my final target at this point because I don't want to see the market pulling all the way back down to my break-even level now, stop me out, and I potentially have a stopped out here as a break-even trade, and then we continue back up that level. We don't want to do that. So we want to take those partials along the way. I believe there's a news come out in the moment, maybe the non-farm payroll. I'm not quite sure what it was. And you'll see we had a big push up. I think it was news before, I think it was the Thursday. We should see a push up now to take out this level, which is that swing highlight. We need momentum to push through that level. So we got a nice momentum push through. Okay, so you can see the market is pushed through and we continue higher. So that final target was hit. That was the trade, how I used the supply and demand institutional trading concept. Very, very simple. Okay, we're coming off higher time frame area of demand. We saw we were coming out of that 4-hour area of imbalance and we were following the order flow here of the 15-minute demand. And that's all I have to do. We wait for that reversal. There was the entry, take profit one, this previous swing high on the lower time frame structure, then the daily swing high up here was taken. And that is how I look at trading with a supply and demand concept. Let's have a quick look now at the Discord room where I shared this trade. So you can see this is my actual NFXT service, and this is where I go through what we're seeing on potential charts. I was actually looking for a deeper pullback on that day to this area below for another buy. And then as the day progressed, I actually saw this reversal happening in real time. You can see I shared where my actual entry is going to be looking to come from, where we're looking for market to go to, expect that move higher, pullback continuation. That was what I was looking for. And then we have the entry, you can see, into the area targeting that swing high first. You can see it's just over, just under 3-to-1 risk to reward on that first target. And then we continue up, we push through, okay? That was the first target hit. That placed me into risk-free trade on that entry. You can see this is all posted. If it's going to the winning trade section, you'll see the final trade on this pound. That was the first target, okay? That's where I took off some profit. Okay, at the, I'd say on the partials, we saw the market pulling back, and then the final profit target was hit. So that is where I shared that inside the community. And that's how simple it is to look at using the supply and demand trading concept. I do suggest going through watching this video a few times. You really get to the grasp of how I look at the charts. And again, like I said, going through this video, you need to go away and also watch those other playlists on market structure, imbalances in the market. They're going to help you understand those concepts even more and what I was talking about more in this video. Supply and demand versus support and resistance. Now, it doesn't matter whether you are a supply and demand trader, a support resistance trader, this video is going to help you to understand the concepts of how you can combine the two together, or you can go down the route that I suggest, which is a supply and demand trader. So I want to go through and show you the concepts in a moment on a price chart, but first let's do some sketches so you understand the difference between the two. So majority of the time, let's look at an area for people looking for a buy. We'd have a move in the market, pull back, a break of structure here, continuation, and a pullback. Now, what people are looking for as a support resistance trader, they're looking for this previous high to act as a broken resistance, to act as an area of support. We look for continuation higher. Now, this comes into understanding market structure. Now, if you're not sure about market structure, then what I suggest doing is going through to the actual playlist in the channel of market structure. It goes through step by step on how to read market structure with mapping, using internal structure. Now that's on the channel. Once you watch this video, you're welcome to go and watch that playlist. So understanding a break of structure here to the upside, okay, we make a new higher high, from this higher low, we pull back, and what support and resistance traders are looking for here is this area to hold. Now they'll be looking for a price action signal with a candlestick pattern or a reversal out of some sort to look for buy to then continue up to break structure again. Now that's perfectly fine, and it works for a lot of people, but there's a reason why this is working, and it's not because it's acting as a support resistance, and I'll explain why in this video. So keep watching to learn more about it. So let's now discuss why this really happens. Okay, so if you're a supply and demand trader, what you're actually looking for here is where we see the market breaking the structure. We're going to leave here an area of demand in the market. Now this area of demand is where we're going to find those orders left over, and that's where you'll be looking for the origin zone of demand for the market to pull back into for that buy to continue higher to break structure. And this is the absolute best entry area to take a trade. One, it's going to give you much better risk to rewards on the trade, and it's going to give you higher odds of taking a profitable trade, because very often we can see manipulation after manipulation here at this previous test of this previous high. Now there is sometimes we can find that the market will hold at this level, and I'll go through that in a moment why. But if you are a supply and demand trader, you'll understand the concepts here, why we should be looking to take a trade here. Now you may not understand why you could look to take a trade here. So if you're not sure on this concept, make sure you continue to watch to understand how this can help you in your supply and demand trading. Now, many support and resistance traders will find that this will give them an entry and they will continue up and be profitable. But another time it comes back to this area, it smashes straight through, comes back to demand, and then it continues up. And that's where they get frustrated and where they will end up revenge trading and losing more trades. So why does this work? Well, let's just remove these off the chart. So the reason this can work is, one, what we can see is as the market continues up here, we can create what we class as a rally base rally move, which creates an area of demand. Okay, so we can have also to the downside we class as a drop base drop move, which creates an area here of supply. Now if you want to learn more on those in much more detail, keep watching the next video coming up, because it's going to go through into the rally base rally, drop base drop. But this is just a quick understanding. This is why you can find people are capturing trades off these areas, because we can create that area of demand, that rally base rally here as we break structure. Now very often this can actually happen because the markets are just coming up to this level, manipulating people into thinking the market's going to sell off, and then they push up and break structure. Very often this will happen. People will get caught on the wrong side of the market as the market does this, and this is what creates those orders left over in this area of demand. As we pull back, people want to get out because they're having that pain of being in a losing trade if you don't have a stop loss. Now if you're not trading without a stop loss, that is absolute suicide. Please trade with a stop loss. So that's one way we can have that rally based rally. Another way we can have here is what I class as the area of imbalance. So let's remove this again. On this move up here, we can have the imbalance zone. Again, this is a concept that I go into much more detail inside the imbalance playlist on the channel. On the home page, go through to that playlist and that market structure one. Watch all those videos in the playlist. It will help you massively in your trading. So we can have here an area of imbalance. Now this area of imbalance will have blocks of orders left over, okay, in there if you're going to take a trade. And I'm talking about those city order blocks, all that stuff. I'm talking about blocks of actual orders that remain within the imbalance zone. This is where the market will come back into that imbalance zone and then pick up those orders to push higher. Now, inside that playlist, it will explain much more detail. I don't want to go into too much detail today because we really want to talk about the difference between supply and demand and support and resistance. So that's why sometimes you can find those support and resistance traders will find good trades here based on that rally base rally, the area of balance. Now to the downside, you'll have that drop base drop or that area of imbalance as well. And obviously you have the area of supply. Now, majority of the time, you're going to find that the market will come back, okay, to these areas of demand. And that's going to give you the best trade, okay? And that's where you want to be looking for as a supply and demand trader. But you also need to take note here, because what can happen is they will bring price back to these areas of imbalance, manipulate those areas in the imbalance or just above into the imbalance, where people are going to look to take trades at this as a support resistance entry. And that's where they also lose being manipulated out of the market. Now, I'll talk about the liquidity a bit later on as well. So if you want to learn more on liquidity with this, keep watching. So let's now go into this one more time, look at one more thing. We can look for an entry here. And that is, we can also see this happen in the market. We can see the market break down, we push up, we break structure. Okay, we pull back, we come up, we just break structure, gain here to the upside. Okay, and then we pull back and then we continue on its way. So what I just want to do is we'll just bring this height down so it looks better. So we'll be looking more like this. Okay, so what we can identify is that we break structure here to the upside. The market then pushes up and only just breaks out here to the upside. What it's doing is coming back to this area of demand, okay, before we then continue up again to break structure. Now, this happens over and over again in the markets. Now, this is where you're going to find, okay, if I drag this across, where support and resistance traders are believing we're seeing a double test, okay? We're coming back to support again, support's holding again. That's not what's happening. Again, here we could see a rally-based rally, or we could just see an area, okay, of imbalance. Now, we could even see here the market may not even come back to demand, may push through this previous low deeper into the imbalance, okay? And this is where we can create that area of liquidity. So we can either have an area of demand here which holds and we push price higher after this small breakout, coming back to this previous swing high where we had a previous area of a rally-based rally or an area of imbalance. And then that's where the support and resistance traders are going to see this as a potential buy. Or we could not have that and we could have price pushing through, okay, the previous low after coming back to retest this high into the imbalance here. We have a leftover imbalance. We wick through this low. That is liquidity in the market. We're pushing through a previous low. Previous swing low creates liquidity. We then fully fill this imbalance, and then we see the push away to break structure again. That's another way support resistance traders can look at the market, not realizing what's really going on. Hopefully you begin to see the concept of why supply and demand trading is much more profitable and will help you to read the market. Okay, support and resistance will not help you to read it. The use of imbalances, supply and demand, market structure, that is the way forward for you. So let's have a look at price now. And we'll go through these concepts on the price chart. Let's work away from where we see the move down, the move back up. And then we'll look at a lower time frame as well to apply these concepts. Let's zoom in to price as well. Remember what we just went through. We're going to apply this now. So let's see, this is a breakout of structure, okay? And look what happens. The market breaks structure, pulls back to retest, okay? Breaks support, retests as resistance. We have a bearish engulfing candlestick, and then we continue to break structure back to downside again. Now, even as a candlestick entry, that is not a good trade. Why? Because we're selling into structure. As a support and resistance trader that I used to trade, okay, before I went into supply and demand, this would be a no trade zone because we're selling into support. Okay, we have no room to move. If this was down here somewhere to sell, we had space, we had room to sell into. Okay, so understand that even if you're a support resistance trader, take this information away and it will help you. Now, if you do want to learn more on support resistance, how I used to trade with those candlesticks, then there is a free ebook, okay, that you can sign up to and you can grab that as well today. So this concept here of a break of structure, retest resistance is not why the market's pushed lower. The reason it happens is, if I zoom in, hopefully you can already see this. It is an area, okay, of a supply zone and an imbalance zone. Let's draw the imbalance zone first. We have an imbalance here left over. I can draw this out, this area of imbalance. So you can see we break through and this candlestick leaves the imbalance. And again, you'll learn much more on imbalances if you go through that playlist. We pull back into the imbalance, we test to 50%, we do a full fill, then we push the market away. Now at the same time, we also have our last buy, okay, to sell move here of we class as supply. Now, if we just mark it out as a weekly zone, but we didn't quite come back to test that supply. Very close to it. And if we were to refine this zone, I would normally look at this as my actual supply zone anyway. But this is a last buy to sell move. And again, that would have been the video that went through understanding institutional supply and demand zones. We look at the last buy to sell move. So this occasion, it's the area of imbalance was held price and we've pushed price lower. So understanding this, we'll go down to lower time frames. We can look for entry here, this area of imbalance. We can use market structure for a structure shift on a lower time frame. We can capture an entry down to this low. So even though we're seeing this candlestick, we would have taken entry on a low time frame way before this candlestick actually closed. That's understanding the use of structure in the market. This is not, okay, a break of structure, a retest of resistance. This is a retest of orders left over here inside the imbalance zone. So again, let's continue down. We then break structure here once again. Okay, continue down. So we have a couple of things we can draw. We can draw, okay, this is our last buy to sell move of supply. And again, we don't come back to that supply. And we could also refine that to this area here if we wish. Now we also have a drop base drop area of supply that we can draw here as well. I can draw this as a supply zone. Okay, we don't come back to that zone either. And finally, on the breakout of this support, we can draw this area of imbalance. Okay, so you've got this area of imbalance. Let's just mark that to the back in case it's not. And we can see the market actually breaks away, makes this swing low, pulls back into the imbalance. And again, this is where I can look for a trade on low time frames to target this low. Look at this, look at the amount of movement you've got there on a lower time frame risk to reward. That's how you generate those high profitable trades using supply and demand and imbalances strategies. So again, this would be my breakout. Look, just mark this off. We never come back to it. We come very close, and many traders support and resistance would have this as a zone anyway. I would say, okay, we come back to resistance, we can sell again. This is what's happening. Let me explain. We have first entry here. We then break structure once again. And yes, we would have created a new area of supply. Now that supply got removed. But what's actually happening here is we have this area, okay, being swept in the market to fill more of the imbalance, to pick up more orders. We've already come off this area of imbalance. And that's all the market is doing here. It's pushing up to sweep this high of liquidity to pick up more orders into the imbalance. And that's where we can pick up another entry in lower time frames to target these lows. That is all it is when we come to supply and demand. Okay, support and resistance traders will look at this as another retest, okay, of a broken support. But it's not what's happening. It is the area of imbalance once again holding price. So we have another push down again here. But this time, what we have is the last buy to sell candle, which creates the area of supply. So we break structure, and if we bring this line across, okay, what are they seeing? They're seeing a break of structure, a retest of resistance. We can even identify here, we have a liquidity sweep of this high into the supply. We don't quite test the supply on this first test. We continue up, we sweep through this high, and then we go into the supply. Now, if we could have had an area of imbalance here, if we didn't have such a big wick here on this candle, that could have created an area of imbalance, and this time it didn't, but we come back to the area of supply. We sweep into that supply, but again, you see support and resistance traders will look at this as a retest of broken support acting as resistance. But now you're starting to understand what's really happening. The supply and the imbalances is where the market is happening. Then we have liquidity here on a lower time frame, you would find a liquidity reversal. The market continues to drop. Okay, we break structure here once again. Market right across. We nearly come back to retest it as a broken support, act as resistance. Now, again, we have what we class as the origin area of supply, which is here in the market. We don't come back to that supply. We then have this drop, base, drop move. So that would be a area of supply as well. Now, a drop base drop doesn't have to be a bullish candle. We can still have a bearish candle. And we have this drop base drop. Now, again, there'll be more on that and the rally base rally in the next video at the end of this video. Now, what we actually have here then is the drop base drop area of supply is what we see the reaction of. But that's not all. We also have here, and hopefully you spotted that area of imbalance. Okay, the imbalance zone as well as the drop base drop. And we come back to fill the full imbalance. Again, support resistance traders are still thinking, okay, we're coming back to test this area of broken support to act as resistance. That's not what's happening here. Here we do pull back. We create this indecision candle, okay, where many traders look to sell from, and we continue down. That's not what's happening. Hopefully you're starting to see what's really happening on these charts, and you're having a light bulb moment going off. Okay, if you are, drop the comment below and tell me this is helping you. Okay, you'll begin to really understand and read these markets. So again, that we break through with this candle, we come back to retest it, broken structure, acting as support. What is it really? No, it is going to be this area of imbalance in the market. Okay, the imbalance broke through, we come back, we fill it to the 50%, we push higher, a full fill of the imbalance, retesting the over structure, okay, and we continue down. Now again, we would have had here, okay, our last buy to sell move is here. We don't quite test it. I would have refined that to that candle anyway, is the area of supply. And we do have a drop base drop area of supply here. And again, the market doesn't come back to that area anyway. So this is that area of drop base drop where sometimes we can see a pull back into, like I said, or we can have the breakout area of an imbalance. That's how we look at using this. So again, the imbalance is what holds price, and we can identify we have another break to downside. So the market comes down, we hold the area of support structure, pull back. Even at this point, okay, we've broken out here. What do we have here? An area of supply. And what do we have here? An area of imbalance. Why did the market do what it did? It came back, it bounced off this area of structure support, but came back into fill this imbalance and into the supply to continue to break lower, where we then break structure here again. Now at this point, okay, we have one thing left over here. Again, we have another area of imbalance. Again, there is a tip to understanding imbalances, why this is going to be a reversal. And we have this last buy to sell move of supply. But as soon as I see this one candlestick, and again, on the lower time frames, you could have caught an entry here, okay, and good profits. Just because we're seeing this candle making a higher low, pushing high, doesn't mean you can't get some good sells here. At some point, you will have a losing trade when the market reverses. That is part of doing business. And that's what a good supply and demand trader understands. And a good businessman understand that trading is a business. This is all about supply and demand versus support and resistance. We've come back to retest this level. We've closed through. At this point, I know we're going to take out this high, understanding imbalance in the market. If you don't understand supply and demand with imbalances, you will not understand the concept here. But once we close through this area of imbalance, I know we're going to take out this area of supply and push higher. And that's what happens. We have this one last push down, and this is taking out this low, okay, of this candle. On the lower time frame here, we're going to see some sweeps in the market, taking up the liquidity, and we're going to find some areas of demand. The market pushes out. What do you see straight away when we take out this area of supply? We create this area of, okay, imbalance. Now, I know this is more about understanding the supply and demand versus support and resistance here, but understanding imbalances is key with supply and demand. Like I said, when we're looking for those reversals. So at this point, we can now identify that we had that reversal. This is our last push down. This is my breakout point. So we broke out. The market's come back to retest as a broken area of resistance now to act as support. But what is the market really doing? It's pulling back into this area of imbalance. And again, look, we then have another small breakout here to the upside. We could actually drag it right the way across, come back to retest it. So support and resistance traders are looking at a breakout candle pulling back to act as area of support continuation. Again, that's not the way I see it as a supply and demand trader. We had a very small area left over of imbalance there, but we also have what I class as a pre-imbalance. Now you'll learn more of this inside the imbalance playlist, so make sure you go and watch that as well. And we continue up and we hold and we push away. Now if we look at the bigger swings here as well, we do have another break structure here, but we failed to hold. We pushed through, then we push back up. We don't break out until really this candlestick, and again we can actually identify here that we break straight back through. And so there's some losing trades potentially to have here. So again, we break structure here, and this is a good example right now, this current example of understanding support resistance and understanding supply and demand. When we break through here, a support resistance trader is going to be looking for an entry right here to go short. But as a supply and demand trader, that's not what we're looking for, are we? Do we have any areas of imbalances here? No, nothing ready to take a trade from. But we do have this last buy to sell move of supply. Now we can also refine that to the last bullish candle where the market comes in, and we could have had a sell here to downside and another sell here as well. So the first time we sell down, we're just selling down to fill this imbalance on this candle. The second time we're selling down, we go for liquidity of this low. But as a support resistance trader, you're just basically seeing the break of this structure and a pullback. You're not really understanding what's happening now. We want to come back into the supply at that point to look for a sell. Now at this point, I mean, on a low time frame, we're going to find a break of structure, retest, break of structure, and a push down to take out this liquidity. But understanding the differences between supply and demand versus support and resistance, this is how you should look at reading the charts. So let's have a quick look at a 4-hour time frame here. Let's just remove everything off those charts, and we'll go to a 4-hour time frame quickly and look at current price. So look at this current price in the market. We can identify the market here, broke structure. We came back to retest that area of structure, and they'll be looking for a sell here. So they broke out, retest, they'll be looking for sell. Doesn't happen, and we pull back. So if we're looking for any entry here as a supply and demand trader, we'll be looking at this last buy to sell move for potential sell. Now we do come back into there, and we do drop back, and then we continue up. So potentially a lower time frame here, you could have caught a trade. You would be at break even, or you could have taken a small loss. Now you can also refine this to the last bullish candle. You can see the market does come up here as well, and then we push down. So at this point, we're waiting for that break structure of this high. And you can see that the market does break out, pulls back. It kind of up and down through this level, doesn't hold perfectly. Like I said, no, as a support and resistance trader, you would have some kind of zone here more than a level. Surely that's the way you'd be looking at it. But as a supply and demand trader, what do we have here? We have a break of structure, and we would have an origin zone we could draw down here. This would be my area of demand. And we also have a rally-based rally area of demand. I would draw here. Price doesn't come back to it. That's area. And finally, we would have an area of imbalance, that I can draw here as well. Mark that to the back. And we'd have another area of imbalance that I would draw right here. Now notice how this higher area of imbalance never gets closed through, and it holds price. Just move it down slightly to the high of that candle. So we failed to close through and we hold price. That is why price held here. It's not because of this level of broken resistance acting as support is because of this area of imbalance was holding price up. We came through into the imbalance below. We then broke out higher here. Okay, so look at this. If you're using this as, breaking as resistance, holding as support, you would be confused as hell here. You would be confused massively here because you just don't understand what's happening. We're going up, down, up, down, up, down through price. What we can identify is we did have an area of demand here as well. So now I've shown you how that imbalance of the breakout of this level held, okay, and we had the breakout again with this area of demand where we're looking for that trade. So this level has nothing to do with why price, okay, was breaking higher. And once you understand these concepts of supply and demand with market structure and balances, that's going to make you a much better trader. If you're not sure about what I just went through here, go through and watch this again, because watching these videos over and over is going to help you to master these concepts. So that rally-based rally, drop-based drop, how can we use that in the trading of supply and demand? Let's go through it right now. Okay, so I've done a sketch quickly for you here to show you the rally-based rally and the drop-based drop when we have the one candle. Now, there can also be a cluster of candles when we see these moves, but for now, let's just go through the one single candle. What we're looking for is the bullish move to the upside here. And then we're going to create a one candle, either bearish or bullish candle, but normally we're going to see a bearish candle pulling back. And then that's going to leave here the area of a demand zone. We then push out to the upside, continue away. So this creates what we class as the rally base rally move. Okay. Now the opposite way we look at the market, we see the drop. We're then going to have like that bullish candlestick. And then we have the continuation down the move. That's going to create that one candle drop base drop. And that will create an area here of supply. So this will create an area of demand where potentially we can see price, grab my tool, price want to come back to the demand and then continue bullish. In the same way, looking at price here to the downside, we can see a pullback into that supply to continue bearish. That is all they are. That is all the rally-based rally, the drop-based drop zones are. You want to have a good understanding, okay, of where these zones are likely to occur. Now, the previous video went through on the supply and demand versus support and resistance. You'll be able to see exactly where they tend to occur. But the idea is you can either have a single candle, or we can have like 2, 3, even 4 candles before we see the move away, and we create that basing area. It's all about creating the basing area before we see the drop, the downside, or the move to the upside. So that's basically how we look at the use of these candlesticks when we're looking for those rally-based rally and the drop-based drop zones. So let's now have a look at the price chart and see how you can identify these on a price chart. So on the EURUSD on a daily time frame, that's the simplest pair to look at really, this type of concept. Now the rally-based rally and the drop-based drop will occur with strong moves in the market normally. And you're going to find they're going to occur when we see a nice bullish or bearish trend. So we look for a nice bullish trend. This is a good example. Let's see what we can see. So we can see that the market here, okay, is breaking this structure high here to the upside. Now, when we do break this structure high here to the upside, we create this higher low here in the market. Okay, that's going to create our normal area that we can draw out as an area here of, and let's mark it out as a daily area of demand. Okay, so we can identify the market breaks out, makes this high, we pull back into demand. Now, as well as this as our origin demand zone, we will have that rally base rally, and this is our rally base, okay, rally within this move up. It's not always going to be where you expect it to be. Now, this is also a rally base rally. Now, that rally is what breaks out of this high. So we just take all this marking off. Just go back on that there. Okay, so let's just go through this again. So let me just show you. When we have this break of structure here to the upside, this will be my area of demand, my origin demand. But I also can draw this demand zone here, which will be my rally base rally. And you can see that we actually come back and we hold this rally base rally. And if we refine this, we can refine it to the wick of this candle, because this is the wick what basically takes out liquidity at the low, and we break up this rally base rally. So always look at the market, and a rally base rally looks like this. Okay, so here's what it is. It's a move up, move to sideways, a move back up, and obviously a move down, sideways, move back down. That is all they are going to show you. Okay, so this is the area of a rally base rally area of demand. Now again, as we move higher, we create this rally base here, one candle again. Remember I said that previous sketch at the beginning, I said we can have a one candle creating that base, or we can have a cluster of candles. So if we look at this move here, it's got more of a cluster of candles, okay, here, and then we rally away. This is more of a one single candle. Okay, we do push down low on this wick here, and then we push away. We break this structure. So we can form in a few different ways. But if we're looking for the origin here, this is our origin area of demand that breaks out of this swing high here. Okay, this is our origin demand zone, breaks the upside. This is our rally base rally. And then we move up and we pull back here. Eventually we break the upside, and again this would be my origin demand zone. Here we push up, but then we have the rally base rally move. So this becomes our area of demand, which is the rally sideways movement, because we pull back, continue away. Now we could use the full move here, which would be from this swing high, okay, to the downside, and we move it across. And you see price actually comes back to that demand zone. That's because this is our last sell to buy move. Now we can use that, have it in mind that price could reverse off the high of that candlestick even. Doesn't have to come deeper. This would be more of a refined zone. But again, just understanding that this is the origin. This is the rally base rally zone. Again, we continue forward. We break structure. We create this. Okay, again, we create this is our area of demand, which is our origin demand zone. The price comes back to that zone. We break out here. What do we create? A rally base rally. So again, we create this area of demand. Now that demand zone is where we see price hold. We failed to run the high, okay, just here, and we drop back deeper, removing this demand zone by basically taking up the swing low here, pushing into this area of demand, continuing. Now I always suggest that you look to trade the origin move of supply and demand, because it's always going to be the best zone to look to trade. But on this occasion, you can identify that we had this rally base rally. Now on this move up, we break structure. We don't have that. All we have here is this origin area of demand. Price comes back into that demand, we continue away. As we continue higher, we have another breakout here, just a demand zone. Then we have another breakout here. So it's just a simple break. Okay, we have no rally base rally. Okay, we could say this is a rally base rally, but it's also going to give us small origin zones at the same time. When we come back into this area, okay, we then can see we break down. So we break down again, that we break out again. So we drop down, pull back, break out, but we create this drop, base, drop. So there is your area here of supply, and that would be the supply you want to see broken through. This is the last supply in this move to downside. So we drop, okay, we base, and we drop. But we also have this drop, base, drop. So this last, well, pin bar is the area of supply. That gets reversed by this candlestick. Now we do come back and we do sweep that low. Now, if you're not sure about liquidity in the market using sweeps, everything else like that, then there is going to be a full playlist. You'll find that within the homepage, which goes through everything on liquidity. That is going to help you to understand how I look at liquidity in the market. Now, after this, we break out again. Okay, you can see we break bullish to the upside. That leaves me this large sell to buy move. Okay, there is no rally base rally here. We break out again to the upside, leaving this full sell to buy move. Okay, but we can refine that to the last bearish candle. And then what do we have? We have a rally, base, rally. This time we do have that rally, base, rally, which holds as demand. Price comes back in and we break structure. So the rally, base, rally can either happen with a long, strong trend in the market, or we can see it which creates that rally, base, rally right before we see the break of structure. So if you're enjoying this video, you want to see more videos on supply and demand, especially around the rally, base, rally, drop, base, drop, leave a comment. Let me know you want to see more videos on these types of content going forward. So again, look, we have a push up. We have another failed break here to the upside. So the market drops down, failed to break out. That means this becomes my last area of demand in this process. Sorry, not this one. Let me just mark it out again. This is my last area of demand. Sorry, that's my last demand. That's the one that breaks out of this structure. Okay, so we need to see that removed. This again is a liquidity in the market. Over to the left here, we may find a reason for why this has happened. I'm not going to go into that in this video today. It's more about the rally, base, rally, drop, base, drop. So here we can identify the market drops down. And before we remove this area of demand, what do we see? We see a drop, base, drop, base, drop. So we have this one single candle area of supply created. And we have this small area here created before we remove this area of demand. Because for a full reversal, this is my move up, pull back. Yes, we could have a breakout here. This internal range area, which is this candlestick, which creates the breakout. So there's drop, base, drop. And then we have the main area broken right here. And we also have the drop, base, drop, okay, breakout. Then we have the pullback here and a breakout. So we have a standard area of supply we could draw here, or we could draw it from the origin of this candle, whichever. We then continue down, and then eventually you can see the market breaks to the upside. So we do have a drop, base, drop. Once again, right there, you could say is a drop, base, drop, but it's not a zone I'm going to draw. I want to see a reversal of this swing high. That happens. So from this low, we can draw our origin zone here of demand. And then we have this, we have the rally, base, rally. So we then have this area we could draw. Then we have a rally, base, rally again. Hopefully it's starting to make sense how you can see these zones. So this is the last zone that breaks this structure. Then we can see we do have this breakout here to the upside. Leaves this area of demand. So we have an area of demand here which gets broken through to the downside. We get wicked through by that candle. Now it doesn't break structure there. So we have a drop, base, drop. Okay, that then creates this area of supply. So we drop through. We failed to break structure here again. Okay, we have a sweep of the low. Again, liquidity sweep, understanding that. And then we have a nice big break to the upside. That leaves me this area of sell to buy move right here in the market. That would be the last area we want to see mainly taken. So this would be the main structure reversal in the market. But on the way down, we can identify we have a drop, base, drop, base, drop, pull back, breakout. So you can see that we have all those areas. We have a breakout here. We do have, this is a drop, base, drop. Okay, we do break structure there as well on the way down. This is a pullback now already. And then we have another, okay, drop, base, drop. New area here, you could say was a drop, base, drop. Not zones we're going to be looking to trade from. You see this did work, but this is the main reversal. That's the push up, that's the pullback. So as we break out here, we can see all these drop, base, drops. And the last one you said would be, well, we have this one here as a last drop, base, drop. Okay, which does break through this structure. We reverse through to only really manipulate through this high. And then we break structure again. So on the way back down now, this is the origin supply that breaks this structure. And by the way, the origin supply on this one to downside would in fact be this full buy to sell move we can mark here. I'm not going to mark it out, but you need to keep it in mind. That's the last buy to sell move. but this is the drop base drop moves within that move. So this area becomes my origin. So this is my last buy to sell move here. We could draw, and again you can refine it to last bullish candle if you wish. This is my drop base. Okay, there's that one single candle as the basing again, and we break out. Now we don't actually come back into supply there, but we do come back into the area of imbalance. We do have that full imbalance playlist. You can go through and watch more imbalances within the channel. So again, go through and watch those playlists as well. So you can see that the market then breaks through again. So nothing there. We have a normal push up breakdown. That's the area of supply. Okay, right there. Price holds at the supply. Again, a normal break to the downside. So that creates what? A new area of supply. So at the moment, we just have this simple breakout. We have nothing else here. Another break structure to downside. That creates my area of supply. Okay, the market then removes that area. So what that is a valid break to upside once we see this candlestick. So let me just show you. We failed to break and close this level here, but we break it there. So what that now gives me, it gives me, let me just double check that actually. Oh, actually it does just break through. It does break through. So what that gives me when we do break through here is this last sell to buy move. This is all demand. Okay, we can refine that to this last candle as well. We can see price doesn't come back into that zone. Okay, that's what you need to understand, that this is the last sell to buy move. But look at this. On the way up, we created the rally base rally move. Now I'd mark it from the low of this candle, and there's my demand zone. Well, this time you can see the rally base rally breakout is what held price. So after that, we break through this high. And again, look, this is my origin sell to buy move. You can refine it to this level. On the way up, we do have a rally base rally move, but that actually gets swept, I believe, right there. Remember, these trades actually taken them. So we swept through, we continue to go bullish. Again, there is our drop, okay, continuation. So all we have here is a typical last sell to buy move. And this time, you see, if we refined that zone, we never would have got triggered. We come back in. And again, you see the market breaks out. See, it's very, very simple to read structure with supply and demand. There's my last sell to buy move. Okay, we come back in once again. Now on the way up, we do have these smaller zones. There's not, it's just a valid breakout there. So that would be an area of supply. Okay, and again, we do break out there. And that means that we do actually shift structure to downside there when we remove this last sell to buy move area of demand. So that means we do have a potential buy from this demand going up to this area of supply. But that gets removed, break structure there. Now look what happened. We would have had this as our area of supply. Demand. Last sell to buy move. But on the way up, you can see we actually have a push up. To show you where this comes to. We have a push up. What do we have here? We have a base. Okay, look at this. Look, we have a push up. We have a sideways basing price action. You actually have like a move up here on the lower candles, but we have a basing nevertheless. So there's a push up, sideways, push up. That is your basing. Now we don't always have to see it with that single candlestick. We can see it with a cluster of candles. There's your cluster of candles. That becomes my rally, base, rally. Now price does hold, and then eventually we get pushed through. But that's just to show you that is the actual rally, base, rally. Now this is the main swing reversal for me here. Once we break through on this candle. But if we look at price here on the way down, okay, that means this becomes my last buy to sell move, where price is in fact now come into. Again, you could refine it to that last bullish candle, but you need to remember from this move up is where we could see a drop back to downside. Then we also have on the way down, this move down here, we have the break of structure. So that's fine. We have our normal area of supply we could draw there. Price comes back in. We then have the next break of structure, which is here. And again, we just use this as our supply. Market does then create this break of structure. And again, we'd have this candle as our area of supply. And finally, we have this break of structure where you could use this as area of supply. Market then reverses that area. Okay, there's no base drops in there, except for the full swing to downside is in fact a base drop. So you have drop, base, drop, base, drop, base, drop, base, drop. Now the reason for that to be a base drop all the way down is because it's actually a full swing pullback. If you look at this, this is our main break to the upside, our pullback, but then we reverse structure here. So now we have another pullback to the upside. So we can look at the same thing, this being a rally-based rally. Again, we can mark these off. We can identify that we have this our last sell to buy move. Price comes back in, and this will be my last sell to buy move again. And we'll just wait and see if price comes back to it. But we can also look at this as a rally base rally on the swing pullback. So we have that internal structure, we have that swing structure. So that's how we simply would look at those zones, okay? How we look at the rally base rally and the drop base drop. Today I will cover the break of structure supply and demand strategy, how you can use the break of structure to your advantage when looking for those supply and demand zones. So I'm on the EURUSD on a 4-hour time frame, and let's just remove this indicator off. We don't need that on. And I'll go through just understanding how you use the break of structure technique to find your supply and demand zones. Let's go back in price a bit. Let's start off around this area, okay? So what you're looking for is the market to show you that directional bias. So from down here, okay, we can identify and mark this off. A break of structure. Now let me just mark this off as a 4-hour structure. So we can see we have this break of structure upside. Now let's go closer into this area. When we see a break of structure like this, let's mark it off. We're going to create an area of demand. Now we also create areas of imbalances as well, but that is a completely different type of trading. This is all about the break of structure with the supply and demand. Now, of course, if you want to learn more on imbalances, there is a full playlist on this channel. I do suggest going through and watching the full playlist from the first video to the end. Every single video has been created to help you in your trading. So for an area of demand here, we look for what we call the last sell to buy move. You already understood this by going through the previous video in this playlist. And of course, if you haven't been through those videos already, stop this video right here, go back, watch the first videos first, and then carry on watching this video. So we can see from here that we can mark this down from this last sell to buy move. Now our class is the last sell to buy move for me is where the market creates the origin. Okay, so this is the origin move where we create the last sell candle when we buy up to break this structure. And that is all we're looking at really. Now we also have this move here within this area, which is a sell to buy move. Now this is what I class as the last sell to buy move, which is that rally base rally. So we can see that this is also an area of demand that holds price. If we look what happened here, we can see that the market rallied out, we broke this structure high, and then we pull back into the demand and we continue to move to the upside. So it doesn't matter whether you're using what I class as the origin zone, and the origin zone is this zone right here. And zoom back out, we'll be able to see this better. So we have this as our origin zone. Okay, this is our new swing high that broke structure here. It's our last lower high because we had this market pulling down. This is our last low, broke structure, we pull back and we continue to go lower. So once we understand this concept, this is where you're going to draw out your areas of demand. And it's down here you can look for your entries. Now, I'm not going to go into the entries too much in this video. We'll do other videos going through entries, but there is an easy entry here. Then we look for the market to continue to run this high, which is going to be another break of structure to the upside. Now, of course, that will leave a new area of demand. There's also going to be our weak high. And when we're taking an entry down here, and just to give you a clue, this arrow is going to show you a perfect entry. We can target this high. And you can see that from this area, we went all the way up and we broke structure to leave a new area of demand. So how do we do the demand again? We look for the lowest point in this move. So the lowest point is this bearish candle. That's our lowest low. And from this candlestick, we look for the last sell to buy move. It's going to be from the highest candle to the low. And we mark this out as our area of demand. Now, there's a reason why we use the last sell to buy move, because anywhere in between this high and the low of this candle is where we can see the market react off. Now, we can refine these zones, especially this one here. We can refine this down to the open price. That's how I normally will look at refining my zones. Again, here you can refine this zone down here as well, but you can see the market doesn't come back to that area. Now, if we mark it off from the high, we do come back to the top of that zone. Now, it's not just this is our origin zone of demand once again, and this is our rally-based rally zone where we can see that price comes back into as well. So you can see how those zones will work together. And we also have here an area of imbalance, which also held price, but we're not going to go into imbalances. You need to go and watch the playlist after this playlist. So after that, we have another entry down here. And again, we see the market breaks structure once again. So once we break structure, we look to draw our new zone. Now, this is our current low. This means this is our current area of demand. Now, all what's happened here is that we broke up, we wicked this high, swept it, pulled back into this demand, and then rallied out again. That means we have this as our rally-based rally zone, okay, of demand. And you can see price comes back in. Now, again, if we refine that to this candle, we wouldn't get an entry. So you can see the importance of understanding the last sell to buy move here. Now, when we get to the bearish side, you'll see it's the last buy to sell move. So again, once again, we look for the market to want to continue higher to break that structure. We have a nice sweep here, the market, a nice bullish pin engulfing. That is another perfect entry candle, and we break structure. So where do we look for our zone? Once again, this is our low. So our demand zone is from the high of this candle to the low of this candle. And you can see we wick back in and we push out once again, and we break structure once again to the upside. So you can see the last sell to buy on this one. Now, if you're thinking it's this candle here, then you're incorrect. This is our last sell to buy move. Okay, because it's the lowest low at that point. That's what becomes our area. So again, we break structure. Look where the price came back to. Now we can mark off this high. We break structure once again. So our last area of demand would be here. And you can see the market breaks through. That now means we have a market structure shift, a break of structure to the downside. Now, of course, if you don't understand market structure, then you need to watch the playlist on market structure. Again, it's on the homepage of this channel, and you'll be able to go through how to read market structure, use of multiple time frames, the use of the internal and swing structure is all important. So here we come back down into this area of demand. Now, we're not looking essentially now for a buy of this demand, but we're looking for a reaction of this demand to push price higher. And that's what's happened here. We come into this demand zone to push price higher. Now, this demand will remove because it's been removed, and we look for our area of supply. On this occasion, this became the supply zone. This is our area of supply. This is our last buy to sell move. But on the way down, we did make this very small base drop. Now, it's not a zone that I'm going to look to draw. It's too small for me. Okay, but we do have an area of imbalance here. I'm just going to draw it quickly so you can see what I'm talking about. We have this area left over imbalance. That is where price came to the 50% to hold to push back down. Again, the imbalance playlist will help you with that. So expecting price to break structure again, we do break structure once again, and we're looking for that area of supply. There's our current high. This becomes our last buy to sell move. Okay, once again, we can see the market comes back up inside this area of supply. We have here what we class a sweep inside. That's a sweep inside supply. We expect price to run the week low. Where does the market go? But look what happens this time. This is how we understand we're not drawing an area of supply here. The reason for this, we never had a break through this low. We only swept it. And this final sweep of the low and this low once again on this candle indicates to me we're going bullish. And that this area here of supply is likely to fail. Now we also know this area never actually got quite to price, but came very close as we came off this area of imbalance. So once again, what we're looking for now is a reversal back to the upside. That's a break of structure here. So if we're looking for a break of structure there, where do we draw areas of demand? Well, this is our low. So this would be our last area of demand. In fact, maybe that this candle may be lower. It's not much in it. Okay, but that would be our area of demand. You can see we have this breakout, retest, continuation. We also have an area of demand that we draw here. Okay, inside that demand zone, this is the rally. So there's your like rally, base rally. And of course, we have this area of demand here that we can draw. Okay, the price unfortunately didn't quite come in, but again, we have an area of imbalance where price did come in. So this is the breakout. We have another breakout here. What does that leave me? That leaves me this sell to buy move again now. Okay, the market does come back in and we have an entry to go higher. Now we have a sweep of this low. So on a lower time frame, you're going to find an entry here on perhaps a 15-minute. So you can see how the market continues to show you those areas of supply and demand, and how simple it is when you understand the break of structure supply and demand strategy. Now this video is ready to teach you the concept, finding and marking out those zones of supply and demand quickly. Now, if you want to see more videos on how we look at the strategies with supply and demand, give me a thumbs up to let me know that's what you want to see more of. And you can drop a comment to tell me what you would like to see. Okay, that's what I'd like to hear from you, what sort of videos you want to see. So again, we continue up off this area. Now we don't have a actual pullback. We have this as an area of demand. But after that, we don't really have another pullback until, I would say, this swing high. We have a final break to the upside. So look, we don't pull back to area of demand, but you can see we push through here of this swing high. We obviously have this low in the market. We have a sweep. We push through. And because it's the low here, we break structure back to downside. But at that point, this became my area of demand, okay, until it's broken. Now it's broken on this bullish candle when we wick through. Now it could also look like it's going to be a sweep and we continue higher. When we have these reversals, this is the point you're going to start losing in the market. Now there's nothing you can do about it. You have to take that loss, pick yourself up, and go with the next direction of the market. It's all part of doing business. Too many traders out there do not look at trading as a business. Now, of course, if you want to start learning to trade like this as a business, I do suggest checking out that trading coaching experience. You want to find out more, then there will be a link in the description of this video. So here, what do we see? We have a break of structure. That comes from this swing high. So now we're looking for the last buy to sell move. That is that move there of supply. Let's remove this demand zone. Okay, and let's remove this sweep level so we don't get mixed up. So that's the area of supply. You can see very, very close there. Nearly came in. But on the way down, what do we have? We have a drop-based drop, area of supply. Okay, and again, another drop-based drop, area of supply. So you can see how you can easily call an entry here. Then after that, what do we look for? We look for the next break of structure. Okay, let's move across. So we can see we break through here. We create the next area of supply here. Okay, where we have our last buy to sell move. Okay, we continue with that bearish movement. Where's our next breakout on that candle? So we mark off from this. Let's just check where the swing high is. Okay, so the high is this candle here. Because that is the high of the move, I will use these two candles to the high of that candle to mark up my area. Now, look what happened here. We actually swept this high. And let's go closer into price here. So we're reading the candle movement. We have a swing low. We have another breakout. That means we have this as our last, okay, area. It's more like a drop-based drop. So it is a breakout. It's a valid pullback and a valid breakout. Okay, so the market does come back and holds that. We then have another swing breakout and we have another buy to sell move. So at this point, we're still looking for sells here. The market then fails to run lower of this towards this weak low. Okay, and we break through eventually on this move up here. So if I remove this area of supply, we can then draw from here a break of structure, which then creates this last sell to buy move area of demand. So at this point, it's going to get very, very confusing on where the market's likely to want to go. Let me just remove this level. So we now have an area of demand here. We have this area of supply. This area of supply, well, we reacted off this supply and then eventually we broke through, removed it. And then we've only wicked through this supply. Now that does remove the supply zone for me. Okay, but what we do have here is this sweep of this high. Now it's going to be very hard to look to take a trade here because what we've then got is the area of demand below. Potentially we're looking for a buy to go long. Now it all depends what we're seeing on the higher time frames here. We need to look at higher time frames, multiple time frames with supply and demand, how you can really look to understand this. Now there are videos in other playlists. We go through multiple time frames with the use of market structure. It's a great video. But if you want to see a video in this playlist where we go through multiple time frames, understanding supply and demand, then leave that comment and let me know that's what you want to see. So again, we then break down, okay, from this point, we have another reversal to the downside. This is a very complex area here, but I wanted you really to understand what is happening. And yes, you could have losing trades here. On lower time frames, you could get some little wins, and we could look for buy. We may have a losing trade. But look at the way the market's just pushed down. Not likely to find an entry there. So here we can see we break through. This is our last buy to sell move. Okay, we don't really come back to it. What do we have here? We have an imbalance zone where the market does react off. So once again, we pull back and we break this structure to downside. Now this would then be, this is the swing high. You could say this is the full zone where the market's coming back to. You could also refine that to the last candle like this as well. But you need to understand this is the full zone. So we mark that across. We do wick through. Now all that's doing, okay, is going into that zone which we never went into. Okay, so we wicked through, we've swept that high. Yes, we removed this area of supply, but it's not what, hopefully you're understanding, it's not a breakout. So we can look to sell from here and we target the week low down here. That would have been an awesome trade, okay? Understanding what's going on in the market. Just because we're in a sideways range doesn't mean we're going to reverse and go bullish. Now, yes, we broke out here. And yes, we have a base drop area of supply here as well. But like I've always said from the beginning, the origin zones are your best zones to be trading from. But you can also look at those base drop, base ready zones as well. But you need to have the best location. So we break structure once again. Here to downside. This is our main origin zone. And yes, we do have an area inside. And we also have this base drop zone there where the market does react off, okay, and continues lower. So at that point it did work, the base drop. We broke structure once again. Okay, and then we have this as our high. So this becomes our next area. You can see the market reacts off and we push lower again. Okay, so you can see how simple this is. We break structure once again. We look for the last buy to sell move. Okay, the market comes straight back in. And do we break it? Okay, we don't break the zone. We wick through, we don't close through. So it's not a break structure. So what is it now? It's a sweep. Okay, now this is all about understanding liquidity in the market. And there is a playlist coming in this channel for liquidity. Now there is a video already out, so if you want to learn more about the liquidity sweeps and the runs, go and watch that video after this playlist if you want as well. That'll teach you about liquidity. Now all this is doing is wicking through this high, going into this area of supply above. Okay, so then what do we have? We have another break of structure here to downside. Now I do hope you're enjoying this video so far. It's giving you some great education. That's the whole point of these videos, to teach you the concepts of supply and demand, imbalances, market structure, okay, and liquidity in the market. That is all you need to be successful to read these charts. And again, that we break through just on that little bearish candle really. So you could say it's nearly another breakthrough there. And that would give us this movement here. And again, that we remove the supply, but all we're doing is sweeping this high. Now, what are we sweeping into? This area of imbalance. That's why everything works together. You can't just trade with one concept, okay? That's why there's separate playlists to teach you each concept, and then you can put them all together. And again, that we failed to run lower and we broke structure to the upside. So at this point, we do have a valid break to the upside. Now, that removes that area. Let's move across. I know in hindsight we can see what's happening, but this is then our last sell to buy move. Now again, look, you could say it's from this high to this low is your full demand zone. And that's why we just see price pulling it back and then continue away, because that's the full zone. Now we do also have an area of imbalances here as well, but you could refine this all the way down to this zone here. And you can see that we have reaction, reaction, push away. Now we know it's going to be removed, that zone, but we can then identify, okay, we have another break of structure here. And now we potentially think we're going bullish. Okay, so we have this area of demand. There could be potential loss. Okay, like this could have been potential loss. You never know. And again, we actually just about closed that one as well. So we've actually closed that one and we've held this area here of supply. It's important to see where price is coming into. So we run straight through that area of demand. See, we break, there's your break of structure, okay? Where is our area of supply? Well, this is our high. So this becomes my area of supply. Where does the market run back into? Runs back into that supply. And, okay, we don't quite run into this area of imbalance. So the supply is what actually holds price. Then what do? We break structure here. A very small break of structure. This becomes our actual area of supply. And we continue to run lower. So the market, okay, is then running this low as we then break structure here as well. So we drop, pull back. Now all we're doing is we're pulling back again into this area of imbalance. So our last, okay, buy to sell move is here. We just failed to pull into that, but look what we're coming into. Okay, we're coming into retest underneath this level. Now that is where the support and resistance traders are believing we're retesting from a broken support, become resistance. That is not the way I teach it. Okay, not support and resistance. If you want to make sure you understand that concept, go back and watch the early videos in this playlist. It will teach you more on support and resistance versus the use of supply and demand. So look, the market drops down. We break structure once again. There's our last move we can draw. Now we do actually break out. Now this is where potentially we start having some losing trades. But when you're capturing these sort of trades from up here to downside, 1 or 2 losing trades, 1 or 2% loss when you're having some 3 to 4 risk reward trades. So you can see that we actually break structure, remove this area of supply. What is that going to create? It's going to create a new area of demand. So there's my last sell to buy move. That's all demand. We break up, we pull back in. We're expecting to run this high, it fails. So you could have called an entry in here on a lower time frame, but majority of the time you'll be out with some profit already, so it wouldn't be a full loss here. But the market does not run this high, and what we actually do is we run this low, so we have another break of structure. So we just run higher, pull back, lower high, run that low. So now that means we have a new high from this high. This is then going to be my area I'm going to draw of supply. We can see the market comes back into this imbalance, into that supply, and then we run lower. So you may have had a couple of losses there, perhaps on that reversal, but then you've caught this trade over here potentially for an awesome move to downside. So you can see the market breaks through, leaves this area here of supply. We just about test it. Let's just bring it down to the right area. Yeah, we test that area of supply, and also we go into this area of imbalance. Okay, we break structure once again. I know this video is being very, very repetitive, but this is how you learn, okay? We learn by going over and over and over that same concept. And that's why each of these videos would teach you step by step each and every concept. Now, this becomes my area of supply. Price doesn't quite come back. We come back into this area of imbalance when we sweep this high. Let me show you what I mean. So we make this low, we pull back, okay, we break structure. What do we create there? Create an area of supply, right? So we push through the supply, we don't close it. That's just a sweep, okay? Which means we can then still sell this market. Add a sweep into the area of imbalance. We also get that retest of that area as well. So we're still looking, we can trade this down. We don't get anything else there. So that's a valid sell we can take here out of that area of imbalance. We break structure again. Okay, this then creates this area here of supply. Market comes back into. We have across, we can start to see that eventually we break structure here to the upside. So this pullback, okay, we can see we've got a pullback internally as we go bullish. And yes, we can trade these pullbacks, okay? We can trade these counter trend moves. It's understanding how to with multiple time frames and with the use of swing and internal structures. So that area is removed. That means we have this low, we leave this area of demand. Then you can see this demand was actually react of this area. Now on the way up, okay, we do have more demand zones that you can draw. Okay, that held price. We have another rally-based rally area demand here. Price was held up there. And again, you can see price does come back into that zone. Okay, because this is a breakout. We don't break out again. This becomes our new high. This becomes our new breakout level. So the market does come back eventually into this area and hold this area of demand. We then are going to create a new area here. Now remember, these are origin zones. Okay, these are your best zones to be trading from. Yes, we create the last area here of demand. Okay, but look what happens. We come in, small push up, and we push through. And that's where you're going to take some losing trades. So be very cautious what zones you're going to trade from. Now we can also identify here. We have this push in. We have a sweep. Okay, we push up. We're expecting the market to go up to take out this high. We don't. We push back down. And we have another sweep of this low. Now you're going to see this type of price action, especially when the banks, institutions are looking to run those stops to push the market higher. It's going to bring in sellers. It's going to run the stops of potential buyers here already expecting this high to be run. And then it's going to continue on its way. Now look at this candlestick. We haven't really talked about entries or nothing on this video, but look at the candlestick formed here. What a candle after the sweep. Again here, look at the candle formed after the sweep. Yes, we could have got some good movements up here. Potentially could have been a break-even trade. Okay, some profits may have been taken on the way up, taking up this high, to take out this high perhaps. But this would have been your entry for the main break of structure, understanding the use of candlesticks. So we do break out here. And again, there's your area of origin. Now it didn't come back, and this is our last rally-based rally zone where price does come back into. Now for me, price is not just coming into this area, it's coming into this zone, and it's holding up the 50% of the imbalance. That's why it's important to understand different concepts. Again, there's our next break of structure. Okay, so we break through, pull back, and we break through. And finally, you can see we have this is our last sell to buy move. Okay, area here of demand. And we continue on its way. Today, I'm going to talk about that Forex supply and demand entry strategy. More, we're going to look at what the class is the set and forget strategy, and we'll also quickly look at the confirmation entry. The understanding of using a Forex supply and demand entry strategy is really finding the best zones to trade from. Now, the way we can do this is we can simply look at using our market structure and applying our zones. Now, we're just going to look at current price here as we move to the upside. If we look at this current area of price, what we can do, we can mark out, okay, this break of structure to downside, and then we continue to push lower. What I'm just looking for here is a reversal in trend. And we can see here is our first reversal in trend. So we've gone from being this bearish market to reversing to a bullish market. Now there's a reason we're doing this. Zoom out. We had this bearish move down on a bigger swing. Okay, we can see we had a break of structure at the same time, right? And that means we have this higher swing, which is classed as a strong swing high. And we're looking really for the market, if we zoom out, as it makes this pullback to want to run this low. So we now have what we class as trading range. Understanding your trading range is very, very important. What we're looking for now is a reason to look for a buy. So as we break structure here, we can identify we have this as our origin area of demand. And then we have this as we class as our breakout area of demand. Now, on both occasions, price hasn't yet come back to the zones. So we continue with price. We break out again, leaving this as an area of origin demand. Now this time, price comes back. So how do we look for a trade here? Well, if you're using the set and forget entry style for the entry system, we'd just be looking for entry to pull back into this zone created with a stop below the low. And our target would be targeting the week high. Now, once we have this as a target, what you can do, you can look at this as being where you're going to take some off the trade, or you can take all the profit off the trade. Now, if you want to take more profits, what you can do is start looking for the swings to the left, okay, where you can look for potential targets. Now, we've got this high here. So you could look to increase them to take out this high and this high. So you could look at taking 3 profit targets if you wish. That is totally up to you, but the entry strategy is understanding the set and forget. Now the set and forget means, okay, exactly as I say, we place our entry once we see this break of structure at the area of demand. I'll stop at the low and we place our targets. Like I said, whether you're going to go for previous swing high targets, or if you're going to just target that previous high created. Now, majority of the time, you will find the price will come into the demand and want to run this high. That's your weak high. It's our strong low of demand. So if you go through that, it's going to give you much better consistency when taking these trades. So again, when we break out here, right, we create this as the last sell to buy. Well, in fact, this actually is the candle. So it'd be this one here. That's our area of demand. Now price hasn't actually come into this demand yet. So we continue to look at price. And then we break structure here to the upside, leaving this area of demand. Now price has come back into this demand. Let me just mark that off again. But would you be taking a set and forget buy here? Well, perhaps put your answers down into the comments of this video and tell me if you would in fact be taking a set and forget buy off this area. And I'm going to stop there right now at this point. We'll come back to this at the end of the video, and perhaps you can have a good look at the comments what other people have said as well. So that's the area we're going to look at in a moment. Let's go back in time and let's look at other areas of price. So it's the same thing. We can look at the same thing down here. We can see the price is breaking structure. So we break structure. Where's my high? This is my high of the move. This creates my area of supply. So again, we look at this set and forget entry. Once we see this push down, we place our order, our limit order, stop above the high. Once we see the pullback, that is, then our target would be to target this low. Now, why are we targeting this low? Because this low becomes our weak low. This is our strong high up here and our strong area of supply. So we're looking for a continuation of the trend to come in. That's our set and forget entry. That's our target, just over 2 to 1. Now, again, you could look to run lower, which means you'd have to look back in time for an area to target. So we have a swing low there you could target, which means you could look to increase that, say, all the way down here for nearly a 4 to 1 risk to reward. So you could take some profit off here, final target there. Again, that's up to you. I'm not giving you that advice. I'm just showing you how you can look to use an entry model using supply and demand. So when we break structure again, we look for the next zone. This is our next zone created. Now, we do come back to the area, but it's not an entry zone I would be taking. Not right there. And unfortunately, we don't break out until here. So this pullback I would not be taking either, okay? So this would not be an entry I've taken. We break out again. This is a valid zone. This would be my zone. Right, so price does come in above, but again, this would not be an entry I would take, and I'll show you why in a moment. We continue to fall. We do have a pullback here. Now this would be an entry zone area of supply. Now on this occasion, we can see using a set and forget entry, we would have a losing trade. So you could have an entry here, targeting this low, stop above the high, and you can see this would have been a losing trade. Now, what we have to look at is that at this point, what do we have right above this high? The same as we do here. We have right above this high an area of imbalance. So what that tells me is that we could potentially run this high to go into the imbalance above. Now, there's a way that we can look at understanding this before it happens by looking at the imbalance levels. Now, what I suggest doing is going and watching the playlist on imbalances. There's some great tips in there to understand imbalances, and there's also the understanding of liquidity, why we could run highs and swing lows and swing highs. So understanding the imbalances, liquidity, and market structure all comes together with supply and demand. So make sure you watch those playlists. And we can also identify here that when we do sweep through this high, we then break structure. So all we're doing here is after we broke through this area, this is actually a breakout imbalance zone. And just for this video, I'll quickly draw this out where price came into. Now, it's unfortunate if you were just using an area of an entry on set and forget, you would have a losing trade. But if you'd have used a confirmation entry going down to a lower time frame here, there was in fact an entry off this spike up for a sell to this low. And that's how you increase your risk to rewards. That's how you get better as a trader by understanding the confirmation entry. So at this point, we've broken structure again. We can mark out this last buy to sell move. Okay, the market does come into it. We do push down, we make a higher low, and we remove the zone. So there's a losing trade. We reverse structure. There it is. We break out right there. Okay, so when we see this, our last sell to buy move is this move here in the market. Now that's already been tested into on this candle when we pushed up. That tells me that this candle here is likely to be the next zone to be respected. Understanding that we already pushed into this zone and we broke structure internally, continue to move up. This origin zone, I'm not expecting price to want to come back. We come very close, but we didn't come back into it. So then we break structure again, head to the upside. What does that leave? That leaves this as a sell zone we can mark out. And you can see price holds there. And again, that we can refine that zone to the last bearish candle. Price comes in and we push up. So that's a good zone that we could look to take a long. We can take a long off this pullback into the zone, into this area. So we just actually drag that across. So when we see this push out, we then look for that long, and it should have been marked there, sorry. And we're targeting this high. Why this high? Because that's now the week high where we see the market run. So you can see the market pulls back in. It's over 3-to-1 risk to reward, a good trade to take. And we're just following the sequence here of a break structure, pullback, continuation. Or we're following there for entry. Again, that's a good trade. So we had a losing trade over here. Potentially, okay, we had another losing trade again. We used this zone, which got broken through. And then we have a nice winning trade. And again, you could have used this zone, but it's quite a big zone and it wasn't the origin. So this is our next entry. We then break structure again. Where does that leave our new zone? Okay, we have a last sell to buy move zone here. Price doesn't come back to it, okay? So then we see the market breaks out again. Now we do have on the way up here a rally-based rally zone. Again, you can watch the videos on those later in this series, on this playlist. This is a entry area. You could take a trade if you wish off these zones, but I prefer to look for what I call that confirmation out of these zones, and I'll be looking to target this high. That's all I'll be doing here. Now, this isn't big enough for a set and forget, so definitely I want to be going down to lower time frames to check that. See, we have a good entry. We also have a nice area of imbalance there. The market can come back into for a reversal. So again, that we break structure. Our last sell to buy move is down here. That's already been tested by that candle. So we can look at the next one. Again, that was tested on the way out. So at the moment you would look for that, price never came back to it. Okay, so came back into the areas of imbalance. And you continue to do the same thing. Okay, we have another breakout to the upside. There's my last sell to buy move. That would be my entry. Off this area, we're going with the trend, targeting the week high. Okay, and the market's just under 2, probably just a little bit smaller, to 2.5. Okay, risk to reward there. Still a good trade. Now, again, you could look to increase that if you look to left full swing highs, but I would stick with a simple strategy of entry, targeting the previous high. So we break out again. Last sell to buy move is in fact this move here. Now you can refine that if you wish to the last candle, but we do come in, we don't run the high, it's a losing trade. Now, is there a way to determine that this is going to happen? Not all the time, but we can look at what we call the internal structure here. We broke this internal structure to downside. The market came down, we continued to break to downside and then took out the zone. So you see, using internal structures and those lower time frames will stop you taking losing trades. We're not even gone into that yet. But if you're using just the single time frame with the set and forget, this is how you look at doing it. Now again, on the internal area, we do have these areas being created. We pull back in, we look to target the swing low. Okay, we break structure again. So you can see how if we just take this one across, what got taken out, this acted and worked well. We then, when we broke structure, we kind of have this as a full zone, but I'll probably refine it to this last bullish candle. We don't come back to it anyway, but that would have been the zone, the full zone. So we're going now with that internal structure. We have broken this swing here, but we're going with that internal structure. You can see we have another last buy to sell move. And as the market would have been going for this low. So we had an entry here. Okay, we had a small one there. Probably wouldn't have looked at that the way the market was moving though. And this would have been how I would have taken a trade off that zone, targeting this low. Okay, that's what I look for there. But I want at least a 2-to-1 risk to reward. If I don't get a 2-to-1 risk to reward, I won't take it. But then it's where we can go down to lower time frames. Okay, looking for those entries. So again, this is the last buy to sell move here. And you could refine it to the last bullish candle, even the open of the candle if you wish. But again, this would have been a losing trade. But there was no risk to reward there. You can see how there's nothing there at all. Not using this type of strategy. So this type of entry strategy is how you can quickly just manage trades. So we can identify we do push up. We create a rally-based rally. We swing high there, broken. If you're looking at that internal structure now, we break out there. That does leave this full sell to buy move. Okay, very big zone there. Not a zone I really want to look at. And you can see this is all being tested. So we'll be using it. So the market pushes up here. We've broken this structure. And that's where we start getting to current price. Okay, so we then have really, this is a swing move down, swing move up, internal structure. There is a last move there we could draw. The market pushes down, very internal area there. Okay, but if we're looking at this swing move, we do push up. Okay, this will be your breakout area right there. So we push up, pull back, push up, understanding that internal structure there. So when we do pull back, what we see here is this area of imbalance holding price. Now, this is what we call that sweep, which you'll find more in that other playlist going through liquidity in the market. We do break structure again. This swing low. Our last area we would draw out is this move here. That's our last buy to sell move. So you could take an entry off there if you wish on the pullback. Now that means I would be targeting this low here. Not really a big enough risk to reward for me again. So the point this breaks out, we do have that area just to the left, but it's not an area either that I'd look to trade from. The main reason is we break this structure here. Does look okay. Okay, but then we still haven't come off this area of supply. It's a fresh zone. And this is creating what I class the area of liquidity. This is a trend line area of liquidity where the market's going to want to push up and run. We have no liquidity in between this move back. So we create this breakout, which then does leave this last area here we could draw, okay, of supply. The market pushes down. This is our zone. We didn't break out until here. So this would be the low. And again, you could look to short this zone, stop above the high, target this low. That's a good trade over 2 to 1. That's another winning trade. We broke structure again. Now, again, this is your last buy to sell move here. Now, there's an entry. You could have caught it. Okay. But we've also got to think at this point with reverse structure. So like I said before, we wouldn't take this entry after we saw the reversal of main swing structure here. That's what you got to take into account. So that's how we quickly go through the chart, understanding that strategy of applying the set and forget with a Forex supply and demand entry strategy. Now, current price, we'll get back to what we said earlier on in the video. Would you be taking a buy here? So did you put that comment in? Did you say yes or do you say no? Let's now look at what's really happening here. So first, we need to identify that we had another break of structure. That did leave this area of demand. That demand has been broken. What breaks demand? It's when we leave an area of supply. So we could look at first, this low was broken here. That did leave this as an area of supply. Market pulled back into supply and we dropped out. And we did what? We broke structure again. Yeah, we're going to come into area of demand and we're going to see a bullish move up here. And yes, we could continue up from here, okay, and break this high. Then continue on with the trend. That is absolutely possible. But with structures, we now have this as a next area of supply. So what we need to see is that the market wants to continue to push lower. Now, what we need for that is liquidity. And this is something that you need to really learn. As we have here an area of, mark it out just quickly for you, area of imbalance. Okay, what we need to see is liquidity inside that. Now we have a swing high created here within this move up. So if we saw push up here to the 50% of the imbalance and a close back down, then I expect to see a continuation lower. If we just continue to run up and run through this imbalance, then we'll break this high, and what we'll see is we'll see a continuation to the upside. That is how we understand liquidity. Now, what we can also do here is we could push up, okay, pull back, one final push up, and then drop away. And we start engineering our own liquidity as we make that pullback. On the way back up here, we have no liquidity, okay? This is engineered liquidity, if it works. Again, that's what it is when we continue to pull back. When we pull back here in this first demand, we failed to go into this demand. We filled this imbalance. This is our engineered liquidity after we broke out and we pulled back. Now the market could be continue up higher here, okay, and we could push through. But we need to see what happens as we fill this imbalance. But I hope down below you left your comment, okay, and you said yes or no. And you stick with that. If you believe this was going to be a sell, then where would you take your sell? Well, for this to be a good sell, we can refine it to this move. We could sell off this level as long as we had that liquidity, or we could go down to lower time frame here and we look for the confirmation. We're able to target this low. So a 7 forget is not good enough. It's not over 2 to 1. So for any trades here, we will go down to lower time frames and we look for that reversal. Perhaps you're totally new to the term imbalance zone in the market, and perhaps you don't even know how to find or mark on your chart. So that's exactly what I'm going to share with you today, how to find those zones of imbalance and how you're actually going to mark them out. Now we're on the EUR/USD pair currently on a weekly time frame. But listen, whatever time frame you do this on, it'll be the exact same process. Now the actual imbalance zone, let's just do a quick sketch of it. When we see the market pushing higher and we see the drop and we see a continuation, this is basically where we're going to see that break of structure, okay? If you're not sure about market structure, there's a full playlist. You'll find that on the channel homepage. Go through every video on market structure because it's going to help you to understand how we look at market structure and how you can apply the imbalance with market structure. So in this move here, what we're going to find is normally this is going to be an explosive move from this higher swing low in the market to break this structure. Now, very often you're going to find an area of imbalance is right at the breakout point, and we can find an area of imbalance can be formed there where we can see the market pull back down and continue off. Now, why does the imbalance form at this breakout? Because the banks, institutions are going to pump those orders in to break that high. And they also know this is where we're going to have support and resistance traders trading here. And when the market comes back, that's the area where they know they can manipulate those traders out of their positions at this area of imbalance. And that's where you tend to find a sweep into that imbalance where you can look for those trades. So the imbalance can form at that breakout point. The imbalance can also form from the move where we see the origin, okay, is forming an area of demand. Okay, in this situation, we can create an area of imbalance. And the imbalance can also be created after the breakout. Now, when we see an imbalance being created after the breakout up here somewhere, unless we have a really strong trend in play where we can see the market pulling back and continue off very, very quickly, they are not the best zones for you to trade. The reason being, we want to see that pull back, okay, to a good area for continuation. Now, when we're looking for trades, understanding the pull back into these areas of premium discount, that is how we look for that. And that's going to be in a different playlist series. So the imbalance zone itself, the way we create an imbalance zone, we just draw a couple of potential candles. So we can see the move away, okay, like this, a big strong move away. And obviously, I'm not going to draw here the wicks on the chart, but what we'd actually potentially see is a leftover area here between the high to low of that candle, which would create that area of imbalance. And that's exactly where you look for the next candles to pull back into that imbalance zone, okay, and you're looking for a potential trade out of that imbalance. That's a quick sketch just to show you the actual process of the imbalance zone itself. The imbalance will be between the high of this candle here and the low of this candle. That is how the imbalance is going to be formed. Once you have the close of this candle, it will form your imbalance left over. Inside this imbalance, you're going to have orders left at the high, the low, and the bottom of that end zone, where you can find the market come back to hold at the 50% normally for continuation back to that direction. Now, if you're in a bearish market, okay, again, you'll be looking at just the opposite thing with that imbalance zone. Now, we'll look at some examples on the chart as well in a second, so you can see how all of this is going to look. Let's remove all that. So if you want to go through that sketch again, obviously you can just rewind this video quickly. So we're looking at this market, zoom out. We can identify that we've been in a bearish market since we saw the shift went bullish. We failed to run this high. We then made a market structure shift of this low here to downside. Okay. Once you've seen the break of this low, that is then putting us into a bearish bias. But let's look at this area where we see that reversal, looking for those imbalances. Okay, we'll start here. We can identify we have this break to this upside. What did I just go through and say where we can find those imbalances? We can find the imbalance, okay, from the low of the move where we see the breakout and above that breakout, okay? At this point, we can identify the first area of the origin move comes from this area of imbalance. That's where we see the imbalance being drawn from the high of that candle to the low of the next candle. Let's go closer in so you can see exactly where I've drawn it, from the high of this candle and the low of this wick of this candle. That's where we draw the imbalance. We have in here this bullish candlestick. This leftover area of this bullish candlestick has not been tested into. That's where we have buy orders left over in the market. So that's that first area of imbalance. The next imbalance you can draw is the breakout imbalance, which would be this zone here. That we've just come to this example. I haven't cherry picked this. We've just come to anything to show you how this works. So we can look for potential bounce off these imbalances. Again, like I did say, we can see them bounce off the high, the 50%, the low. This video is really just to teach you how to find those zones and how you look to actually draw them out on your charts as well. So here we can identify this imbalance actually holds until it's closed through on this bearish candle. Now in later videos in this playlist, we'll go through how you can use the imbalances for directional bias, how you can use the imbalances when you're looking for the breaker structure, and how you'll be able to look for what I call the pre-imbalance zone. So keep watching the rest of these videos in this series to understand how you can use imbalances. Now, if you're enjoying what you're seeing on this video so far with the imbalances and how you find and draw them, then drop me a comment to let me know that you want to see more videos on imbalances to help you to really understand how to trade them. So right here, once we see this shift through, and when we see a reversal of an imbalance, which we're seeing here, very likely that's going to create what we class as a new imbalance. And that's what we have here. We have this new imbalance formed. Okay, so you can see this imbalance was formed on the break of this imbalance. We then also closed through this imbalance. We held and we closed through with this candle. What does that create? That creates a new imbalance. Remember, we can draw the imbalance zone from the low of this candle on a bearish move, what we do here, and the high of the next candle. So the bearish candle here and here, we have leftover orders. Now, either these orders can be pushed back into and they will be triggered to push the market lower, or they can be pushed through. So we can see here we pushed through. Now, if you're not sure about the idea of imbalances, look at it as a solid bearish candle, bullish candle. That's where you're going to find those imbalances. So we can see that we closed through here. And as we do that, we create this new imbalance. We have a bullish imbalance to the upside. Again here, look, we push through this bearish imbalance and we create this small bullish imbalance. Now on this imbalance, we don't come back into it. This one, we pull back into the imbalance on the lower time frame. That's how we can look for those entries. Again, later videos in this playlist will go through all this and we push higher. So this imbalance is then actually closed through with this big bearish candle. What does that create for us? We can draw a new imbalance zone. So you can see we can draw this new imbalance zone once we close through this imbalance. Now we have this imbalance that we had drawn. On this occasion, we just closed through this with this smaller candle. Now we don't actually make a new imbalance this time, but we've created the imbalance above. We look for the market to come back into. Now it doesn't actually pull back into that imbalance. So once again, look, we have this area created, an area of imbalance to the downside. This suggests the market's going to be bearish here. So we know the market's going to continue lower. Again, we can see the big bearish body of that candle, and you can see a new imbalance is formed in there. Price comes back into that zone, the full fill, and then we continue to drop lower. Once again, we then have this as a breakout point. Like I suggested, this is our breakout. We're breaking out here with the imbalance zone. Again, here, look, the breakout point is when we see the creation of this imbalance zone. This is what we class as the origin imbalance. This is the breakout imbalance. And this is also where we're going to see the support and resistance traders. In this case, it's an area of support broken, acting as resistance. So that I can mark this right the way across. This is where you're going to find those support resistance trades looking for trades, and they're going to get manipulated out because we can see a sweep here above the high of that candle. Now on the lower time frames here, the 4 hour, even lower, you're going to see those sweeps, manipulations to take them out of their trades. So again, that we have a breakout candle. What does that create? Again, it creates the area of imbalance that you can draw in the market. And we have the imbalance drawn again on this big bearish candle. So when you're looking for those zones to mark them out, okay, that's what you're looking for. You're looking for the large momentum candles. We have that as the breakout candle. Now, what did I say at the beginning of this video? If we create an imbalance zone away from that origin move, this has been the origin move, this is a breakout point, you don't really want to be trading off these zones because these zones are not going to be your best zones to trade from. And if we just drag that across, you can see it actually gets closed through and it's not even really respected. So this is the best zone, okay? The one which is the breakout area or the one from the origin move. Now in this case, we don't have an origin zone, so this is the breakout zone. You can see price actually comes back and we actually have a manipulation within that zone at the 50% of that imbalance. Now, in many other videos, you'll learn more about using the balances. Really want to just show you how those imbalances work. Now, we do have another breakout here, but we don't have an imbalance zone. We have that big bearish candle, but we don't create an imbalance zone. Now, later on, you'll understand about the pre-imbalance zones. You'll find out in a later video within this series. And this is actually a pre-imbalance zone. I'm not going to draw, I'm not going to show you what it is, but if you watch the rest of these videos in this playlist, you'll understand what the pre-imbalance zone is and how you can use that as well to trade. So there is an imbalance zone here you can look to trade. It did work, it did its job. Again, look, we have another continuation lower here. We have a breakout. We leave this imbalance again. So the imbalance, remember, is drawn. We're looking at that big bearish candle from the high of that candle. Once this candle here is closed, this indecision candle, that's where we can mark out the new imbalance zone. And like I said, we're looking at the low, the 50%, and the high of the zone to be used where we can see that reaction. In this case, we fill the full high. We do not close through. Okay, we hold here. There's some trades you'll be able to find lower time frames, target the lows, or some trade you'll be able to find, understanding imbalances in the market. So again, look, we follow with the trend. The trend is bearish here. We have another breakout to downside. Now before that, I believe we leave a very small imbalance here in the market on the way down. Now you're going to probably find that more on the lower time frames, but it does its job, holds price and pushes price down. Again, we can mark on this big bearish candle a new imbalance zone. And what do we see? That this is how accurate imbalances will be once you start to understand them. We pull back to the full fill, okay, of this move to the high of that zone, and we then continue on to break structure, head to downside. There is a small imbalance at the origin zone. This is our origin zone. This is the imbalance at the origin zone. Okay, remember we draw at that big bearish candle, the low of this candle, the high of this candle creates that zone. Price comes back, holds, and we continue to push lower. We then have another small break here. What does it create? Again, that becomes the breakout and the origin zone of the imbalance. Now, on this occasion, we do hold. We failed to run this low. Okay, this low here is not run. If you want to learn more on about using liquidity, there is a playlist on liquidity in the channel as well. That's going to teach you about highs and lows and how you can use liquidity to understand where the market's going. So this becomes a lower high with market structure shift head to the upside with this current candle. So this becomes a new origin. This is a potential breakout. Now we can't have a valid breakout until we have the end of the week. So at the moment, this candle would need to close like it is to form a breakout and a shift. Now on the way up, we don't have any imbalances that we can draw. So we'd have to wait for the next candle. Let's say this candle closes like it does. We have another bullish candle like this to the upside. Hopefully you can see that on your screen. That's going to create a new bullish imbalance. And then we'll be looking for potential pullback to hold at the high of the imbalance, the 50% of that imbalance, and the low of the imbalance. So that's simply how we look at drawing the imbalance, how you look at using it in trading with, I've just gone through showing you the breaker structure here. Again, more market structure you'll find in the other playlist. Perhaps you struggle to mark out those areas of imbalance. I'm going to give you an imbalance trading hack here today to make your life so much easier. And we're going to quickly go through how you can use this to your advantage as well. So on the USD daily time frame, and many of you struggle and say about how you can't actually find these zones very quickly for your areas of imbalances to be able to trade from. So what I'm going to do today, I'm going to show you an indicator that you can use on the actual trading view platform. You can search for this indicator and apply it. And I'll show you the settings I actually use as well to make this easier for you. So the actual indicator is called the FBG imbalance zones, okay, at JP. Can we just turn it on so you can see it? JP7FX, okay. Now that is the indicator used. Now it's not going to show the candlesticks like this on the chart. You're going to see zones being applied when you add it on. So what you need to do, you need to change settings. Before we go through the settings, okay, I'll go through those at the end of the video. I want to go through how you can use this to your advantage. Now, when you look at this chart, you're going to be able to see straight away, I'm just going to be pen, okay, so we can see that we have these blue and red candles. Now, the blue candles are going to show you where the price, okay, is making that momentum move to the upside, where we're going to see these areas of imbalance left over. Now, the red candles are going to show you where the area of imbalance has been left over, okay, to the downside. Now, these candles will not print until you have the next candle closed after it. So let's go closer into the current price. Let's take this candlestick right here, this blue candle. Once this candle closed, okay, we then had this candle form. Now, the reason for this is once we had this candle move up, and there's a way to understand this as an area of imbalance before it even occurs. Now, there's a video which I'll leave at the end of this video as well. You can go and watch that and you'll understand how you can apply this. But this candlestick turns blue after this candle closed because this wick, okay, did not fill that imbalance. So what I mean is we can put this level there and you can see we've got a very small gap left over. That's why it's a blue candle. So that means basically we can then draw an area of imbalance, which we don't have to now because we understand that the imbalance is there. So you can see we have a leftover imbalance sitting there. Now the same for this red candlestick. Once the close of this candle occurs, again, we have the move down, the big bearish drop, and then we have this candle pull back and closes where it does with this lower high. Now, once we see this lower high, we can mark a level off that lower high. This leaves us that area between where there's absolutely no buying in the market, just selling. This is where we have potential orders left over. Okay, there are blocks of orders. I'm not talking about order block and all that rubbish. Blocks of orders left over in these areas where the market is either going to push back into to continue or it's going to use those orders to push the market through. Now, looking at this area, you can use these candlesticks without even needing to draw a zone. This is why it's very, very easy to see your zones where they are on the chart. You can keep your charts nice and clean. You don't need to be drawing all your zones. So we can quickly identify the move up here. And when we see the market coming down, we know we've got this leftover imbalance because it's a blue candle. We can quickly look at the candle and we can see there is space in between. Now, the same thing, we can look here to the left. We can also identify we had this space left over in this candle. Okay, when we see the market pulling down, we knew we had this area of imbalance. Now, you could still draw your zone, but you don't need to. We'd have our zone left over here. And we can see the market comes back to the 50% area of that imbalance and then reverse back for this high. This is how easy it is for you to use, okay? Once you understand the use of these settings I'm going to share with you today. So look, once we see the imbalance close through, I'll share with you how you can read the imbalances quickly. We see the market pushing down. Now, you could draw this out if you wish, just to see price. But look what happens here. We actually push back up, okay? And we fill the high, nearly to the high of this imbalance. And then we drop back down. Pull back again, and we continue down. Now, when we see this area, okay, this imbalance, let's just grab that again, pull that down. Again, we can see the market is holding at the top. Now, we do just close through here, but instantly we close back to downside and we break structure back down. Then we have our next imbalance here. But this time, if we mark this imbalance out, we can identify we have the breakthrough with this candlestick. The next candle holds at this broken imbalance. That's because we have orders there have been consumed. The market's pushed through, okay, and they'll come back to the area where we broke through. Now, we also have here what I call a pre-imbalance where we have orders left over and that can be held as well. And that in conjunction with this is where we see that pulling back. Now, very often we would see this act and leave an area of imbalance. Now, this occasion we didn't because the market pulled all the way back down to hold that area. Again, here, okay, we would have had an area of imbalance pre-imbalance, which you can learn on that video at the end of this video. But we've actually left over this small imbalance where price may want to push down to just to grab those orders and push the market up. But when we see a push down like this, very often those orders have already been filled. So this is the simple way you can use this strategy, just by adding these zones. Now you can have them, they'll be applied to any time frame you wish. Okay, we can go all the way down. Let's go to a 15-minute here. And we can identify where the imbalances sit quite easily using these areas. So you can see this area here where we have the sweep of this low. What is that sweeping into? Can you see the blue candle? Okay, you can mark off that blue candle on its own. Just mark the blue candle. You can use the candlestick. You don't have to use the bit in between. Now we've got the bit in between there. That's the imbalance fulfill on this push down. We swept that low, up the market went. That's how easy you can identify it. But I'm going to give you a little tip here today. If you mark up the whole candle from the move where we see the push up, you can see how that holds at the 50%. Again, that we can see the next blue candle was created was here. Let's mark that off. And let's grab that again. Okay, so this blue candle, we push into it, we hold at the low, we didn't close through, and we push back higher. Now we create the large candlestick here. Again, we can see the market holds at the 50%, pushes out, pulls back, continues on its way. Now we're looking really now for the origin of the move. So this became the origin of that move. This candle became the origin of that move. And that's how you'll be looking at using those candles. The same here from the high. This bearish candle becomes the origin of that move. This one became the origin of that move. Now we did just push through and then drop straight back. And that's how I look at applying that type of strategy, just using those origins. The same down here, look, we can apply the origin here. The market down, we did kind of hold, then we closed through and we've pushed out. And if we look at the current price, okay, we can see this was the origin move. Market pulled back in 50%, and now we've continued on the way. And then we can start looking at the next origin candle. This was an origin candle. We came back in, and then we have this one as the next origin. We pull back in, and then we have this our next move. We've pulled back in, pushed out again, and then we have this the next candle. Let me zoom in. When we have a strong trend in the market, you will see these zones hold up very, very well. Now, I'm not even marking out the actual zones in between here. I'm just marking out the whole candle itself. Okay, so you can see that we've already identified the candle itself by using what? By using the indicator. I'm going to share with you at the end of this video the settings you need. I'll give you these candlesticks you need. Okay, then we can use the full candle. And you can see the market pulls back to the 50%, pushes away. Pulls back to the 50%, pushes away. Pulls back just above, okay, push away. Next candle, we pull back to 50%, we push away. Now, when I say pull back, I mean before we even see a break of structure, this can happen. Okay, so we can see this one moves sideways, pushes away. This one pulls back. This one pushes out. Okay, moves sideways, pushes away, moves sideways. We push up. Again, this moves sideways before we push away. So look, you can see we have this one now formed. It's not the best location, but we can draw it. I like to see these actually form with a swing low. Okay, this hasn't got a swing low. These were swing lows in the market. This formed from a swing low. We could say this forms from this swing low, this push up, but we'd rather see at the beginning of the move. So that's a quick strategy there for you to use the candlesticks themselves, okay, and start reading the price in the market. Now, how would you use it? When we see these pullbacks, you simply go to a lower time frame. So let's say you was using this on a 4-hour time frame, you go down to 15-minute and look for the entry. If you're using this on the 15, you can go down to the 1 minute and look for entry. If you're on a daily, you can go down to a 1 hour and look for your entry. Very, very simple technique. So that's how you can use the actual method itself. Now let's look at the settings that you've been waiting for to understand how I apply all these candles like this, to understand and quickly find those zones. What we'll do is we go into the actual settings. Okay, so you can see I've got this set to 0. I've got my 2 colors set. This is set to 0. Okay, so show the bar color. You can see if I turn this off, they disappear. So that's the bit you need to use. Okay, so I don't actually need this on at all. You just turn this off. But if I was to set this to 2, you'll see that we should have some zones. I haven't actually got them marked. So I've got them turned off on colors. So we just leave this as 0. They're gone now. And that's it. That's all I've got. And then I've just got the color boxes and then all charts. That's all you need to do. And that will give you these colors on these candles you need to do what I've just went through with you. Look how much more simplified this is going to be for you. No need to mark up all those marks. We can see, looking at this chart, briefly, quickly looking at the 4-hour time frame here, we can see where the market's pulling down. We can see the momentum moves where the red candles are appearing. Okay, momentum moves to downside. Then we shift, and look what we shift with, a blue candle. We shift through structure with blue candles. We do start to pull back here with blue candles. We move sideways, and then we have the next breakout. That confirms the bullish bias, okay, the momentum. So we know the market's going to want to come back to these candles. Now, we don't always have to come back to them, but you can see we pull back into that candle, we push away, and then we actually pull back into this candle as well. And then we're slowly now looking up, we're going to push for this high. So that's how you can use this imbalance indicator. Much easier for you to find these zones, and I'm sure it's going to help you on your trading. Now, I realize that many traders out there do not understand how to find that directional bias. So I'm going to show you on the pound US dollar on the daily time frame, 23rd of the 1st, 2024. We're going to go through how we look for that directional bias. Now, it's all about understanding your market structure, and there's a great video on how to map your charts with structure. But the key concept is we're going to look at some areas of structure in this video again, but with the use of imbalances as well. Understanding the imbalance in the market is going to show you where those hidden orders remain. There's hidden blocks of orders which need to be filled or run through as liquidity. So if we look at the last move here to the downside, this move here, this shows me a break of structure. So as a swing structure, we've broken out to the downside and we're looking for that pullback. So understanding a larger swing, we're looking for a pullback for potential sell back lower. And we just mark off this as a strong swing high, and this would be our weak swing low. So potentially we're looking for reversals now to target this low. Now, the way we do this, we understand the use of supply and demand. We're looking for that last buy to sell mode, which is this big buy up here to the downside. So for me, anything that comes within this zone, as a larger zone, is where we can look for those reversals. Now, we can refine those zones as well, but understanding the last buy to sell move is important. So when we see the market down here, as we see the reversal comes as we see this minor break here to the upside of this internal structure. Now, at the same time, how can we know that the directional bias is changing? If I zoom in, if you've not ever gone through the use of imbalances before, then this should help you to understand how you can apply it for that directional bias. Now, the imbalance is created when we see a momentum move. So you can see this big bearish candle drop away from this pin bar. When this happens, from the low of this candle here to the high of this next candle, when it's closed, this candle, it creates this area left over. This is an area of imbalance where we see the blocks of orders remaining, where either they're going to be run, okay, or they're going to push the market back lower. Now, on this occasion, the market is run through. Once we see this candlestick closing through, this is taking and clearing out those orders, and it gives us a directional bias as bullish. At that point, we know the market will want to run this swing high. When the market closes through that swing high, it changes our directional bias. Now we have a bullish bias, and we also expect that the market is going to do a swing pullback. So once we've seen this reversal, we know that the market will want to do a pullback against this swing to then head back lower to take out the weak low. And that's exactly what happened. From this point, we can see the market has made that pullback. So let's go closer again into that and see how we can read that directional bias with those imbalances. So now we know that this is the imbalance reverse price. We also close this swing high. What we then need to do is look for our next imbalances, and we'll mark those out on the chart. So we have an imbalance level here. The next imbalance level is above. And do we have any more? So we don't have any more imbalances until up here. So that's my next imbalance level. And that looks like that's it for now. So they are the only imbalances that we currently have. So pull that across. So once we see, you can see the market, once we broke out of this swing high, we knew the swing pullback was going to occur on that time frame. We come into this area of imbalance, reject it, refill it to the pip. So we expect the next time the price comes to that area, we will close through. This pushes the market back down. So what this imbalance has done is basically it pushed the market back to find an area here of demand. So in theory, we have this area as a demand zone, and we can refine that zone down to here, where the market pulls back in. So this is where you can potentially look for a entry, a counter trend entry, sweep below here, nice looking pin bar, and we target to take out this imbalance. So if you was using this as a directional bias, we would look to go long here to fill this imbalance and remove it. As we already filled it once, we expect it to be removed, but that will be my target, just over a 3-to-1 risk to reward. Now, once we close that imbalance, we expect the market to go to the next level. This is the next level, and we can close that at the same time. So our directional bias is still bullish at that point. Now we can look for the next area. So we do have this as our last buy to sell move. So you can see that the market pushes down here and we buy away. Now we can refine that to this area here, which again is a new sell to buy move, which broke this area. And you can see the market comes back into this area. Nice looking rejection candle out of there. A doji as such with a nice bullish move away. So at that point, that signals to me that we look to go long once again. So from here, we would look to go long, and we can target the next imbalance, which is this one here. And see that gives us over 3-to-1, nearly 4-to-1 risk to reward. And that's how we look at that directional bias. We keep going with the market. At this point, the market's gone up. We closed through, okay, that area. So that means we're going to go higher. So now what you can do is look for your next imbalance level. And we also need to incorporate swing highs and lows for the next area of imbalance. If we look at this market, we have a very, very small area here. Very small area of imbalance there. We have another area of imbalance here. And a very small one above. But we won't mark that one. We'll just mark these two out for now. So as we've now closed through this imbalance, we expect the market to want to go for this imbalance next. And where does the market head towards? It goes for that imbalance. So once we see this pullback, we'll understand we're looking for our areas. There's our area, which is the last sell to buy move. And we can map this out by understanding structure. And it's important that you understand your structures in the market. We do have a very small structural pullback there. And that's what causes that market to continue higher until we get to this imbalance. Now notice when we got to this imbalance this time, we did not close through. We rejected it, and the market, in fact, has pulled back to this low. And I do believe we just closed through by a pip or so. So at this point, potentially the market could well be coming back to an area where we could see this swing to reverse back to tag out this weak low. And that's essentially how you look for those imbalance zones for that market direction. Once you understand the market structure swing you're within, this is our current daily swing. And we also need to understand this is our internal structure, reverses that high, which gives us this reversal. And now we know the market has been bullish. Now you could use this as one full swing to here and a pullback and the market continues bullish. So once you understand the directional bias with the use of your market structure, and again, watch that video coming up, which goes through the mapping of market structure and the use of supply and demand zones, and you incorporate the use of these imbalances for market direction for the bias, it's going to help you to start finding that true daily directional bias. So again, until we actually close through this area of imbalance, we will not go to the next one, which is above. We don't have to go to fill that imbalance, but the orders here could be the orders inside this area of supply, okay, which pushed the market down, or we could just push down from here. So how do we know where the market's going to go next? Quite simply, all we need to see is the reversal. So again, here we had this push up. We just broke that high with that bullish move, and now we've pushed down. Now we'll check in a minute, see if we actually closed that low. If we did, then we're looking for continuation to downside from here. Let me just double check this for you. So we have a low of 1.26124, 26105. So that did indeed close below the low of this candlestick. So at this point, we have a bearish bias with market structure. Now, looking down here, where's our next area of imbalance? Well, the only imbalance we have left over, the first one, is this move here. Now, that could be where we see the market want to head towards. Now, if we look at current price, once we get to this point, the market pulls down, we break, we do leave this area of imbalance. Now, that was removed through with this candlestick. So I would expect to perhaps see the market want to run this high first to take the liquidity, perhaps to fully fill this imbalance, as we didn't fully fill it, and then look for another drop. Now, of course, if we do go up there and we close through, that means we're going to go up to the next area potentially. And that's how you look for directional bias. And this is not something that anybody really teaches. You can look around on YouTube. You're not going to find somebody who shows you how to use these imbalance zones in this type of way. So if you're trying to trade the fair value gap and you keep losing, keep watching to see correct way you should be reading these gaps in the market. Now, whether you class it as the fair value gap, I class it as an imbalance zone. You can also class it as a liquidity gap in the market. There's a correct way to trade these gaps. And if you're trying to trade them on every single gap in the market and you're losing, then this video is exactly what you need to be watching. So we're going to have a quick look over here. Yes, this will be in hindsight because I already know the price action, but I want to show you step by step how you read these gaps. So you can't trade every single gap. By this, I mean, you're going to find that these imbalance zones, these gaps left over, will leave orders and they're going to be filled and used to either push the market through when they're filled and absorbed, or you're going to find they're going to be filled to push the market away. So if we take this example right here in the market, we can see that this gap didn't work. Okay, you can see the market pulled up, come straight through, absolutely no buying pressure coming out of this gap. So how do we use these gaps successfully? You need to understand market structure. You need to understand supply and demand techniques. But let's go through how you can read these gaps, okay, these fair value gaps correctly on a chart. So let's go to this area. Right here on the chart, what do we have? We have one gap here we can mark. Then on the way down, we have absolutely nothing else except for this swing high. So right now, we do have some internal structure here as well, which I could mark off. We're going to pull back. So we can mark this off as a high. We go forward price. Okay, we've broken structure here. Now, one thing that you may not understand about gaps is that even when we create this move like this in the market, this is a potential gap. And we can very often see price want to pull back in and then continue on its way. So the gap, how is the gap actually formed? Well, we're going to use this as an example. A gap is formed when we see the candle high before this candle continues to be bullish. Now it can be a bearish candle here, as you can see this gap. And then we look for the next candle to create a higher low to leave a gap inside this bullish candle. So we move one candle. This has not happened, but look how this candle has pulled all the way back and we've held at this zone. Now, potentially we could see a continuation higher if we do not see a close through this level to start with. So we've closed through and wicked lower. Now, this could be getting orders out of this wick here in the market. Let's continue forward, and you can see we've wicked and we've pushed through eventually. So now we have a break of structure here. Understanding structure in the market, we have a break of structure, pullback, potential continuation. So this wasn't a great example because there wasn't a gap formed. Let's look at this here. Again, we have this potential gap left over. And we have to recognize we're coming into this gap here. So we need to see this gap removed, okay, for continuation for this gap to work. So we move higher. So now we can see that we created this new gap. Now we want to see this closed through this gap or potential pull back into this gap. Why? Because now we have a valid break of structure here. So we had this break of structure here to the upside. So understanding your structure is key. We had a break here to upside, pull back, and a breakout. Now, if you're not sure about anything to do with market structure, there are some awesome videos in the channel. And in fact, I will leave a video at the end of this video to teach you how to map out your chart. So we have this potential gap left over. Now, when we're using a gap, we're looking at 3 levels for a potential entry. The high of the gap, the 50% of the gap, or the low of the gap on a bullish move. Now on a bearish move, we're looking at the high, the 50%, and the low of the gap. So as you can see here, price came back into this gap. Let me just show you. The gap originally was here of the high of this candle. We came back, we held, okay, at the low of this gap, and that pushed price down. That's how you understand the use of these gaps. Now, the market's now gone up and we've closed through the 50% of this gap. This tells me we will go for the high of the gap. Let's just go forward 1 candle. Now we've pulled back after coming towards the high of this gap. Okay, so we haven't quite touched the high yet. We've pulled back into this gap. Now look, we closed the 50%, wicked the low of this gap. Now, one thing I need to tell you is when we're trading these gaps in the market, if we ever close through the bottom of this gap, it's invalidated and you expect to move lower. If we only wick through and it holds, we'll expect to move higher. So from here, we've wicked through. We are going with this trend. We are now bullish of this structure. So I expect to see here a potential continuation to remove this gap and to go for this high. So there is our continuation. We've held this gap. This gap has done its job for continuation. Now there's a reason why this one has worked, because we're going with structure. This gap created the break of this structure. The same with this gap. This created the break of this structure to the downside. Now we've also removed this gap, which now indicates we will go for this swing high. And that's how you can start to read the fair value gap, the imbalance zone as I class it, or the liquidity gap in the market. All they're doing is we're finding those orders left over. So we continue forward and there we go. We wick the high. That's how easy it is. Now what this is part of a potential swing move with our internal structure within. Understanding your structure is key. So as we continue up here, have we left another gap? We have just left a very small gap here in the market. Okay, so a great gap there. Potentially we see a push away. We want to see it close through this high next. So there, we've got to close through this high. That is qualifying a continuation. Now, we have another gap we can draw here. So as the market moves higher, we can draw out these gaps left over. And another continuation. So you can see how I'm drawing these gaps out. And when we're using this, we need to understand as well, where's the move coming from here? The move is coming from this low to this high. So we want to see a pullback at least to the 50% or lower when we're looking for potential trade. So this gap here to me will not work. And that's how you understand these gaps. Now we've got a lower high, so a potential pullback. So you can see we've wicked through to test this 50%. If we see a continuation here, perhaps on lower time frames and break a structure, then that could give us an entry to go long back for this high. But we need to see what happens on this next candle. Now we've wicked through to retest this low. Now remember, what did I say? If we mark this out, We're not even got to that 50%. So for me, I would not even be looking for a trade here. I want to see a pullback to this gap or even this gap here. Now we also have here is an area of demand. So potentially a pullback to this gap and this gap working through to demand is an ideal area for potential trade. It's going to be the swing pullback, and that's how we look at using these gaps. This gap is a potential reversal. If we can see it close down and a close through the 50%, we know we should remove this gap. So we wicked up, swept the high, and now we've closed through, again sweeping through the bottom of this gap. Now we should take this gap. And we just see, and we've closed through. Now look at this, we've actually wicked through this gap as well. So this gap has now been removed. It's done its job. And very often we're going to see a new gap created once we remove one. So we can see that we're going to create this new gap here, potentially. So how these gaps can work is we can see a pullback, okay, within this gap, and then a continuation lower towards the demand. That's how we can look at these gaps. So we've got a pullback towards the 50%. We've closed and removed this gap. We've now wicked through this gap into the demand zone. So this now tells me potentially we could see another move higher for this week high. We've seen our pullback to demand. And this is where we start looking for those trades on the lower time frames. Understanding these gaps in the market is key where they are located. So now we actually move this gap to here. And then we've got to close straight back up. That's a good sign that potentially the market will now go for this high. And we've actually closed for the 50% of this gap. So I'd expect to see the run through the high. And removing this gap, we have nothing else here to the left. So then we expect this high to be run. So we hold at the gap. Now we've closed through. This has now done its job. It's been removed, and it shows us the continuation for the swing high. We could see a pullback yet, okay, take out some of these lows, but we should see a continuation for the high. And there you have it. So hopefully you can start to see the key area of these gaps. Now, of course, if there's anything so far we've gone through in this video you're not sure about, just leave a comment below. I will answer every single question. But now we can see we've just closed through this high. That's a continuation. So now we have a new swing to the upside. So our structure continues to be bullish. So we have even this swing move here and a pullback continuation. That's what we're now looking at. And we have our internal structure as well. So let's see what happens. Now we have a potential new gap. So we can mark out something here like this. Now we could see the market pull back into these gaps, just like we saw on this candlestick down here. When we had this candle like this, it was a potential gap forming in the market, and we see we held at this area. So we don't have to even look at the gaps after they're formed. We can actually look at these areas before they even form. That's how someone really understands how to trade these gaps in the market. Now, if you've got to this point and you're really enjoying this content, then leave me in the comments, I know how to trade gaps. All you need to write is, I know how to trade gaps. Nobody's going to know what that is about unless they've got to this point in the video, just for a laugh. Now, when we get to this point, we want to see a pullback into this gap continuation. That's what we're looking for. Okay, there you have it. Okay, that's how you can identify these gaps before they even happen. Now we've actually fully closed through, potentially look for that continuation higher. And there's a continuation higher. So again, we then have a new potential gap pair is forming. Now our swing is now obviously going to be from this low currently to this high. So again, we need to come back to the 50% area, but we don't have any gaps there. Let's continue forward. Again, look at this, pull back towards the 50% continuation of that gap. Now we've actually left an actual gap in the market, and we can draw out a new gap potentially here. So again, you look for the pullback continuation. And we didn't really get much of a pullback. We just a tiny pullback. Remember, like I said, the highs and the lows and the 50% can be used as a gap. So we have this gap in the market, and look at that move away now. Now, this is where many traders are going to start to see this big gap. Okay, I think, okay, this is where we can look for pullback continuation. But what you now learned with understanding structure in the market, would you want to be trading that? Let's have a look. Where is our current structure? If this is a pullback from here, there's our 50%, which means we're not going to even think about a trade until we come to this gap here. And even below that, we do have a very small gap left over just there. I'll draw that out anyway. So a very small gap. So to be honest, all these gaps, not even interested in. Let's just see what actually happens. So we've continued down. Okay, not quite got to the 50%. We closed the first level, which is the high. Okay, now we've wicked up, we've swept the high. That's an indication of a potential bearish move when we close this 50% level. We expect the full fill of this gap next and then potentially go lower. And there we have it. We go low. We totally take out that gap. On the way down, just so you can see, we do have a new potential gap forming. Now, very often you're going to see a gap form. We do have a small gap there as well. Okay, so this gap here, I can just draw. This is the gap what removed this gap, which we had this one here. This fair value gap, liquidity gap, imbalance zone, whatever you want to refer to as. Myself, I look at it as imbalance zone. This is all being removed now. And now potentially this one will be removed on the next candle, because look at how this wick went all the way down to fill this imbalance. There we have it. So now we can see that this one has been removed. And now just remove that. And now we can see this one basically has just about pipped through as well, and that's been removed. And then we've wicked through this last gap. If this gap does not hold price here, then I'm expecting price to go to take out the low of this range. We work in ranges, okay? This is our current trading range. This is how we look at trading gaps in the market. Not all that other nonsense. I see so many people showing you trading the gap like this. It's not the way you read these gaps. They're used for directional bias, looking for those areas where those orders are going to be absorbed or they're going to continue that move. So here I expect to see a potential pullback into this gap and a lower move. That's what I'm expecting to see. Again, we do have another potential gap. Not much there, no, there's no gap actually. Let's go forward. Now we've got a continuation. And you can see we've left this potential move here. And this gap here, okay, we did wick up. So you can see we've got a new gap here, new gap, okay. Now, we removed this one. What does that now tell you? It tells you that the market is most likely going to reverse this trend. This current trend, to me, is most likely going to reverse. Yes, we do have a potential area of demand here. But now all those orders left over have been completely absorbed by this move down. I'm seeing a bearish move here, leaving new gaps. Okay, so I expect to look for continuation to the downside. Yes, structure is bullish, but reading these candlesticks on a lower time frame, I guarantee your structure will now be bearish. So we hold, okay, at this gap. Now it's not an actual gap left over, it's a gap in live conditions. So we could pull back up next candle, and we do. So we held at this gap and we've pushed through. So now we pushed through this gap. We could potentially now come up to this one here. Let's just see if we go up to that gap, moved up higher, and we've wicked into it. Okay, so look at that, nearly the 50%. That is how you read liquidity gaps. That is how you read the fair value gap. That is how you read the imbalance zone. Understanding this is key. Now look, on an internal structure here, we actually broke this low right there. So we expect continuation down. Again, there's nothing in here. There's only one thing I expect the market to go for next, is this low, and then this low. If we close this low, we go for this low. Okay, so what do we have here that I didn't draw? We have a potential gap in the market. So we've held at this gap. Okay, we do have a leftover gap above, but I wouldn't expect the price to come back to that yet. Potentially, I look forward to hold at this gap. We've held, and we continue to be bearish. So you can see how this works. We have a new potential gap forming. This one was completely taken. Now, I'm showing you a different way to trade these. You wouldn't have seen this anywhere else before. Continuation down. Look, we pull back to the 50%, continue down. We have another potential forming gap. Okay, we do have a leftover gap. Now we're going towards this low. We wick through. Okay, we've wicked through and we've actually wicked up to the 50% of that gap and we held. Now we have this gap left over. Next candle, we've closed this gap, removed it. What does that now tell me? Potentially we're going to go for this gap and then we can look to run this low. If we run this low, we will take out the range low of this swing and we continue to be bearish. So looking at this, we have a current gap forming, okay, to the upside, very small one. So we can see a pull back into this and a push up for this high. So there you go, the pull back into this gap and a push higher. Now we have nothing else, so we could see another pullback continuation again into that area here, and then potentially the close of this low. So we spiked lower. I'm still expecting a pull back into this. We need to pull back to get those orders to push the market lower. Now we could sweep this high and into this gap still. I still don't see this going down yet. We could, but I want to see it take out this high. So what do I mean? We have a swing high left over here, which I'll class as potential sweep. So I'd like to see it sweep this high into this gap around the 50%, continue low, or the low or the high, as long as we wick through into this gap, gives me those orders. Okay, so there we have it. Sweep above the high, 50% of the gap. We haven't quite closed this level, but we've closed at it. So we should take that. Closed at it. And again, we've wicked through, but we're still going lower. Look, we're going to remove it. Continue higher. Okay, we could come back more to this gap. Let's see. Now we've turned back down. So we made a lower high. Still need to see this close through. Continue. Okay, so we wicked through again. Didn't quite come back to this gap. And we wicked through again. Remember, we're still bearish here. Got no reason to be bullish. Okay, now we've created the push down, closing through this level. Now we've taken out that low, we will remove this full swing and we'll put in a new bearish trend. There we go, we've closed it, okay? And we'll continue hopefully. So now we can see exactly how this works. And even here, there was a gap forming right there. We wicked through, we held. Now if we do close back above, which we have, we may go back up, take these highs. But understanding that, reading those gaps, and let's just go forward. Let's see if we do go up. Okay, so we do go up and we continue back down. So what happened here was, if we just look at this, we created this potential gap. The market pulled back, we held, and then we closed back through. And we removed this small gap left over. So once we removed this gap here, on this bearish candle, we removed it. We had a bearish bias there. And then we can actually mark out this potential gap here. And what happened was, we can see the market pull back and then we continue down. And that's how you can look at trading those gaps in the market. Don't blindly go out there trying to pick up every single gap and trade it with that market direction, because very often they will reverse the market. So let's go over to this Euro USD daily time frame and let me show you how you should be using the imbalance zones in your trading. So let's start from this area and I'll show you step by step. Now you can do this, you can back test this as well. In fact, we'll actually do that on a replay ourselves. Let's go replay. Yes, I know it's going to be hindsight because I know some of the price action, but this will give you a better understanding. So let's just go forward by candle. Right, I want to see a break to the upside. So there's the first break to the upside. We already know, understanding that you have to understand market structure here. You can't just use this blindly. So we had just the close above this high. It puts us into a bullish bias. That means any pullbacks into areas here of potential demand, we expect market to run this high. So how can we look for potential trades using those imbalance zones? We're looking for the next area where we see an area formed. So as we see this candlestick form like this, let's go close in the daily. What we can actually do, we can actually look for trades here on lower time frame. Let's just study this on the one time frame for today, and we'll study it on a one candle by candle basis. So we're looking for the next candle to come back and to hold within this zone. We want to see it hold at three different places. When we're using an imbalance zone, we either look for it to hold at the high of the zone, the 50% of the zone, or the low of the zone. Now we do not want to see a close through. We can see a wick through, but we cannot see a close through that zone. Let's go to the next candle and see what happens. Okay, so we've closed through. That's invalidated this zone, and we would not now look to use this as a potential zone. Now, the lower time frame, you was probably seeing a push up and a straight push through here. Now, we need to wait for the next candle to show us a close below the previous candle's high or low. So again, we haven't got anything, nothing. Okay, so now we've pushed up. So we have broken structure, and now what we have a new potential strong low in the market and waiting for a pullback for a potential weak high. But what we can do here, we can mark out this as our next zone. And what you're looking for is the market to pull back into the 50%, the low to hold for continuation. So again, we've pushed straight through. Okay, we've closed through. So let's invalidate this. And we look for the next one to form. So we form one to the downside. Now, what this can now help us with is we know we're bullish here, and we know we're looking for continuation now to do what? To target a weak high. So we are coming into areas here of potential demand. So we could draw an area of demand like this, potentially an area of demand. Let's put this as a daily zone. And we could look for the market here to just wick in and push out. Now, in reality, this is our last sell to buy move, so we could actually say this is a full demand zone. So anywhere here, we could see a reversal. Now, the best place is to look for this zone to hold, just for a wick to downside and a bullish candle. That would give me a buy. So we've just about closed through, and we've gone into the zone below. Okay, so we can just see we've left this zone here. A bullish candle now gives us a reason to buy, but we've already had this candlestick. Not only has it gone into our area of potential demand, we've just made a sweep of this low. And this is actually, to me, a very good time to take a buy. Let's just see what happens. Indecision candle. Let's zoom in. Okay, look what's happened here. We've held, okay? We've made a higher high, higher low, and we've held at this imbalance zone. A very good sign that potentially we could see the market want to go higher. So what I'd actually do here, I'd actually place a break above this high, and then I look to target this high. Now, obviously on the lower time frame, I'll be looking for lower time frame entry here. That's how I'll be looking for a trade. So we've got the push up, okay? This is perfect. Now we can see we've got that directional bias again with the imbalance zone. We've created the next zone. We're looking for pullback in the continuation. So what we're doing, you see, we're looking for entries, understanding where we're looking for entries and how we're looking for them. We're then going to use these to make sure we're going in that right direction. And we can look for adding our positions by using these zones on the lower time frame. So this isn't a good sign, not a good sign at all, because we've actually closed through that zone again. So this potentially does indicate we could want to push lower to look for another low here in the market to potentially push the market higher. Let's just see what happens. And there you go. See how easy it is to call those areas. Let's just move this. So that would have been a losing trade based on that. And we were looking for this high to get run. So we still have this as our strong low. Okay, no reason to change that. What we've got now is this wick through. And like I said, once we saw that close of that zone, we knew that the market was going to take that low. Potential new buy to the upside because we've wicked this low. So you could look for a breakout trade above that high. But let's just wait for the next zone we're looking for. Okay, so we have one here. So let's say you haven't taken this buy on the lower time frames here. You've now seen this zone. This is where you can drop down to lower time frames, and you're looking for an entry to hold off this level, and this low. So you can get a quick pullback, continuation. Okay, that's the sort of thing we'll be looking for in the lower time frames. Now you can use whatever you wish, but you can see here how the market is held at this strong low, and we have a pullback, and we just hold at that high, and we run that weak high. Now again, look, we do the same thing. We create a new zone and we look for the pullback to add into our positions. We have a pullback. Now we are above this swing high. When we want to be using these sort of entries, we want to be doing it down here as close as possible as you can where we're seeing that move coming from. Okay, so this could potentially be a new high to pull back And we come all the way back to this area here of potential demand, areas of imbalances. Let's just go forward another candle. Okay, so we can actually identify, I've actually just taken that off, put that back. We've now just held at the low of the zone. Okay, we've closed back above the 50. This could indicate another push higher. We've done the same again. We've wicked through the low. Okay, we've held at the low of the zone. But now things have changed. Okay, this looks like a swing pullback. And all we're looking for is the close of this bottom of this zone. We're actually holding at the bottom of that zone, and we just created a new potential zone. So the lower time frame here, you could say this is a potential swing pullback, okay, and you'll be looking for this weak high to be hit. And that means that this is the breakout point. This becomes your new strong low down here. And we just mark this out, and you could use this as an area of demand. Now, in theory, it should be the last sell to buy move. This would be your zone of demand. Anywhere here, if price comes in this zone, you can see a reversal. We're at that area right now, but if we confine that to this area, okay, that's roughly where we'll be looking for market. But we can look now here for an entry on lower time frames. Understanding this zone, we can see a pullback into the area of this zone for continuation for this high. And there you go. Okay, so we can see how the market has pulled back to the full fill of this zone. Okay, this is not what you've been taught. Everywhere else, you'll find that you're waiting to mark up these zones like this after this candle's close. You don't need to do that. If you understand the momentum coming in from this bullish candle, that's where those buys are coming in. You need to understand the body of these candles. So look at that. You could have caught this trade on lower time frame. So you really want to be going down to a 15-minute to 1-minute entry here to look for these types of trades. So now that leaves us, okay, this new zone where again we can look for pullback. But what have we now done? We've now broken out, okay, and we've created a new strong low, a new area here of demand. So we're expecting a pullback. That doesn't mean it's going to pull back straight away. So let's just see if we get a pullback. We can still look for buys here, but you need to have it in the back of your mind. You could expect a pullback. So we've got a single candle, indecision candle, and then we get a sweep of the low, and we've continued higher. So we now put in a new zone. Now we know this has actually swept these lows into this zone. So that's a valid area. We could have potentially found a sweep buy, okay, on the lower time frames. Let's go forward. Again, look at this. We hold at the imbalance. Okay, another potential area you could have taken a trade. Not saying you're holding these trades for long periods of time. You'll be looking for quick in and out profits here on the lower time frames. Now we've got a first sign of a reversal. See, we've just closed, I believe. Just bring this zone down. Okay, so our zone is actually from the high of this candle we've closed through. That shows us a potential reversal. So we don't really need this zone there now, but this does show me the potential pullback. So this is the potential area where we create a swing high and we could see a pullback. Let's just go forward and see if we break out again. So we have broken out with this candlestick here. We create a new zone. Okay, we've also just gone through this old zone as well at the same time. We've broken straight back up. So let's wait, and we put in a new zone. So this shows us, okay, what this is showing us right here is that this high swing low is a small area where we create a new strong low, okay, potential weak high. What I wait for is the breakout of this high to confirm this. So we held at this new imbalanced zone. You can see we just wicked through and we continued higher. And we actually came back to test it again. But if you look closely, we did have this zone here, which held price, and we've broken out. That now gives us that breakout, which then gives us a new area of demand that we can draw. Now, again, it would be from this high. This is the last sell to buy move, but we're just for this purpose, we'll mark it like this. We then mark out a new area of imbalance. And once again, this is our strong low. This is our breakout. This is our new strong low. This is our push up, pull back continuation. Okay, this is our breakout. you'd now be looking for a pullback at any point now. As soon as you have that breakout, you can look for that swing pullback. So let's continue with the next candle, looking forward to hold. Okay, so we've currently hold within that zone. Now we've broken through. Now that looks more like a full swing pullback. And the size of that candle looks like to me we're going to just not pull back. We're going to run this demand, perhaps run this low, and we can even take out all of this and full reversal. Let's just see what happens. See if we can hold at this. We've actually wicked through, so that actually removes this area of demand. Now what I didn't draw was this zone that we should have had marked out. We can see price held at that zone, and we've continued to push away from it. And we do have another one there that I didn't draw, very small one, and you can see the market has held at that zone and pushed lower. And again, we do the same here. So right now we have a bearish bias. Hey, we continue with that bearish bias. We're not concerned really that much about this previous zone here. The reason being is because we're going with current flow of price here. The only thing we were concerned of really was this area of demand. Even this old demand here, we're not concerned about this demand zone. We're just concerned that it's there where we can see a bounce from. We're not concerned to take a buy off it. Okay, let's just bring all these in. Let's bring that in properly. All right. So again, we have another zone. Let's see what happens. Great. Now we reversed it. What does that signal? That signals, okay, this drop to downside, potential pullback. Okay. So again, let's just get rid of these old zones. What do we have on the pullback? We do have this as our last, okay, buy to sell move. We now have this is a potential strong high. This is our breakout level. So you'll be looking for a pullback. Let's have a look to the area of demand because we don't have anything else up here. So we don't really need to use this zone because we broke it. Okay, we're currently just sitting stationary. We're waiting for a breakout. Here, ours is a breakout candle to the upside. So now we're looking for a pullback into that to target up. And there you go. We have a pullback into that imbalance. We hold the balance and we push up for the area of supply. Again, on the lower time frame, you could have caught a quick buy here for that day. And it's all about understanding these candlesticks, okay? Understanding the body of the candle. Let's go forward another candle. And now this looks like a strong push through. And again, that we could draw this one off, but we didn't even get. We've got a very tiny little pullback there of the day. You may not even seen that happened over the perhaps Asian market. And we pushed up strong. This does look very bullish. And it looks like we're going to run this area of supply. But look, we push back down. Okay. And what do? We close this zone. So we close this zone, which gives us a bearish bias out of this area of supply. But it's an inside candle at the moment. Let's just go forward. We're holding inside. I believe that this still looks bullish, even though we took out this zone. Okay, because this is an inside candle. If we were to run through the highs first and then did this, this would have been a much better looking sell signal. Okay, so we've now got bullish movement again. So again, we can now look to buy this to run this high easily. So we pull back, we've held. So can we now see a push higher? We do. And we haven't quite run the high, but we create a new zone to trade off to push higher. And we tested the 50% and we took out that high. So it's invalidated this zone and there's a potential breakout, which then gives me a new strong low here in the market. And this will be my area of demand. Okay, now let's see if we can continue higher. And we continue higher and there's a push away. So now we've broken out, we expect a pullback. Okay, but we've got this zone where we can continue higher here. Let's see if we continue to push through. We pull back into the zone and we've invalidated it. So now this shows us a potential pullback. Okay, we could come all the way back to zero demand. Let's see what happens. We got a new bearish bias on that candle. Now we have broken structure. We're expecting a pullback. This will be the area we'd look for. Come back to area of demand. look for swing lows. We don't have any swing lows on the way back here at all. So there's a big push. There you go. We were looking for that pullback. We got a little push up to the 50% of that imbalance. Great trade we could have had on that day. Okay, so we got a nice sell to the downside, looking for the market to head towards this area. Now, we have no reason for another bullish move here, but we are still bullish because this is our week high. Okay, this will be our new week high. We want to see the market run. This is our current strong low. So we were looking for the market to come back here for a potential buy. We're currently selling now on those lower time frames. We're looking for another pullback into this zone. So there's a small pullback. Now it's held kind of in the middle. We really want to see it hold close to that first level or the 50%. Let's see if we get another pullback. We have got a smaller pullback, and that's a better looking candle. See, we've come back to test the 50% this time. So that looks more like we could see a push through the downside from here. And we inside candle, again inside, very inside. And we may have just come back to test that 50% once again. Let's just mark this across. Okay, yeah, so we're back at the 50%. We just need to see that expansion away. Okay, so there's our expansion away. That leaves our new zone. Again, we're looking for a pullback into this zone to target down to this demand. So that's a bullish candle pulling back. Perhaps we can pull back to that 50% now. There it is. Now you can look to target this area of demand. On the lower time frames where we're looking for those trades, obviously. I believe we've just gone a little bit deeper, swept those highs. May have been a loss for the day there. We're going a second chance entry on that candle. And we've gone even higher. Okay, again, holding at that 50% area of this imbalance. Now, sometimes you may find here in the lower time frame, you may have losing trade, but it all depends what's set up on the day. We've gone even higher. So now we've got a full fill, because this zone should be marked about there, a full fill of this imbalance. Okay, so we've marked out this zone. We haven't marked it from here. We've marked it from that full candle. We were able to watch what's happening. Now I expect to see a push lower from here. Okay, so we've got a push lower and we've gone into that area of demand. So that is how I look at price. Okay, you need to understand these zones. So at the moment, we've still got a bullish bias and potentially be looking for a reversal go to the upside. At the moment, we haven't got another continuation candle. Nothing yet, no. And that's our first sign of a continuation candle. There we go. That's our first sign. So you look for the market to come back into there. We've got a 50% test. We are still bullish and we're still looking for a run to the upside here. So we're looking really for this strong low to hold, for the market to go back up for this week high. Based on our swing structure here, we're still bullish, but we're reading the current direction is still bearish until we remove this zone. Okay, and eventually we have actually removed it. So now you can see that we've just closed through this zone, which invalidates, and now we wait to see if we get a new bearish candle or bullish candle to go with that marking. And that's actually the current price. So now we're just waiting for a new candle to form to show us that momentum so we can draw out the area of imbalance. Then we can go down to lower time frames to look for a trade. Now, as we're at this area, let's have a look to see what we would have seen. Let's mark it out at this area. Okay, on the chart. And let's mark off the high. The most closest potential trade we could have caught. Okay, let's see what we would have got here. Let's go down to a 15-minute chart. So this is the area we're looking at. Now, the first thing we've got to do is look for where prices come out in this zone. And what I'd be looking for is those swing highs. So we have a swing high here. Okay, so a swing high has been formed here. And this will be the 50% of that actual zone. So we have a swing high here. We could actually take the 50%, but we're looking for those areas of supply. There is my area of supply on a 15-minute. So this would be my area I expect price to want to come back to. Now we failed to come back there. We've just tagged the market there. And we come deeper. We then actually come deeper again. And you can see that we would have caught a trade here. And at that point, our low we've been targeting would have been here. So you can see this trade. And if we're taking a sell here, now whether you had caught the trade here, which you could have done, and went deeper, your target would have been here. And we've hit just over a 3.5 to risk to reward. So not a bad trade. Yes, it did come back, as we saw, went higher. Okay, but we never would have been stopped out. We'd already been out of our trade for that day. We did see this sweep above this high, which would have swept you out. But at this point, remember, we're looking at this move through the zone. We have nothing there we could really trade. This is the main area of supply. We see what pushes through this zone. We have this bearish close. This is more of an area of the indecision at the low. You want to see this high run, obviously, which we did. And even if you did take a trade here, understanding this was a run through this high, we had a sweep, we had a break of structure here, okay, and a pullback into this last buy to sell move. If this was your sell and you had taken a sell off here, not the best area, but it's still a valid sell for the 50% area. Your target would have been potentially this low. Okay, yes, you would have had a losing trade. Okay, very close to hitting your target. But once you saw the break, okay, understanding risk management here, you saw this break to downside, you would have moved to break even. So the worst this would have been is probably a break even trade, unless you took some profits off on that trade. So that is how I would look at then going down to lower time frames to capture these types of trades. And if you're actually following price correctly, what's just happened there? I don't know. Let's move back. You would see there was another push up, okay, above this zone, which is going through this swing high here. Then the market, okay, we look at price, we came back down, we broke this structure. The last buy to sell move is really here, and we never actually got a pullback to the area. Okay, we did have a pullback inside the imbalance, which would have been this zone here. Left over, we got a little push in, and then we did also have this last buy to sell move area here, where price did react off, okay, and came back in, and we saw the push for those lows, which then would have been this low here. So there was a potential trade you may have caught, understanding that this is the area broke structure, and we came back to, we did sweep those highs, okay, and then it fell to downside. Now, we never came into this area of imbalance, so personally I wouldn't have taken that trade. I'd have rather had a push above this high into this imbalance, then look for the sell. So that's how we look at using that imbalance zone. Remember, forget what else you've seen out there. This is the most profitable way to read these imbalances. To go with that daily time frame, use a 15-minute entry chart to target those areas. Now, once you master the breaker structure and balance trading strategy, you will then have a full working strategy that you can start applying into the markets. Now, we've already been through that directional bias with using those imbalance zones, and we've been through those bad zones that you need to be avoiding, and we've also gone through that pre-imbalance zone. But today we're going to look at that break of structure and how we can use that with the imbalances. Let's look at where we can see price coming down, making that reversal. So let's go on to a replay mode here. Let's just make it from this low. Okay, so I want to go through the price action for reading the breaker structure, okay, with those imbalances. Now, if you want to understand a lot more on the breaker structure, the use of breaker structure or market structure in general, then you should check out this playlist, go through all those videos. They're going to help you massively to figure out that market structure in trading. We'll go through some of that briefly in today's video as well. But we can see here, look, the market has come down. In fact, let's just zoom out first. Let me just show you the understanding of quickly of market structure. We can identify here that we have these swings here to the downside. This is what we class as swings in the market, which is our swing structure. We have internal structure here as well, but we also have swing structure. Today we'll look at more the internal structure with the use of the breaker structure and the imbalance zone. You need to understand that we have this swing structure. So for a true reversal, what we need to see is this high here removed. Okay, so we already know that we have a potential high here. we go close in, we could then look at the areas of imbalance left over. Okay, so we have an area of imbalance left over right here in the market. And then we also have what we class as the last buy to sell move area of supply. So let's mark it out as a zone. Okay, so I'm not going to mark these right across. In fact, we'll just leave them there for now because of that level. We know where this level is. So we have, again, the area of supply, okay, the imbalance zone of this swing high. So we have this is a swing high which broke structure to downside. This is now a potential pullback to what we class a strong high. Again, you'll learn more of this inside that playlist when we look at market structure. So let's now look at price down below. So reading those break structure with the imbalance zone. First off, we can see the market has been dropping here, and we can mark this across, and we just about closed it. So just about close there for market structure break. What that means, we have a swing high here that we need to see broken. Okay, so we need to see that broken for a shift in market structure. So let's just go forward and let's just go forward one candle. Okay, so we wicked up. We haven't quite closed it. Now, understanding what we went through on a previous video with that pre-imbalance zone, we know we have an imbalance zone that we can mark off here in the market. What can we see here? We can see that pull back into the zone for continuation higher. So let's go forward one candle. Okay, so we've just about held at that zone high. We haven't pulled back in. We have a valid breaker structure. That means we then have really an area of demand created here that we can mark out as a 4-hour demand zone. Now, understanding the imbalance, we'll leave this where it is, but we could also then refine this to this as our leftover zone. So that's our current zone of imbalance left over. We can pull back into that next. So we've pulled back in side here. This is where we can start to look for those potential trades. So now we need to look at price action here to the left. This last move down is where the market's going to want to pull back and go up to. We're going to be filling out these areas of imbalances. So the easiest way for me to demonstrate that quickly is that we had an imbalance level zone here. We got closed through. That identifies we will go for the next imbalance zone, which is this zone left over on this candlestick. And remember, in the previous video we went through how you could actually quickly identify those imbalanced candles using that indicator I showed you in that previous video. Now, I personally don't need to use it because I can see them very, very quickly, these zones, just by looking at the actual candlestick on the chart. You will eventually do that as well, but you can use that indicator to help fast forward. Now, if you haven't seen that video in the series, you've come into this video halfway through, I do suggest going through the full playlist because it's going to help you to really understand imbalances. So here we're looking for potential pullback continuation. So on the lower time frames, you'll be looking for that market structure shift to look for potential buys. We continue to pull down. Okay, let's go for the next candle. Wait for that to close. Now we've gone to the 50%. Okay, we went through in those previous videos. We're looking at the high, the 50%, the low of those zones. Okay, so we've held the 50%. That is going to be a sign of that rejection. We will go higher from here, and we'll look for those lower time frame entries. Now, your first target on the lower time frames, understanding the market structure, would be this high here in the market. And then we'll be looking for to fill this imbalance, potentially going for this high up here. Because once we close this imbalance, we're going to go for this swing high. So we can mark out where the market's going to go ahead of time using imbalances. Okay, I'm going to quickly just mark it out on my chart. You can see where I've got price marked. Okay, so this means this swing high. So that are my levels where I know price is going to want to go. Okay, so we go forward on the candle. So we can see that's going to close a bullish candle, big rejection, but we have rejected off these lows here in the market. So we are expecting from this low here, continuation higher. So we go forward again. Okay, wait for that candle to close, and we've got a break of structure. So like I said, we would go for this level first. This now creates a break of structure. So it does create a potential area here of demand. Now it's an area of demand with this current trend. Okay, so we can now identify the market's gone from a bearish, broke out, pullback, continuation, looking for pullback, continuation. That's what we class as internal structure. Now that internal structure is pulling back on that swing move here. Again, like I said, market structure playlists. Go through those. It's going to help you to understand it. So with understanding those candlesticks again, what do we have on this candle? We have a potential pre-imbalance zone. We're going to mark it obviously from here. That's our current zone. We're going to look for pullback. Okay. Now I did mark the full candle last time. I should have marked it from the high of that candle as that pre-imbalance zone. That's our leftover zone. Now we do have a new leftover zone here. We'll draw. We can draw it here after markets come back in. Okay, so we know that this is a leftover zone. At some point, the markets kind of come back to fill that zone. So we've got to keep an eye on that. Now we could see here a full rejection, okay, of this high, continuation up, breaking this structure high. We have a full market structure swing shift. At the moment, we have a potential pullback. Okay, internal structure is pulling back. So potentially we can look for pullback now into this zone, continuation for this level. Now we know ahead of time where the market's going to go. If you're following the wrong type of strategies, not knowing where the market's going to go ahead of time, this is when you're going to have losing trades. Okay, so we'll go forward again with another candle. So we have a pullback into this zone, a very small pullback there on that candle, and we continue up for that level. So now we have a leftover zone that we draw out. Now we continue higher. Okay, so now we've gone through this level and we've closed it. That means we removed this level. We'll have to go for this swing high next. Now, obviously, we can have a pullback. We've got an area of demand here, an area of imbalance that needs to be filled yet. Let's go forward. So we've got a candle pulling back. And we did have here, okay, I just noticed that we did have this area of imbalance left over. Now, this was originally this candlestick. We have currently held at it and we've pushed back up. So that shows a reversal to go higher for this high. Now we could still push lower. Let's just go forward. Okay, so that's a big push down, removing that imbalance, which suggests we will go for this zone. So we've now filled this zone fully, and we've just tagged, okay, that area here of demand. That area of demand is at last sell to buy mode. Now again, if you want to learn more on supply and demand, there is the playlist goes through the supply and demand videos as well. So we're not really talking about supply and demand. It's all about these imbalances and direction. So from here, we can look for the lower time frame entries once again. And again, I'll do future videos using this with the lower time frames. We'll continue forward. So market continues to bounce off this area of demand. And we're now looking for continuation to go higher for this high. Now we knew ahead of time the market would go for this high. Now, obviously, understanding a potential break of structure, we're looking to take out this high next. Let's just see if we go deep in this demand. So we got bullish candle and indecision. And let's see how this closes. There's a bearish candle, bullish candle, and we've dropped deeper into the area of imbalance. Now remember, this imbalance hasn't yet been removed, so we can leave it on the chart until it's closed through. It's not removed. And looks like we've got a bullish response with a higher low, okay, off this move here. Now we're looking for this high to be taken. Inside candle, small indecision. Okay, waiting for the close. We've had a rejection of the low of this candle, pushed down. We could see this high go. Okay, so there we have it with a break structure. So we read the market head. Now what we've got a reversal, okay, making a higher high, higher low situation here, breaking up. Right, so we're now looking for the market to take out this swing high. Now, potentially here, once we see a swing high like this taken, we're potentially going to see a pullback. Now, as we do have this all now fill this imbalance, we have no more imbalances except for this one. That does suggest that we could come all the way back for this area of imbalance and then look for another swing. So this would then be a full swing pullback continuation back into this area we see above. Now, price will never move in one single direction. Continuation. It will always make these pullbacks. For us to get up into this area here of supply, okay, this area of supply, an area of imbalance, we've got to see those swings continuation to the upside for this to happen. Let's just follow price here. We know we're bullish, okay, but we could have a full swing pullback coming into this leftover imbalance. That's how we understand this. Okay, reading the market with these levels on the chart, these imbalance zones, supply and demand, all of this is already inside the channel for you to understand. There's a playlist, go through the home page, through every single playlist, understand each concept separately. You can then start putting them all together. So we're going to look to run this high next. Let's see if we go for the high. There we go. We run the high. Okay. Now, once we run this high, if we see a reversal candle straight away here, and we could just fill this imbalance first, then we could see a pullback. Let's go another candle. Okay, so we've filled and we actually closed through that imbalance. So we've taken out this high. We've now taken out that imbalance. That suggests the next level we've got to go for is this swing high. That is where I'm going to see the market want to run, but we could have a pullback first before this. So this area of imbalance we're going to remove because it's been used. We've got to break a structure here. So once again, we can draw this out as an area of demand. So as internal structure here, we're going bullish still. And market has area of demand. We could come back to demand and continue higher. Now on the way up here, we did have those pre-imbalance zones that we want to draw out. We had an area here in the market, but the market's come back, held at the 50%, continued higher. We had a new zone here we would have marked. We can see again, the market came back to the 50% and continued higher. And once again, we have a new zone here of that pre-imbalance. So what happens if we reverse through this pre-imbalance? We will continue to be bearish. But for now, we're bullish. Now we do have here a leftover area of imbalance just above that area of demand. And very often you will see this on your charts. The market's going to want to come back to fill those areas of imbalance into demand, continue higher. Let's just go forward. Okay, so we've got a small continuation candle. We failed to break the high. We pull back into the area of imbalance. Let's see if we continue higher. Okay, bearish candle. Bearish candle. We could still bounce off. Now, this has rejected this area of pre-imbalance, you can see. We need to close through to confirm the continuation down. Okay, so we've now closed through this pre-imbalance. That's been removed. We've pulled back into this imbalance, filled the full imbalance. Now, obviously, this was this leftover imbalance there. We've filled it. But as we already closed through this imbalance, I would still want to see the market continue down here. So what we can start to do, we can start to look for the lower time frame shorts from here. Now, we have this leftover zone. You see the market just pushed up into and we dropped out. And again, we'd have the same with this zone here, leftover zone. So for me, this has been filled, this imbalance. I expect it to be run to go to this area. That's where I want to see the market. But I'll be looking for those counter trend trades on a lower time frame here to pull back to this higher time frame area of demand here. Oh, sorry, for the 4-hour demand we're looking at now. So we didn't get a pullback. We got a test of that zone and a continuation down. Again, we'd have a new pre-imbalance left over here. So we're still creating these imbalance zones to the downside, which suggests we could run this area of imbalance and even remove this demand right now. We're seeing a strong push down, removing all of these imbalances. If we close this imbalance and we close through, we're probably going to take out this area of demand. So see, we've pushed back up. We've held at the high of this imbalance. Again, we've wicked through and we've closed this imbalance. That suggests a potential reversal back higher. But remember, we've still got these imbalances above. We just filled it. We need to see a rejection out if we're going to continue lower. If not, we close this imbalance. We'll then go for the next one and we'll continue on to this swing high. Now, obviously, for another break of structure, we've got to see this high removed. Now we've got a rejection. We're holding at that imbalance and we rejected out with a bearish candle. So we're looking for potential continuation. It's holding at that area and the market has continued. And again, we had a pre-imbalance there. Remember those pre-imbalances, they are so critical to understand. Look how the market came back to the full fill and then we dropped away. Using those pre-imbalance zones is going to get you into trades that you never would have seen before. Now, long term, we're bearish, but short term, we've been bullish with this internal structure pulling back to these areas. But now, within the lower time frames, we're counter trend trading back to the downside. So what's next? If we go through and we've sold from up here, we're going to be targeting this area of imbalance because the main reason is we can still see a bounce off here. We've only filled that imbalance. We haven't closed through. So if we close through this imbalance into demand, we'll take the low of the demand. That's where I expect price to want to go. Okay, so we've closed that imbalance. That's been removed. That means now I expect price to want to run this low. So the reason we're going to run this low, because we have no areas. Before, we're going to take this low here as well. That's a potential area we're going to run. But I would expect it to run this swing low. We then have this demand below. So we have no areas of imbalance there. So again, expected to run this low of this demand zone. I'm going to just bring this back. It's not a demand zone I'm going to take a buy off because we're removing this one, but it's an area we can watch. We have this leftover imbalance. So it's now looking more like a swing pullback. So looking more like we could see this full swing pullback towards the imbalance now for continuation of that high. Now, why are we coming back to this imbalance? It is the origin, okay? The origin of the move. We come from this low. This is our origin move to the upside. It's the first imbalance created where we see the market breaking structure. That is the important part you need to always remember. Where is that origin move? This is just internal structure at the moment, okay? And now we're breaking back to the downside until we get to this area. Then we can see a shift back out. Probably taking this high. That's our next high in the sequence. Obviously, we're going to have some zones on the way back here to target first, but that's the original high we want to see go for. So let's just see if we continue down to run this area of demand. I'm going to bring this demand zone back to here, where we see the first reaction pushing deeper in. Now, on the way down, remember, we've created this new area of pre-imbalance. Where's the market just pulled back into that area of imbalance? So we should expect a continuation for this low. A small movement. We've got a pullback. So we potentially could get a deeper pullback here. So we've got to sweep now this high and this high deeper into this imbalance. Now, if you're just using the imbalance zone after this candle's close, yes, we've just swept the high of that candle. We just went high into that imbalance. But if you're using the pre-imbalance zone, you know that this is still coming back into this imbalance. What's there? You don't need to wait for that candle to close or went through in the previous videos. Use that pre-imbalance. And now expect this low to be taken. This is going to be the first low the market will want to take. But then we're definitely going to take this low because this is our origin low for this move up. So it looks like one candle has taken this low. We've closed it and we just wicked through. So we could see a bounce off here, understanding that we have leftover imbalance seeing here in the market. This one has been filled. Okay, this one is a leftover imbalance that we can leave, and this one got filled as well. So we can remove those zones. So this is created in itself. We've created that pre-imbalance, a very small zone here. So again, we see a reversal of this level. We know we're going to go higher. That's the way we can read the market. So we closed, but we held at that pre-imbalance and that we continue to be bearish. Let's see if we can break this low now. Market is just, and we've broken out that low. Okay, so this is what we're expecting. This pre-imbalance held price. We never closed it and we continue to run this low. We may have had a very small pre-imbalance there, which held as well before that pushed down. Again, look, we've now created a new pre-imbalance to the downside. Okay, how easy is this for you to understand? So where are we going now? We're going for this area. That's the only place we can go because there's nothing in here. This demand has already been used. We're going to take out the low of demand. Again, this, let me just check. We've got a swing pullback. Okay, we're below the 50% area, going down here, perfect area for trade. Could we run through? Yes, of course. We could continue with that trend. We could see this as a move down, pullback, continuation. But what do we need to see for that? This imbalance is going to have to be closed. Let's go forward. Let's stop it there. Okay, so we held at this imbalance again. The pre-imbalance was never taken. Now, if you didn't have that pre-imbalance, you would have just marked out that as a zone. Okay, we wicked through, we held, and we continued to drop lower. So it looks like we're going to take out this low now. Let's just go forward. We've got no zone. We can remove this now. You don't need this on the chart or this one. They've been filled. Okay, so let's go forward. So we have just wicked up. The market is just broken out there to the upside. This means we may want to run to this area of imbalance that we've got drawn. So we could potentially run up here to take out this swing high into the imbalance and then continue through, or we could pull back. I still really want to see the market pull back there. This area of demand on its own, I don't see this as a good zone to take a trade. We have nothing here that we've pushed into an area of liquidity. This is more the liquidity low into this zone of demand or this area of imbalance. I mean, this is in our sell to buy move on this 4-hour time frame. Let's see if we can actually, let's pull this area of demand across. Let's see if we can reverse back down. If we continue bullish, okay, remember we've got here again a new area of bullish imbalance. So what do we need to see for a continuation higher is to hold at the open, the 50% low of this zone. If we close through that zone on the next candle, that means we're going to go down to take out these lows into this area of imbalance. Simple as that. Okay, wait for the close. Right, we've closed through it. That's been removed. We now know we're going to continue lower. That candle has shown us the direction. So yes, we could have looked for some trades up here, but it's better to now look for a pullback in here somewhere to continue for that low. So we got a small pullback and we got another pullback. So in here, we can be looking for those areas. Now, what could we do now? We could actually now look to take out this high, sweep it and drop. Let's see. Looks like we're going to continue to move lower. So now we've built up some liquidity here as well to be swept. And if you look at what's just happened at the lows, we've just swept that low here. So that means we have to go up higher for an area of imbalance or a swing high. Why? Because that's where the liquidity will sit, because the orders are sitting above those highs and inside the areas of imbalance. The imbalance will have leftover orders. That's what we're looking at here. Let's see what happens in the next candle. Let's just go forward. I want to teach you this step by step. Okay, so we're looking for this high here to get swept before we go for the lows, and there we have a sweep of the high. At the same time, we've come into that area of imbalance. Okay, we could go deeper yet into the area of demand as well. Now, potentially this is looking at as a swing pullback. For a reversal, what we've got to see now is a reversal of this high unless we close through here, which we did. So we could potentially say this is now our lower high. That would be our market structure shift. So let's see what happens on this next candle. And we've closed through. So this is a close through. What that now creates for me is a new area of demand that we could draw here. Now we could draw the demand zone when we've drawn it from the body, okay, the open, or from the high of the zone. I'm going to draw it from the body because we're right close to that high of the zone. And potentially here, what we're looking for then would be a pullback, okay, and then continue up for the area of imbalance. So what I'm going to do now, I'm going to actually remove this imbalance. I'm going to put a simple line like we have above. And we just pop another line over here. I think that one's been filled. So it's just this one up here. So we've got two areas we're going to expect the market one to go if we continue to break higher. We broke structure. So now expect a pullback and continuation. Now we're going to pull back into demand here. Why? Because we have no imbalance. The only thing we do have here is this pre-imbalance zone on this candlestick. Very, very small. Expected to push through back into that demand. That means we could go lower still. Let's just see where the next candle goes. Okay, so we're held bullish. And we've not quite pushed through that high. And we're now pushing through the low. So we've now removed that pre-imbalance. So we're expecting to see, okay, this is not actually a break of structure now. This is going to be our break of structure. Because the reason why is because this is not a swing high. Okay, this is our swing high. It's been broken now. This was the originally going to be swing high. If we had a lower high, that didn't happen. I should have really gone through that and explained it. But this is our swing high for the breakout. So now we can see a potential pullback. It is looking like we're going to have closed through this area of imbalance. Not quite. So if we wick through and pull back up, that's going to look better for an entry. So we've actually done that. That is perfect. That's what I'll be looking for the entry. That candlestick on its own, I would actually look to buy from. It's showing me the reaction out, and I know the market's going to want to go here first. After that, we know it's going to go up to here. After that, we're going to take out the high. So let's just follow price. Let's go candle here. So we've pushed back down, not quite stopped me out because I had a bit of room on that stop. And we're held. We can still sweep that low again. And we don't have any pre-imbalance there. So we're still expecting this high now to be run. This becomes our new structural break to the upside. We could be stopped out here. It's holding. And now it's gone higher back to price and we've broken structure. So that's worked out. We just held into that trade. Didn't quite get stopped out. Always important to give trades room if you're taking a trade. So now expecting price to go what? Well, we've broken structure. We're definitely going to go to fill this imbalance. Now we do have now here a leftover area of demand that we can draw here. It's a new area of demand. We also have that we have this pre-imbalance zone here, which price held at the top of the zone. And then we can also draw out this new pre-imbalance zone here. I'm going to just remove this. We don't need this on here. You can see how the trade would have worked. Let me just remove that. I'm going to have to put on that demand zone once again. I just removed it accidentally. That's why it's important, okay? Always make sure you've got some room on your stops. We only just swept that low. And if you had a really tight stop there, you would have been stopped out. So we can see we're stacking on demand zones here, continue higher. Does mean that I believe we will go for this high. Let's read what's happening. First, we've got to go for this level and close through. But we're going to pull back perhaps into this area of pre-imbalance. We've created leftover imbalance there now anyway. We've pulled back into that imbalance and we've just closed that level. That now means we will go up for this level next. We could pull back first because we still potentially could pull back to fill this imbalance into this area of imbalance in demand. Let's just see. So we got a reversal candle. We're pulling back. We've just tested the 50% of that pre-imbalance zone. And this would be the leftover imbalance, nearly the 50% as well. Let's see if we continue to bullish. So if we continue up there, there's going to be a break of structure. Okay, so we've actually pushed back lower. Let's see where we go to. So we remove this old imbalance left over here. That means we'll go for the next imbalance, which is this imbalance here. That's our leftover. We've just about filled that imbalance. We're pulled into the demand zone. So what I'm seeing here, okay, we're seeing the market pushing down, pushing lower, break of structure. This is what we class as a market structure shift. This is our internal structure, okay? We've pushed down from this high. Let me just get this again. We've pushed down from this high, pull back. We've not really created a structure shift there. There might have been a very small one just there. And then you can see the markets pull back, broke out. And this is where we can go with the structure. And again, all of that, like I said, is inside that market structure playlist within the channel. So right now we've filled this imbalance to the 50% area. We could go deeper. If we close through this imbalance, suggest we'll take out and remove this area of demand. Let's just see what happens. Okay, very close at closing through. We'll hold at it. And we have held still at that area of imbalance. It's very, very important to make sure it's in the right place. Look, we're holding there. This indicates another buy. I would look to buy off here. We swept the lows, closed bullish. This is an indication we will go higher. That means we're going to have to first go to within this swing. Okay, we have an area of imbalance left over, another area of imbalance here left over, and a final imbalance here left over. So we've got to run through these zones now before we can see it. Remember, this was a pre-imbalance zone. Market held at it and pushed lower. So we want to see a bullish move higher. Okay, so there's a strong bullish move here. Okay, so we've wicked through, held at this imbalance. At the moment, there is no sign that we could continue higher until we close this imbalance. We just left a small pre-imbalance there as well. If we hold and push higher, that's good. Okay, so we held, we've pushed higher, wicked through that imbalance. There's a full fill already of these imbalances. We want to see it close through. Okay, that's what we're looking for. If we don't get that close through, this could push prices back down lower. So let's continue to see what happens. We're pushing lower here. Now, if we close through this imbalance here, that means we continue to remove the demand. Is this a close through? Closed at it, and we've closed through. Oh no, we haven't. We've actually just closed at it. So we had to wait for that candle to close. So now we've just, okay, look what's just happened here. We've just wicked the low. So what we've actually got, we've removed the demand. And this is something else that you'll learn in the channel. We're understanding the sweeps in the market, liquidity sweeps. Okay, so we have a sweep here in the market. This is a 4-hour sweep. So we've swept this. This is a very, very good indication for me that this is going to be a bullish move. Where am I going to expect the market to go? Well, at least first target would be to fill this imbalance. The reason being, these have already been filled. They haven't been closed through, but they've been filled. So that would be my first potential target. Then I expect the market to go here at least after that. Let's just go forward price. Okay, so the very next candle, where did it go straight to fill that imbalance? We knew it'd go through and close through these areas because they already had been filled, and they did close through. We should see a continuation higher. Let's just pause it in a moment. Let me just go through. We're going to have a new break of structure here. We've only swept that area at the moment. We need to see it close through. See if we can get that closed through, and we've closed through right there. So now we've closed through again. That creates a new area of demand that we can draw here. That's our 4-hour area of demand. And we're also going to have, which we didn't really get a chance to draw there, so I forgot, was the pre-imbalance. We came back, we held at the 50%, and we continue to go. Okay, and now we've left over that area of imbalance. So I'm going to remove this again because we don't need it, but we expect price to go for this level. Why? Because we've broken through that structure. We could pull back to this imbalance, more likely to continue higher for that next level we've got marked. And remember, long term, we're still expecting price to go for this level here. That's where we want to see that market go to. So look, this is how you're reading and understanding the imbalances with the breaker structure. I've gone through much more in this video than I needed to, but you can start to really get the grasp of what's happening. Let's just see if we can get to these levels, and then you'll understand exactly why ahead of time we could understand where the market is going to go. Let's just fast forward this a bit. Let's just actually go. Okay, so we went straight up, okay, straight away to this level where I have it marked. Now, I'm marking these ahead of time before we even see price get to them. That is the skill of reading not just imbalances in the market, market structure, supply and demand, liquidity. We've closed that level. That means we will go to take out this high next and go for the next level. So on the way up, okay, as I let it go quite quickly here, we did have this pre-imbalance zone, which is now been left over as an area of imbalance. We also had another breaker structure here. Okay, this is our last sell to buy move. This is a new area of demand. So we can not always going to come back to these demand zones. Okay, we didn't come back into this demand zone quite. We nearly came back to demand. We held at the imbalance. So let's see if the market now pulls back into the area. Okay, so we didn't need to. We just held and we pushed through. Okay, so we removed that and went for what? The next level here, where we said all the way back from here, we knew the market potentially would take that high. So now what we can identify here is that the market has made this swing pattern, like I suggested. And now we're either going to hold this area and fall back down, or we can break through. So what's the important thing? This area left over imbalance. If we continue to push up and close through, we'll remove that high. Let's just go forward. Okay, we're having a pull back here. Why are we pulling back? We're going to break a structure that we can mark right here again. Okay, that did leave. This is an area of demand as well. Didn't draw that out. Okay, so we have an area of imbalance. Now we also have, we go closer in, just reading that price quickly. Okay, we had the pre-imbalance area here. We pulled back in, held, continued higher. We then had the same thing here. Okay, but we closed through. That indicated a pullback. Okay, we would go backwards to the next area of imbalance. Currently, we're holding at that imbalance. If we closed through, we continue for the next one. Simple as that. So let's see, we're not quite closed. We're holding. Now it looks like we've closed through. So now we've closed through that imbalance, and this one, we're inside this imbalance. Now we could go a full fill into the demand below here. Let's just see, let's go forward. And again, that we have imbalances on the way down again. Pre-imbalances. Look at how the market holds those areas. Let's fast forward this a bit. So the market has now a full fill of this imbalance. What happens if we close through? Then potentially we're going to go down to take out what? This swing low, which is this low here in the market. Now we could take out that low, drop into the demand here, and then continue higher, but we've also got a leftover imbalance sitting here. The market may want to go down to take out that swing low. Why? Because this is potentially an origin move. Okay, so like we saw over here, this was an origin move that broke to the upside from here. This becomes an origin move down here because we broke this structure high. So the actual origin move is here, but our nearest imbalance is here. So potentially we may want to push down, sweep this low into this imbalance, this in demand for another move higher. That's our swinging pattern. Now, how do we know this is going to reverse? Because we look for what we class as our internal structure to shift, and we can use multiple time frames for that. Again, there's a multiple time frames video within that market structure videos. So let's just go through it quickly and see what happens here. Let's just play it now, see what happens. So again, we can identify that the market closed through that imbalance on that candlestick that indicated we would take out this low. The market failed to run the low, but we knew it would take it. We've then pushed higher. We've swept this high. So we've gone through, made a 4-hour sweep. Okay, we're in a bearish bias at the moment. We continue to break structure. Look, we broke structure lower, broke structure lower. We already broke this structure here. So let me just quickly show you this. Okay, so we broke structure, we broke lower, that we're creating a bearish trend. We just swept that high and we broke structure lower again. So we're still bearish on this market. So we removed this area of demand. We close through this level. That suggests we will sweep this low here into the imbalance. That's what we want to see holding. We want to see this area of demand here holding and push through into it. Now again, look, what do we have here? A pre-imbalance zone. Price held at it. Yeah, we did big push through to sweep that high, but we held. And we then had this pre-imbalance and the current pre-imbalance. Let's just go forward quickly. Okay, so we've actually pushed through this imbalance. Held at this one of the 50%, pushed through this imbalance. What does that indicate? We're most likely to run the low of this zone. So this zone is not likely to hold. The imbalance was closed through. This one's removed. Okay, we're coming back to what now? We're coming back to the origin move. So potentially we could sweep this low deeper into this demand zone to continue higher. Let's have a look. And again, market structure here has been bearish. So we've held at this candlestick. Very interesting that was. So we actually held here. And how did we recognize the reversal? We had a pre-imbalance zone here, okay, which held. We then left over this imbalance. This candlestick identified the reversal. We also broke this structure. Why? Because there's a structure break here to downside. This small structure break is our internal structure. We've shifted bullish. We have a pre-imbalance zone here, which held price. Okay, this is how you'll do this over and over on your charts. We have this area of demand left over. Okay, now we're looking for what? The market to run this. So look, understanding that this was the area we expect price to pull back into, we could have got a short from here down. Okay, understanding the levels you are targeting. Now, I'm not talking long term. On the lower time frames, you'll find good risk to reward trades. But now we expect this area to be run because we're creating a higher swing low. And we could even look, draw out this as a trend line. And we can see that the trend line is being respected. And we expect to see these wicks and manipulations through those areas. But understanding imbalances, which this video should really be about, we are now bullish. We understand that these pre-imbalances are holding. And we're removing these imbalances left over. So these are all being removed. So where does price want to go now? We know it's going to run this high next. Okay, after that, we look for a level. That's where the price will go before we take out that high and continue higher. So that's where you're going to look for the market. Okay, so we take out that high expected. Okay, now we've broken this structure. We did make this pullback on one candle, but then we've broken this structure again with this smaller structure break, as well as taking this high. So that then creates basically on the way up. What is this? Pre-imbalance zone, price held at the 50%, continued higher. We also have a area here, which is more of a rally-based rally area of demand. Let's just play this forward. Okay, so we held at the imbalance zone once again. And we also had this pre-imbalance zone where price held, or did it just close? Just check that. No, we did close that zone. So that's why we had to go lower into this zone here again for some more orders. Now the market's broken structure again, and at the same time closed through this imbalance, which suggested we would take out this high. Now we've just wicked into the high. At the same time, what do we leave? A new pre-imbalance zone. Are you seeing the way the cycle works? We also leave this area of demand. So we look for pullbacks into these areas. So it's quite a deep pullback. We've closed through. No, we still quite just closed at. Okay, now we have closed through, removed it. So because we removed that, we knew we'd have to go for the next area of imbalance, which is below, and we knew we'd run the demand. We'd run this low. This low actually got broken through. That was a shift in structure, okay, from this swing high. But then we've just dropped into this demand here. At this point, I would be looking for sells. Yes, for sure. Potentially see the market go lower off this pre-imbalance, but this candle puts us back on a bullish bias. And look at that strong momentum push higher. So now we've broken out of this structure. Again, we've left a new pre-imbalance to look for buy from, and we've left a new area of potential demand. Okay, remember, this is not really about the demand zones and everything. It's more about those imbalances, but I just want to show you at the same time. Now we're expecting the full fill of this imbalance. Look, we need to see a close of that imbalance to know this high is going to be rung, and we're going to continue to be bullish. Very bullish on this market. So let's look for the next candle. We close it, we closed it. So now we're going to run this high. From all the way back here, when we're looking at price action, we knew and determined that this was a potential sell area. Coming out, we did sell down, but then we continued to be bullish from this move here. So now we should see that high get run. Let's just see, and we get run. So what is liquidity in the Forex market? Liquidity is basically where we're going to find those buy orders and sell orders in the market above those swing highs and swing lows. Now liquidity is engineered all over the place, but it's understanding why this engineered liquidity is created to manipulate you into thinking to buy or sell that market. Let's have a look at this pound US dollar chart, and I'm going to show you right now what liquidity is, okay, understanding this last bearish move and how it's formed to create this bearish move here in the market. So liquidity is, just as I said, those orders are created, buy orders and sell orders are created above swing highs, swing lows. It's where we're going to find those stop losses placed. Now what's a stop loss going to create on a sell order? Going to create a buy stop. Okay, so we have buy orders sitting above. We're also going to have those breakout traders. Again, it's going to place those buy stop orders. So let me just show you. We have this move here to downside. What that do? We're going to break a structure. Now what that creates here, let me just get an arrow. This move here up. Okay, let me just grab that arrow again. This move here to the upside is our last, okay, buy to sell move here in the market. So that creates our area of supply, and it's this area of supply where we're going to find those banks, institutions are interested in looking to sell from. Let's make sure that's the right place. Now we can use the full zone, placing it there. So this is our full zone. Now we don't have to use the full zone, we can refine it to the last area, but I like to look at the full zone. Now, if you want to learn more on supply and demand and how we use supply and demand, there is a full playlist in this channel. I do suggest, after watching this series, okay, through this playlist of understanding liquidity, then go through and learn about the supply and demand techniques. But how we look at liquidity, okay, in the Forex markets is very simple. When we see this breakout, you see this small pullback before continuation, that creates a swing high. Now above this swing high is where you're going to find those orders on the stop loss, okay, are going to be sat above that high on the sellers to the downside. Now when these orders are taken, that's going to create the buy stop, okay, the buy orders, and then this liquidity area will be run, okay, with those buys being run. Now when this happens, you're also going to have breakout traders there as well who are going to be looking for the breakout retest or just the breakout of this area. Because on the way down here, we also have these highs created, which actually creates an area of liquidity to the downside. Okay, as the market continues to run down, this liquidity at some point will be run. So the market is then pushed through. Let me just do that again. The market here is pushed through another breaker structure. So you can see we have this break to downside, this pullback, internal area of liquidity created before we break out again. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. So when the market comes down to this low here, and again looking to the left, we're sweeping these lows here, which is more liquidity. The market's going to run back up where what you believe is going to be sat above these highs. All these highs here will be used for those stop losses, okay? And when we're going to see potential breakout traders looking to break this trend line, they will place their buy stop orders. These stop losses will be basically buy stop orders. So they're running that buy area, okay, where the markets will be run, they're looking to buy that market. Now the banks, institutions, they know this is what's going to happen. They're manipulating you into believing this, especially when you see this strong big bullish candle here to the upside. Now what does this leave over? This leaves over a liquidity gap, an area of imbalance. And again, if you want to learn more on imbalances, there's a full playlist. I'll leave a link above now to go through and learn about the imbalances. But these areas of imbalances, they will create, like I said, an area of liquidity in the market. So we don't just have liquidity at these swing points. We also have liquidity within these imbalances. So what they're doing here is they are manipulating you into selling the market. Off this swing high, we run all this area of liquidity. We sweep that last high. This is a run on liquidity, and this is a sweep of liquidity. That's how we identify liquidity in the market, and later on there is a video that goes through more depth on how we identify this and how we look at these sweeps and runs. It's just to tell you really what liquidity is in the Forex market. The idea of liquidity is to bring in these buyers, and then once we see this sweep is to bring in the sellers. But this area of liquidity and this imbalance holds price. We never close it, and again it runs the market higher to run this swing high of liquidity again. So why do they run this final swing high? Because it's the liquidity sitting below this area of supply. It's this area of supply where they wanted to take a sell from. This liquidity all gets run into the supply, and then we see the big drop to downside to run this low. And that's where this big bearish move comes from this engineered liquidity. And later there will be a video going through more depth on engineered liquidity. But this is just to tell you what liquidity is and how to understand why it works in trading. Now we're going to look at how to spot liquidity in the Forex market. Remember in the last video we spoke about the liquidity is going to come from those swing points in the market, and also we're looking at those liquidity gaps, which is actually those imbalance levels. So how can we spot liquidity easily in the markets? Well, the easiest way, and I'll show you quickly with a brief sketch here, is we're looking for patterns. Now those patterns can be where we see a double top can be created. And this double top here is the most common one you're going to see, which will create an area of liquidity. So let's just create a daily sweep there. So we can see here that the market is creating a double high. Now, very often you've probably been taught to sell off a double high or buy off a double low. That is not how I trade. That is not the way I look at the markets. What I'm looking at here is when we see this liquidity created, and this is how you can easily spot this. And it can be like a double test like this. And we can also see a double test to the downside like this. That's going to create, once again, that area of liquidity. Like I said, these are the most common. What we're looking for is for an area of supply or an area of demand, okay, to be sitting above or below those liquidity points. And very, very often, this is where you're going to find that the markets will manipulate you into selling from these highs, expecting a break of this low to continue, and then you see a pullback to run the liquidity here into the supply, and then a continuation. Now the same we said, you can see the pullback to run liquidity of the lows here into demand, then the continuation. This basically is how to spot that liquidity. This is the true movement in the market. This is spotting that liquidity. So that is the most common one you're going to find. And you're going to find these are set up above or below areas of supply and demand. Now, the other way we can look at the liquidity as well, and let me just get my tool back, is we can look at the liquidity to be sweeps in the market as well as liquidity runs. Now, there'll be a future video which goes through all that. Instead of going through in today's video, it's just really how to spot them on a chart. So let's look at this price chart. We also have one other way we can look at liquidity. Let me just quickly do a sketch for that. We can have a trend liquidity, which is your common trend line, okay? Your trend line can become an area of liquidity, which may want to be run. Now, the trend line would be the low here. Okay, on an uptrend, your low would be that area of liquidity. Now, majority of times, you most probably already been taught, okay, let me just mark this out as a sweep area. We are taught, okay, as retail traders, that you're looking to take a buy off a trend line, okay, which can work. Looking for a retest of a trend line continuation. Now, that can work if the right conditions are there. But most of the time, what you're going to find here is, let me just put that back, is you're going to find down here, okay, is your area of previous demand. Let's say we had the market push into, but down below, we're going to have a large area of demand, potentially where price has not yet come into. And what you're going to find is that this area is going to act as liquidity for the market to push through, and then we see the true move away. I've seen this happen above an area of demand. We see a push out, and the market basically just wants to run deeper into that demand. And this comes into understanding a fresh and tested zone as well. And again, this is all inside that supply and demand playlist. So there is how we look at liquidity. Let's see how we can spot it now on this price chart. And we can identify, let's look at this move here to the upside where we can see a break of structure. Okay, so this is a true break of structure to the upside. What do we have here on the way up? We have all this area of liquidity. Okay, so we have this run here to the upside, which is creating liquidity. The market is then breaking through this liquidity. We have an area here of demand. Okay, not quite into. You can see we push in with this candle, and then the market, we break structure here to the upside. We then break this small structure here on this area of demand as well. Okay, where we do push into that demand after we run all of this liquidity. Now what that means, this is a tested zone of demand down here. We run through that level, which is expected when we're looking at fresh and tested zones, and then we continue to push away. So all we're seeing here right now is this liquidity being run, okay? And that's how you spot that liquidity. You see all the lower wicks here being created above or out of this area of demand. And then we're looking for that run of liquidity again to run the swing high. So we continue along, and I just want to show you another example here Let me just find one. Okay, so we have this area of demand. Fine tune that to the demand zone. And we have that double, or we have this low here and here created, which is the liquidity created, okay, above the demand. So we have a break of structure to the upside. That's how we quickly and easily spot this. This is our break of structure. What's more important, we also see a sweep of the low here, which creates the area of demand. When you see these types of sweeps and then a runaway to break structure, they very often will create a great area of demand to look to trade from. Now, what we can identify here, we have the breakout, a pullback, a sweep of this high, but then we continue to move sideways, creating this liquidity here, even this swing low, and eventually we push through with a strong push down, which continues to do what? To run this high, which is a break of structure again. But that is the liquidity, okay, created here. Let's change that to a sweep area where we run these lows, okay, into this area of demand. And then the market pushes away. So you saw how we can quickly see the engineered liquidity. We have the line chart here of liquidity, which was pushed through into demand, and we have the double test low of liquidity, which is pushed through into demand. That's how we look at spotting that liquidity on the charts. You're looking for the good setups, okay? Now, again, if we look down here, I didn't mark it, but we have a sweep, okay, of the low when we rally away. This is a rally base, rally type of style of demand. You can see the sweep of liquidity, okay, before we push away. We create the liquidity inside, okay, double low there, and the trend line of liquidity as we push up, pull back through, we remove all that liquidity deeper into demand for the push away. Now on this one, we actually moved sideways. We moved higher. This one we actually failed to move higher. We moved sideways, created liquidity, and dropped in and then pushed away. So you can see how easily it is for you to quickly spot that liquidity. You just need to understand those patterns we went through, okay, which was that double test. Okay, looking at this high as an area of liquidity. In the example down below, let's draw this out. We can identify the liquidity was created. There is our double test. Okay, here we push through liquidity into demand and we push to break structure. The other one we was looking at was obviously the trend line of liquidity, which can be created. Okay, we can see the market want to push down and then push away in that area of liquidity. There's that liquidity we pushed through into demand below, pushed away. Again, let's see if we can draw this out so you can easily spot this. There's our breakout. Now we do create a double low there, but then we start to create this liquidity on this trend line. And you can see the market then pushes down through. To start with, we pull back and then we start to push through that liquidity and then eventually through the low into demand. That's where we see the push away. That is how you can easily spot liquidity on the chart, is we're looking for those types of patterns of the double low or the trend line pattern to occur above or below the area of supply or demand. How to identify liquidity? That is the question I'm getting asked time and time again. So I'm going to briefly go through right now the best way for you to identify liquidity and how to look for those areas when you are trading for potential targets or when you're looking for potential entries. But let's go closer into this daily chart. Where do we see potential areas, okay, of liquidity? Now, the liquidity is going to be always above swing highs and below swing lows. So if we're looking at this current chart here, we would have liquidity sitting above this swing high. We would have liquidity sitting above this swing high, above this swing high. Okay, we would have it above this swing high. This is where the current liquidity would be left. Okay, it's where we see it now sitting. Where was potential liquidity before and where did we see it run? We had some at this high. We got run through this candle. We had some at this high, which got run on this candle. So when we see a push through these liquidity swing highs and rejection candles, or even those engulfing candles, they are very, very good insights of a good potential entry. But let's say you are selling from up here. Where would you be looking to target? Well, you'd be having a potential target here and another one at this low. And if we look to the left, okay, another one this low. They would be the areas where you'd have potential stops and orders in the market. And that's all liquidity really is. We're looking to run the liquidity, okay, for your profit targets and to sweep those areas for your entries. If you can remember and take away this one simple method of understanding liquidity in the market, that is all you need to understand. Liquidity will always be at the swing highs and swing lows in the market. Now, we're not always going to see the liquidity run straight away. We're going to have a build up of liquidity as well, where we see equal highs and lows. Now, potentially you're being taught double highs, double bottoms are great areas to look for a trade. But what they're actually creating is more liquidity. Equal highs and lows are just creating more liquidity to be run. Let's look at this area right here. Does that create a sweep? That is potentially an area of liquidity. So roughly equal highs. That means at some point these highs will want to be run to take up that liquidity. So just have to bear this in mind. It's not always going to happen straight away. Look, if we look at this market to the downside, when we see a reversal, there's liquidity which got run. We closed through this level. That means that liquidity has now been taken. We have a pullback, okay, into an area here of demand. Now we had an area of liquidity below this low, didn't get run. But look what did happen on the way up. We got this low run and this low here was run. Those two areas were taken for an entry, okay? Liquidity was run to take any stops. The stops were taken to push the market higher. Where did it then go for? It went to run the liquidity at the swing highs. Okay, so that's where the market's going for. It's where profit targets are going to be sitting. That's where breakout traders are going to have that order sitting. Okay, so we have stop losses, we have orders, take profit levels. That is what's the makeup and the build up, okay, of understanding liquidity. So again, when market comes back, where are we going to run? We're going to run this high. There we have, we're a run of that high. Next, we're going to have a run of this high. We close through. Then we have this high. Look, we sweep that high only. So the market very often will sweep a high, pull back, then fill the market to run higher. Then we've got this high. This time we had to run through that high. Now, I don't think we actually made it to this high. We just below that high. Okay, so we didn't quite run to that swing high. But we can see on the way down that the market actually swept this high to get the orders to push the market lower. Why? So the market can run this low, which we pushed through. And if you look at this, what happened before that? We had to sweep this low to get the orders to push higher. Okay, we even swept here as well. And then the market could then push for these highs. We had a smaller high here as well, another high. Then we had these highs here to the left that got run. So if you just start mapping out your charts, looking at those levels in the market, where liquidity is going to sit, it's going to give you a much better idea, location of where entries can come from and where those profit targets can be. So let's just take everything off this chart. Let's just look now at this current area of price. If we're trading this, now you need a good understanding, of course, of the market structure. Now, if you're not sure of market structure, there's a full playlist in this channel. Go through each video, it will teach you how to apply market structure. If we're looking at market structure here, let's say we had a break here to the upside. We then had a break to the downside. Okay, we have a pullback. Where's the market going to run? It's going to run this to break structure to the downside. Now we're looking at another pullback. Where's it going to run eventually? It's going to run this low. Okay, so The market pulls back into areas of supply and demand. Again, there's a full playlist within this channel, how to understand, draw, and use supply and demand in your trading. There is also another playlist that goes through the use of imbalances. Well, I'm now going to talk about imbalances. Within this area here, we have an area of imbalance. We also have right here another area of imbalance. So we've just closed through that imbalance, which suggests that the market needs to push higher for more orders. Now there's orders left over in these imbalances. Now this is not the same as liquidity. If we used to see the market pushing up now to this area, where we're going to push to, we're going to push for these lows. Okay, so understanding this is where we can start to look for your profit targets. Now, if we were to drop down a time frame here on a 4 hour, you'll see how we can use liquidity for our areas to take a trade. If we're to look for a buy from here, where's a great location? Well, we have an area of imbalance that can push the market higher, but we can also see we have a swing low here. So that tells me that if the market can push down here, we can sweep this low. Very often we'll see another sweep and then a continuation to run this high, which will then become a new area of liquidity. That's what we class as a weak swing high, because at the moment we are bullish on this 4 hour time frame. So a sweep of this low, you can see a continuation to run this high, okay, of liquidity. So that's how we look at liquidity. Now, if you want to learn more on the use of supply and demand, I do suggest checking out the Profit Per Trade workshop. It's going to go through exactly how you can apply and master supply and demand. Go and check it out. There's a link below in the description of this video, and there'll be one popping up right now. Understanding liquidity, you can apply it with the use of your entries. Now, there are ways we can look at using this on a lower time frame. If we see the sweep on a higher time frame, that all comes into understanding confirmation of those areas. And again, you can learn that inside the Profit Per Trade workshop. Now, once we can start applying where we can look for our entries, you know where your target's going to be. You can look for the swing points. That's all you have to do. If we was to drop down to a 15-minute time frame, let's look at a 15-minute from here. What do we see? Right, okay, so where did the market here pushed up? We broke this structure high, let's say. Then we've pulled back. We've created these areas here on the way up. We've dropped down, lower high, lower high. You see we continue to push higher, and then we've pushed through. The market creates a sweep here. Okay, we've pulled back to do what? Well, we create kind of a sweep here of the low of this previous candle. It's not an actual sweep, but it's a sweep of that candle. We've then pushed higher, okay, to push through this swing high, which we failed to do. We swept through it. That's indication of a reversal in the market. Remember, when we say a sweep, we're not going to close through. It's not a break of structure. It's a sweep. So then that is a sweep of liquidity for potential reversal. Where does that tell me the market was going to go from here? It was going to go for this level. That is the nearest area of liquidity it needs to run. Okay, all these lows made in between, they're nothing. Okay, forget about them. We're interested in the previous low needs to be swept. Okay, there may have been one just there as well. I'm not quite close enough to see. There may have been one just there as well. So it may want to run this low first. Okay, so after this sweep, we went down, we closed through that low. We had imbalance to go through as well, and then we run through this low. Now, after that low is taken, we then have a swing low here. At the same time, that was pushed through. Then you have a swing low here. We push through that low. And again, we have a swing low here. Now, after that low has been taken, we then have the next one is lower down here. So we have quite a bit of space for the market to run to. And we can also indicate as the market breaks structure, we pull back, we'd expect to run this low now, because that's our weak, okay, 15-minute weak low. But it's also where we can see potential stops and orders being placed. And it could even be targets as well, take profit levels. So just start to map out those charts. Forget everything else and just start using your levels. Read the markets, understand what is happening. A close through level is a break of structure. indication of a continuation. A closed through, okay, indication of a continuation. So if we was to close through this level now and we don't wick through and just a sweep, it's an indication of a continuation of the move. And that's all the trends are in the market. Okay, we're looking for liquidity to be run or liquidity to be swept. Liquidity in the market. How do you find it? How do you trade it? How do you use a line chart to find liquidity? So let's look at the different types of liquidity we're going to be looking at today and how you can use that with the line chart. There are two different types of liquidity we look for. We're looking for liquidity at swing highs, and we're going to look at what we call engineered liquidity. So let's have a look at what we'd be looking for. If we had a down move here in the market, okay, so this is our current move down. We then find the market makes a reversal and the market goes back up like this. This is a typical reversal area. Okay. When we see the market making this last push down to take out any liquidity down here and we're pushing up, okay, we can expect the market to want to run liquidity above these highs. These highs on these moves down will all have liquidity. Now I created this high, so it's equal high. That means when we see the market come up to this high and it fails to take that liquidity, it's pushing back inside here. Okay. And what we look at is our trading range. Okay. So our trading range would have been from, say, this high to this low. And we see the market going through that trading range. Now, as a way to understand whether a trading range is going to actually show you a reversal back down, okay, so with a trend or it's a full reversal. Now here we can understand that these swing highs are going to leave you that area of liquidity where price will want to run. Now when we have this pullback here, which I created this swing high to be an equal high, inside this area, you're going to find the market, okay, it's going to create those bullish swing moves like this. So what do you think this is going to create? When the market pulls back, on this swing pullback, it's running liquidity, okay, through these lows. Pull back, we run the liquidity again through this low, pull back, and finally we're going to run liquidity at this low here to then pull back. Now, very often you're going to find the market's going to want to break through this high to run this area of liquidity to engineer liquidity so we can then run back down once again to take this low before we see the true reversal back to the upside. So let me just zoom in on this area. So when we're looking at this swing pullback, remember we just went through, okay? We know that these highs, these lows, that's the perfect example, I know, but we can see that the market's running these lows all the way down, taking liquidity at these lows. We get to this final low here. So we run the liquidity within the trading range itself. At this point, this is our trading range. Now this is going with a breaker structure here to the upside, so it's going with a bullish trend. On the pullback, we're running through that liquidity. Finally, we run the low here, and you think the market's broken this high, and it's a reversal. So our internal structure has reversed. The market then pulls back after it's broken that structure once again to run this low, which is our engineered area of liquidity, to run higher, and then we pull back for the continuation. So I'm going to just do that sketch for you once more. So imagine this is our, okay, move down, pull back, move down, pull back on that trend. That's our internal swing down, okay? And eventually we see the breakout here to the upside. And at this point, you're looking for an area of demand to hold price to continue higher. Now that's what the normal area you'd be looking for. A buyout here, okay, to continue higher. Now, very normally, why we see this area, we see the break of this high. Now, very often it's going to be just more of a false break, okay, but still a valid breakthrough to bring in those buyers to think it's going to go higher. Now, what we're going to see very often here, let me just show you, is that very often when we have the market pushing up here, we're having this swing pullback to go higher with our swing structure. What we're actually seeing is that the market, and if I draw this in correctly for you, this is our, okay, move up, okay, and pull back, and then with continuation, leaving a new area of demand here, okay, for an entry. And what you're very often going to see is that the market is failing, okay, to go into this area of demand. We just sit above that demand zone and we break out. And what you need to say to yourself here, okay, you're pulling back into an area of demand to go with the trend, and we failed to get to that demand zone. Yes, we can see this show you a reversal on internal structure. So you've gone from a bullish swing structure to a bullish internal structure. That's how you'll read structure of the market, but there'll be another video going through structure in much more detail. But if you understand that this has failed to get to your demand zone, and we see this reversal, potentially what this is going to create is a sweep of the market, manipulation, false breakout, whatever you want to call it, okay, to bring in buyers back into this area of demand here. But what you're actually going to see in reality is that this move here will not happen and will go down into that demand zone, taking the low once again, where we have the liquidity sitting engineered by that false break to the upside. And then you're going to see the true move back up with that swing structure. So hopefully you are understanding how this works. So this will be your true move to the upside. You have that final push down and then a continuation up. So we just move that over. You'll see exactly what I mean. So if the move came down, takes this low, and then we push away. So this area of demand, you'll think, okay, didn't work. And it's just an early entry, but then you can see the market will pull back into a new area of demand created, which is a valid zone to buy from. And this is going to stop you taking trades too soon, getting losses you shouldn't be getting into. Let's go through this now on a line chart and see how this will look like on the line chart, how you can use this going forward. Now, there's also a way to look for liquidity at where we're going to find market close prices. So if we look at this area here, what we have is our simple line chart. And when we're looking for liquidity, we're looking for those areas where price will want to just wick through, okay, take that liquidity and run. Now, the liquidity we're looking at is we have an area here of liquidity where the market's going to go back, take those lows, equal lows here, runs them and continues higher. But the actual liquidity that you want to be trading, okay, let me see if we can find one, is right here. Okay, the current price, we have an area here of liquidity. We have price here. Let me just show you what happened. We have this continuation here to downside. So the market has been pushing down, okay, all the way down here. We've been pushing lower and then we pull back. The market pushes down. Internally, we break out here, one final push up, and then we continue to drop. That is taking liquidity, okay, within this trading range. So we have a swing high based on closed prices, this is, and a low. Within this move up, okay, we look for a liquidity move. So again, if we was to do this off this swing high and this swing low, there's no liquidity here. We create the liquidity here when we break through this low. This is what we class as that engineered area of liquidity, where the market's a false break to downside. We pull back for one final false break here to the upside. You can see how we come back into this area and then we continue the true move to downside. So let's look at now understanding this swing pullback. We're inside this trending range. Let's now go down to the 15-minute chart. Let's have a look at what happened here. And you'll start to really understand the markets. And I'm just going through a simple pair, the US dollar CAD, okay? And we can see the market does the pullback within this trading range. What do we have? We have not only that sweep, we also sweep this area here at the same time. So the market does what here? We come up, we pull back, okay? We do break the low here to downside, okay? Equal lows here. So what we create here, in fact, is the area of liquidity, mark that out for you. Area liquidity that want to be taken. There is the first push up. Okay, we pull down, remove this high. So we take out this high with this move up. We then break down once again and one final push up again to remove the first and the second area. And then we have the true breakdown to take out that low here of liquidity. Now, this is quite confusing if you're not really sure about understanding the way the markets move with liquidity, and using a line chart is going to make this much more simple. Let's go back to the 4 hour. Let me demonstrate this again. Okay, I haven't even looked at this chart, and this is what I'm now doing. I'm going through it for you. So we have again, okay, swing high. Let's in fact just use the dashed line. So we have this swing high to this swing low. Okay, that's now our trading range. Here, when price pulls back here, we go down to that 15-minute and we look for that liquidity. If we don't have any, okay, we don't in fact have any here. So what we need to do, go down to a 5-minute. Let's go back to that area. Let's zoom in. You'll find liquidity is on every single time frame. So here, we have this swing high. Let's mark it out. We create some equal highs here and here. The market doesn't actually break structures downside, but we do then sweep through here, and then we break down and we continue down. Now, when we come back up, again, the market is sweeping through this high here created. So we're going to see those sweeps when the market comes back up. But understanding that this was our trading range here to downside, we've pulled back above this. Now, instead of we seeing the engineered liquidity at the reversal, we're finding the liquidity on the way back up here using the line chart. You can see how simple this is. Now, look, if we go back to the 4 hour, let me in fact just wipe all this off. And I'll show you that this will work on a fractal nature, understanding timeframes. So let's look for a swing move here. So we've just broken out this swing high. Let's make a dashed line. So that means we have a trading range right now from this low to this high. We're now pulling back. We go to a 4 hour time frame to current price. When we're at current price, and they can't see those lines at the moment, they've to the weekly. So let's mark this off again. These are our trading range lines. We look for the market to pull back. Now at the moment, we haven't engineered any type of liquidity on a pullback, so we can look left here. We have a swing low here, but the market's now pushed through. Okay, potential sweep of this low. But if we look here, okay, we have these lows. One broke structure. You're looking for those areas where you see the continuation. So broke structure as a swing low. Here we broke structure. So that's a valid swing low. That's what you're looking for, that swing pullback. This isn't a swing pullback. This will be one candle. This is a swing pullback. So again, there's a low. Now this is a swing pullback. So I'd actually be looking at marking out this low. And you could also mark out this low. So if you're looking to the left, that's how you identify liquidity, sitting below these lows on these swing pullbacks. Now, when we're looking for liquidity out of here, what we'll be looking for is the market to engineer some. So we can see it's the last push down here. In fact, let me go closer into that move. Now, if we can break through this high here, then pull back, right? So we broke this high. Now it looks like we could potentially go higher. Very often you'll see a small pullback, then drop through to take that low, and then we see the rail move away. That's how they're engineering that liquidity when they pull back into that zone. And you're going to find this will be your sweep area, removing that area of liquidity, and we see the reversal pull back into your area of demand, and we continue higher. That's how we look at the use of liquidity. when we're using the combination of that line chart. Liquidity sweep strategy. That's what I'm going to bring to you today. Let's have a look at the chart. I've just opened up a USD daily time frame, but the strategy I want to share with you today is a very simple strategy you can start applying straight away after this video in your own trading. So we're looking for, we're going to use a combination of supply and demand with the use of liquidity and this one simple pattern. Now this is the sweep pattern. What we're going to be looking for is we'll look for a double high to be created and then a sweep of this high to run down. Okay, so all we're going to be looking for is a run of these highs. Now what we're looking for this to happen though is below or above an area of supply and demand. That's all we're looking for. So we're looking for an area here of supply to have this formation to be created right below the supply. What this is going to do is going to bring in those sellers here in the market early, push the market away. We're then going to find a manipulation phase, push the market back higher to sweep these highs, take the liquidity, and we're also going to have breakout traders with buy stop orders as well. We're even going to have traders that are going to be looking for this move here. Let me just show you to be broken, retested, a continuation. So we're going to have the breakout retest traders as well. But what you're going to be using the strategy with is you'll be expecting the liquidity to be run into the supply here. Okay, this area of supply for continuation down, okay, to run the next swing low. And we're going to apply it to this EURUSD chart. We'll go through this daily time frame quickly, and then perhaps we'll look at a lower time frame of the 4 hour. So let's look at anywhere on this chart. Let's just start around here. So again, the pattern we're looking for. The first thing we need to see is a bullish or bearish trend for this to work. Right now we can see the market has been in a bearish trend. We can mark this out as a break of structure. So we have a break of structure to the downside here, where we can see the run to the downside. That's going to leave us areas here of supply. Okay, so we have an area of supply created here. Let's mark it off, the last bullish candle. Let's get it right there. Now the market fails to break this swing low. We only sweep the low. So again, this is a manipulation phase. This is where breakout traders are going to be trapped in the market. Okay, the market has swept that low. A very good indication we're going to see a bullish move. We get that bullish move away, then we make a higher low, and we can make a higher high as we push into the area of supply. All great, okay? So it's created a small area here of liquidity in the market, okay, to be run through into the supply. But is it that pattern, the pattern we're looking for? Is it this double high pattern and then a push through, continue lower? Does it look like that? Not right now, it doesn't, no. So looking at this doesn't really meet that criteria. But what we do have is the market does eventually break this structure to the downside. We then do have these equal highs formed right here. And if we do come back in, we can identify that we have the equal highs being formed. Now we have a triple high here, in fact, and we break to the downside. So now when the market comes back, we'll be looking for this area here to be run. So we can mark this across. What is this? A previous tested area of supply. Now, if you haven't been through the supply and demand zone playlist within the channel yet, I do suggest watching that. There'll be a link above now for you to go through and watch that playlist. But what we need to understand now is we have our pattern. We broke structure. We do have an area of supply because we didn't break structure here for this supply to be formed. Once we've broken this area, now we have a true area of supply we can draw. So just remember this supply wouldn't have been drawn until we saw this break of structure. Now we can draw it. Now we understand that we have a previous tested zone. So we need to see the market run through this high. We also have this area of liquidity created as well as this liquidity at this single swing high. So understanding the engineered liquidity created here, when we fail to run back and sweep that area of liquidity, and this is created this high, it's even more liquidity being created for the market to run through. So right here in the market, we can see we run through, take that liquidity, and we run through this liquidity, which is the last final sweep, okay, which runs deeper into the supply. But there is that pattern we're looking for, okay? That was the pattern we were looking for that area. So after this, we're looking for a continuation of a breaker structure. That happens right there. So we look to the left. Now we can look for the next engineered area of liquidity. But for an area of supply, okay, we've got an area of supply created here. Prices hasn't really come back. We do have an area of supply on the break of the internal structure. And if you're not sure about the use of swing and internal structures, then what I suggest that you do is you actually go through the playlist in the channel, which goes through market structure. It will cover all of that. And again, I will leave a playlist link above now for you to go through and check that out. So when we look at, we just change this to a dashed line. This is my internal structure, okay? This is my swing structure. We've broken through here. And as we break through, we would have left an area here of supply. So the actual zone would have been right there. Off this indecision candle. Let me just mark it off the actual candle. That's my last buy to sell move. Now you can see at this point the market wicks back in and leaves this tested zone before we break out, just like we saw back here. Are you starting to see a pattern forming? But we're looking for this pattern, okay? But we do have a single test of the supply again. We've broken out. This creates this high. Okay, again, let's just go with the price. So we can see we have a push up, a drop, a push up. We don't quite create that equal high and we push down, but you're never going to find the markets always equal. And we follow structure here. Let me show you again. We have another push up, pull back, push up, pull back, and then we break through. What does that show us again? There is our engineered pattern of liquidity. There's our equal highs. This one didn't quite form as expected, but this pullback here has. And also on the way back, we can identify this area here of liquidity has been created where we're looking for price to run this daily week low. Okay, this is all understanding structures in the market with liquidity. So this is a full strategy you're applying. You need to understand supply and demand, market structure, then liquidity as well. But there is our pattern. That's the pattern we're using in this liquidity strategy, this sweep, okay, strategy. We sweep through this high, and there's our final sweep of the tested zone. There's your entry inside the area of supply. So look, if we was taking trades here, I would have took a trade off this level to be swept, stop the high, to take out this low, a 6-to-1 risk to reward. Taking this trade here again, entry off the sweep area, stop above the high, target would be the week low, just over 4-to-1. So you can see how you can easily use this strategy to help you to find those trades. Let's bring this across here. And again, after we break that structure, we pull back. Okay, we've created another break here. So we have a new area of supply. So you can see this is my last area. This would be my new area of supply. Now, on the way down, we don't create our pattern. Okay, so we don't have that pattern. All we have here is a swing low, swing high. And again, we can see that is swept through into the area of supply. And where do we run straight for? We run straight for this low. So we run for our week daily low. So this in itself, again, is another sweep, okay? But it's a single sweep. It's not a double test like we see over here, okay? It's just a single sweep. But they still work very well. But this strategy is to understand that equal high was created. Now, if we'd have created here, okay, after this breakout, we'd have created a pullback like this, and then we push through. That's what we're looking for that pattern. So again, we can continue to follow this market along. We have, after this breakout, a new area of supply that we can draw. Okay, we can draw this candle. So we have a new area of supply, which is created. And again, we create this pullback before we break structure. Okay, so this high. And this time, we do create some equal highs here created, push down. We sweep this low. Okay, we do have another low, but we push up, pull back, and then we push into the area of supply. So what do we have here? We have an area of liquidity created here of equal highs. So this is created, which we know the market's going to want to push through into the supply. We create this high, which is also swept. Now we just move this, you can see we just about nearly tested that supply. We create another equal high. This time it's not quite like this, close together, but it's still an equal high. So if I just remove this line now and show you on a bigger scale, we have this test, a pullback, this test, a pullback. We can push through the equal highs, okay, and then we run this low. This low here gets run. It's another breaker structure. So you start to see how you can use this strategy, understanding this pattern. Now this pattern here, we just grab this, take this over here. Okay, this pattern doesn't have to be this close together. Like I just went through, we could have this equal high. We could have a push down, a push back like this, and then we see that move. Okay, it doesn't have to be close together. It can be equal highs further apart, like we saw here. This area here, very close to equal highs. And again, we would use the same process. Above here, we look for an entry off the supply, stop with the high, targeting the low. So just over 2 to 1. Anything over 2 to 1 risk to reward is a good trade to take. That is how we simply use this sweep strategy, using this pattern format. Now, obviously, if we're looking for buys, we're looking for this. Double test the low, okay, a sweep through continuation. So we're sweeping that area of that double low, okay, sweeping the area of double high. I've shown you there looking at sales in the market. So let's have a look now at a 4-hour time frame. Let's just drop down to a 4-hour. And what we'll do, we'll go to current price for this, and just swing across. And let's see if we can use this on this last move up even. Let's have a look closely and see if it would have worked. So identifying a breaker structure, we broke here to the downside. Let's mark this out as structure break. We've then broken back to the upside, which leaves us a new area of demand. So that area of demand is going to be from this low. Okay, so we have an area of demand here. So we pull straight back into that demand. We do sweep a low of liquidity. To do this is here. So we have a sweep of that low of liquidity. It's not a break, so let's just change that to a 4-hour sweep. So you can see the market sweeps and then we push through. So is there that pattern we're looking for? What we're looking for now is this pattern here, aren't we? And then we're looking for the sweep to run up. This pattern is not created. It's just a single sweep in, and then we can see we continue to run through. Now that happens again. We can see another single sweep there in the market, okay, before the market pushes higher. So these single sweeps, you need to watch out for them as well. It is not the pattern we're going through today for a sweep, but that is a pattern will work. Now here I can identify to you another breaker structure right here in the market. But I can also identify this time we've created this last sell to buy move. So in reality, this is a full area of demand you could draw. But we could also just come down to this last bearish candle here before the breakout if you wish as well. And you could even look at using the wick of this candle because this is the last push up. Very often these wicks are where we're going to find those last orders left over for that area. Now, when we do break out this pattern we're looking at here, this sketch, okay, we can draw this. We can identify from this point we break out, we pull back, we run higher, but this time, okay, we create this triple effect and we drop in, we take out all that liquidity into this wick and we push out. Okay, it's not the easiest sometimes to see, but we can identify this triple area here created of liquidity in the market. And this wick is the obvious area to look for, area to trade from. You could just use this full zone here, this move up if you wish as well, an area of demand. If you're not sure about trading wicks, wicks do not always work in your favor. So you can see this is the last kind of down candle before the break up here. There is a small candle in there as well on that wick. But if you want to use this as the last down candle, this one would be the full move as well. Okay, from this swing low, we do create this higher low here, internal structure. Understanding the two different types of structures, obviously you need to go through and watch that playlist. This is that pattern once again with this type of pattern. This time we're looking at the buy, okay, running into the area of demand. Now I know this is perhaps for everybody to say, this is in hindsight, it's in front of you right now. Go away, back test this, okay, test it out for yourself. Take up this high, we're looking at nearly 3-to-1 risk to reward. Okay, everything you do, everything I share on this channel is for education to help you to become a better trader. But you do need to do the work yourself. You need to go away and you need to back test everything yourself. Okay, find out if it works for you. Some things may not work well for you and your type of trading, your mindset. It's all about understanding, reading those markets. We can see the continuation here of structure. This area of demand, this area of liquidity was created, and it's a good area to observe. Yes, we did break structure once more. You could look at this as a break of structure to the downside, but also you can see it as an area of liquidity where we can see this pattern has been created. Now you could either look at just the last two or the whole three areas creating that liquidity. It's engineered for a reason, to push the market deeper into this wick on this candle. So when we're looking for liquidity, the way I use liquidity in the markets is a few different ways. But one of the main ways we can look at liquidity is when we see the market creating these moves in a trending pattern, and then you see the market drop down and then continue up. You may be looking at this thinking, well, why did the market do this? We've been in a nice trending pattern and we broke to the downside. Now, many will be looking at this as a break of structure, perhaps, okay, and a continuation back to the downside. They'll be looking at a swing point here in the market with a trend line breakout, perhaps, looking for pullback, and then they'll be looking perhaps for the market to pull back here, back to this trend line, and a continuation back down. Now, if that's how you look at trading already, perhaps it may well be how you're looking at trading. I don't know. This, in fact, is how many traders will trade. But what I see here is an area of liquidity. This is a trading range to the upside. And once we see the market gets this swing low, there's an area of liquidity here. Why? If you're taking a trade, let's just go through something. Let's say we had a big area here of demand. And you saw an entry here on a lower time frame or even off this time frame, whichever it is, and you've taken a trade up and you're holding this trade. You took some profits of this previous high. You're holding this trade. Where have you placed your stop? Well, 99 out of 100 times, most traders are going to place their stops below that swing low when they've taken their entry. Some traders may well put their stop down here, understanding that this can be manipulated and taken. Why? Because this is an area of liquidity where we're going to see the markets push down to take this liquidity, basically taking those stops, and then we can see a reversal. Now that's done deliberately to fool the market, to push the market higher. Let's go through an actual example of this. Whoops, let's do that again. Let's go through an example on the chart where we can see this. There's a few times you're going to see this happen on a chart here. First, let's look at this area here on the chart. So we can see and identify the markets made this lower high. Okay, we broke this structure here, lower low, and we pulled back and we wicked through, okay, here, this high, continued down, made a higher low, and then we pushed up again, and then we wicked through this time instead of closing through and closing back through, and then we continued down. So there is your liquidity. Let me show you why. When we see the market come back up here, we're coming back into an area here of supply. It's, there's not a bad trade. Honestly, it's a good trade. But most people will be looking for the market to do what? To most probably take this low. That would be that target out of this area. Look what happened. We made this high and we pushed up, this higher low, should I say, and we pushed up to take this high. Look what happened down here. What do you see? Let's go closer in. What do we see here? We see the market from this low, pushing up, pulling back, okay, and then pushing back to the high. What happened here? Okay, so we had one. Okay, the market broke the trend line. Perhaps we're looking for a sell here now. And we went up and we took out this area. This is an area of liquidity. Anybody who's bought up here and perhaps hasn't even seen this area for a sell, they have basically now taken a trade, okay, left their stop below this low. What happened? We come back and they're stopped out. This gave the market fuel to push the market higher. Now, if you was looking for a sell here out of this area, let's say, let's remove this trend line. What else has happened? Well, the market, let's remove this again. We go through again. We can see the market pushes down, pulls back, push down, pulls back lower, and failed to continue down, and has come back, and then we dropped off. So what we can see and identify here is the market's making the lower highs. Potentially, you may have sold out of this area, targeting this low, failed to get there. Stops were taken here. The market's pushed back up, took these highs. Stops were taken here with people who put their stop above this high or even above this high, and they've sold down here. So this has all been a liquidity area in the market. This area here, all liquidity, been taken, pushed the market down. Now, you're probably thinking, is there a way to capture this trade? Yes, there is. There's a great way to capture these types of trades. Now, in fact, I call this a banker's pattern here. And we can see the market drops to the downside. We continue down here, and we can see the same thing happens again. So what does the market do? We push down here, okay? Pull back, continue lower. We then pull back here, fail to go lower, and we continue back up. And then we've dropped back off. So let's look at this again. What's happened? Well, the market is basically swept through this high. What is above this high? What has everybody just done at this high? Well, we have, grab this, an area here probably of potential supply on a drop-based drop area. Markets pulled back, took out this high here, and then we continue down. So even here, okay, area of liquidity. People sold down here, and the market's gone back deeper into this area of supply. Deeper, took out these highs and liquidity. There was stops, pushed the market lower. So there was the area. Then we've pulled all the way back up here again into this larger area of supply. And if we take it from here even, and we've bounced out of the supply, continue down. But again, we had to take this liquidity above this high because it's where the stops sit. And then we continue lower. You can see how the liquidity will come at these areas. Now, when you are actually using the combination of liquidity with like supply and demand, you're going to have that edge in the market. Now, supply and demand is the way I trade, and I use with supply and demand imbalances with liquidity. That is how I trade. I'm not sure how you trade. Perhaps leave a comment and let me know below this video how you actually trade, what you use, and the results you're getting. So if we continue down here, we can see many times we're going to see these areas being taken here even. Okay, we have here an area of imbalance. The market pushes through this area, this high, takes any stops anyone perhaps was sold here on a smaller time frame. Personally, I would have been selling there, but we break out. Okay, we continue down. And again, we can see this all over the chart. Stops above here, push the market, come back, take them, push the market back down again. And even right now, we do have this push through this high. Yes, there is stops here again, and we could see another push back down. But we are also within a larger range, okay, from this move to the downside. So we may want to see the market push up higher And then we have a different type of liquidity. And we have this area of liquidity. What I see here is some equal highs left over with an area of imbalance above. Now that's something completely different, but this area of imbalance here will need to be filled at some point. And we can see these areas of liquidity left below these zones of imbalances and this area of supply, okay, where we can see them be taken. So we have liquidity above these highs, and we have some equal highs, which creates liquidity when we have like an area of imbalance or supply above, and the opposite when we're looking at demand. So at the moment, if we're looking at this, let's say the market falls back down, we're still looking for buying. Where would we be looking for that liquidity? This low. We'd be looking for the market to potentially perhaps want to come down, take this low, then push back up to take this area of liquidity. That's how you look for these trades. Let's look at this push down here. What did the market do? Okay, we had this swing high where people would have sold. We pushed through that high. Now this is when news is coming out, and many people just looking at price, not understanding why. This is a high of liquidity. The market's pushed up, but before that, before it could push up, see this low here? See that one little low into this area of imbalance? Had to push through that low where we had buyers. Took out the stops, boom, pushed the market up. That's all the market does. They take liquidity on all sides. This low here in the market, left over, higher low, that's an area of liquidity. At some point, that will want to be taken. Now, let me just show you again here. Do you see a pattern? Let me show you again. Some little equal lows. Do you see a pattern? Let me show you one more time. You see those higher lows on the pullback. There's a pullback, pullback, pullback. That's a pullback. Even this bit is. So where's price going to go? That takes out the area of liquidity. Nice drop down. Area of liquidity. Nice drop down. Area of liquidity. Nice drop down. Area of liquidity. So what we're looking for a powerful drop down again. The continuation to take out the area of liquidity. So there you've seen a few different ways now I look at liquidity. We look at the swing highs to be taken as liquidity. We're looking at these areas where we have equal lows. They're not equal in when I say like equal exactly the same price. No, they don't have to be. Okay. They are areas of liquidity left over the lows where the market's taken it. We can look back and you'll see this over and over. Look here, they are equal lows this time. Just here in the market. Area of liquidity. Market takes it out. Again here. This is the pattern I'm trying to show you. Liquidity. Market takes it out. So you've seen those two areas now, how I look at liquidity. And that's the way I would look and use liquidity to help with your trading, only to combine it with supply and demand. Okay. That's how I trade, and that's how you combine it with supply and demand and everything else. Once you understand what liquidity is, where it sits, it's going to help you when you're taking trades. If you're selling up here, you know you're going to take out this liquidity. That's your target. Even if you sold on this candlestick, that's my target. That's how I'm using it. Now, let's say you took a buy here. Where would you be targeting? Well, you can be targeting the high because that's the high of liquidity. That's where you expect the market to want to go. And if you were selling here, let's say, where would you sell? Well, you'd either be selling at this low I've just marked or this low, because they're areas where liquidity would sit. In fact, not liquidity. Let's have a sweep. It's not really a sweep push through. That would have been an area of liquidity. This is an area of liquidity. This is a main area. So yeah, you may well have thought we could have sold here to this low. But at that point, this was news, not a point where I would be trading. And in fact, you can see the reversal. So you may have been stuck in here, but even if I'd have sold here, I would have got out here because that's my first area of liquidity in the market, this swing low. not this one. So if I'm selling here, that is my target because there's nothing there to stop me. Okay, if I'm selling, well, on this move, if you found a move up here to sell, there's my first area of liquidity. These equal lows. This is the swing low, okay, of liquidity. So I hope this has helped you to understand the way I look at liquidity in the markets, and perhaps you may be able to use that in your own trading. And if you want to check out that profit trade workshop, there will be a link popping up at the end of this video.